हेलो एवरीवन, गुड मॉर्निंग टू ऑल ऑफ यू। वेलकम वंस अगेन टू दिस लाइव कमोडिटी एनालिसिस। स्टार्ट करते हैं आज का इस सेशन। फिलहाल देखोगे मार्केट को। क्रूड ऑयल हल्का सा गैप डाउन ओपन हुआ है एंड नेचुरल गैस फ्लैट ओपनिंग है करंटली। कल यूएस और ईरान की जो बातचीत है दैट इज़ कुछ खास हुआ नहीं वहाँ से। नो कंक्लूजन ऑन दैट। सो उसका एक इम्पैक्ट कह सकते हो थोड़ा सा नेगेटिव रहा। कल बाइंग अच्छी आई थी, ऊपर रेजिस्टेंस था थोड़ा बहुत, वहाँ से सेलिंग भी देखने के लिए वापस मिली है। लेट्स सी क्या होता है फिर से। आज लास्ट ट्रेडिंग सेशन है तो देखेंगे, क्योंकि अगर आज कुछ खास इम्पैक्ट नहीं होता है तो फिर पॉसिबिलिटी है वीकेंड पे कुछ बड़ा यूएस करने की कोशिश जरूर करेगा। कल अफगानिस्तान ने पाकिस्तान पे अटैक किया था, पाकिस्तान ने फिर रिटेलिएशन किया है अफगानिस्तान पे अटैक करके। तो दोनों के बीच एक कह सकते हो सुडो वॉर चल रही है फिलहाल के लिए। लेट्स सी इसका कुछ इम्पैक्ट पड़ता है या नहीं पड़ता है। एंड 1:30 इंडियन टाइम के अकॉर्डिंग लंदन सेशन ओपन होगा, शाम को 6:30 न्यूयॉर्क सेशन ओपन होगा, और आज ही शाम को 7 बजे यूएस का कोर पीपीआई का डेटा है, इम्पैक्ट करेगा गोल्ड और सिल्वर के प्राइस को, और फिर 8 बजे यूएस मार्केट की ओपनिंग रहेगी। ठीक है, तो लेट्स सी फ्रेश कुछ और ट्रेड बनता है यहाँ पर। इंडियन मार्केट भी देखोगे तो गैप डाउन ओपन हुआ है। कल गिफ्ट निफ्टी थोड़ा सा इंडियन मार्केट की क्लोजिंग के बाद डाउन चला गया था। बैंक निफ्टी भी गैप डाउन ही ओपन है। एंड फर्स्ट कैंडल 15 मिनट ओपन इक्वल टू हाई इन बोथ निफ्टी एंड बैंक निफ्टी। ठीक है, लगभग 100 पॉइंट चला गया डाउन। निफ्टी 50 लेट्स सी क्या कंटिन्यू सेल ऑफ करता है। कल यूएस मार्केट में तो अच्छी खासी सेलिंग आ गई थी। इफ लुक एट द यूएस मार्केट, कल काफ़ी अच्छा गिरा था, नेस्डैक रिकवर किया था थोड़ा बहुत, कुछ खास नहीं। सेल ऑफ अच्छा था हायर लेवल से मार्केट ओपन होते ही। बैंक निफ्टी 250 पॉइंट डाउन। मंथली टाइम फ्रेम की कैंडल तो ऑलमोस्ट बहुत अच्छा पॉजिटिव ही क्लोज हो रही है ओवरऑल। वीकली टाइम फ्रेम की कैंडल भी लगभग एक न्यूट्रल कैंडल ही बनेगी शायद, लग रहा है। डेली कैंडल थोड़ा सा देखना पड़ेगा क्लोज कैसी होती है, बिकॉज ओपन इक्वल टू हाई है आज। बाकी बैंक निफ्टी देखो, जब तक 61,000 के अब नीचे सस्टेन नहीं करता डेली टाइम फ्रेम पे, तब तक कोई बहुत ज़्यादा बेरिश तो नहीं होने वाला ये। सिक्सटी वन थाउजेंड के नीचे कहीं डेली टाइम फ्रेम की कैंडल क्लोजिंग बेसिस पे जाती है तब एक पॉसिबिलिटी बन सकती है मार्केट के लिए। 57,000 के नीचे जाता है तब कहीं 59,200 की ओर जाएगा। देखते हैं कुछ पॉसिबिलिटी बनती है तो बैंक निफ्टी थोड़ा रिट्रेस जरूर कर रहा है लोअर एंड से, बट स्टिल ऊपर ओपन इक्वल टू हाई जिस तरह से कैंडल बनी है, नॉट गुड। नेचुरल गैस भी देखोगे फ्लैट ही ओपन है, कल मोमेंटम आया जरूर था नीचे बॉटम से, उसके बाद कुछ खास किया नहीं। इन्वेंट्री भी पॉजिटिव थी, मार्केट मोमेंटम किया जरूर, देन साइडवेज। अभी कुछ खास मोमेंटम हो नहीं रहा है, थोड़ा वेट करते हैं क्रूड ऑयल नेचुरल गैस में। नेचुरल गैस देखना पड़ेगा रिबाउंड करता है या नहीं करता है।
Talks about every time he talks about AI. He sees its power and its potential. And every time he talks about it, you can hear his optimism about all the things that it's going to bring. And he's very clear-eyed that that doesn't come for free and that managing its risks has to go hand in hand with it. President Biden frequently talks about the fact that we're at a pivotal moment in history in which the choices that we make in the next few years are going to shape many, many decades ahead. AI for him is very much part of this moment. And that's why you've seen this administration move out so actively with urgency, starting by listening to all kinds of communities. We talked about the work that we've done with industry, but also we've had very active engagement with civil society.
Dr. Prabhakar, thank you so much for joining us.
It was a pleasure. Thanks for having me.
Anima and Kumar, thank you so much for joining us. So you're a professor at Caltech and you're senior director of AI research at NVIDIA.
Which actually makes you the perfect person to answer a question that we've had, which is really broadly, how is AI changing, or has it been changing the scientific process over the last couple of years? Let's begin with that.
Yeah, this is such an exciting time. Thank you for having me on this show. And, the world has seen ChatGPT and the power of AI when it comes to language models. But to me, that's just the beginning, because beyond language, we can think of all kinds of scientific processes. And by understanding that through AI, we can do everything better, faster, cheaper, more accurate, and really be able to come up with new inventions and discoveries.
Let's dig into that. What does an AI-enabled lab look like?
Yeah, to me, like AI will completely transform the scientific workflow the way we know it. Ever since the 17th century or even earlier, the way we came up with new inventions or discoveries was somebody has some intuitions, right? They went to the lab, they tinkered, they're like, oh no, this doesn't work. And okay, this works, let's move ahead.
Trial and error.
Right? Exactly. And now think about AI being able to do that in the virtual domain, like being able to accurately simulate many of the processes or learn from data, right? The observations directly. And with that, be able to come up with better design, better discoveries than what would have taken really long in the real world.
What's changing the most right now? When you look at the landscape, is there any particular field that you see evolving much more quickly than any other field?
I mean, one thing that we're working on heavily is the Earth-2 project at NVIDIA, where our goal is to build very accurate digital twins of this planet. Be able to predict not only short-term weather, but also long-term climate change eventually.
The digital twin of the Earth, what is being twinned?
Yeah, all the processes on this planet. Think of like the atmospheric processes of convection currents, storms, right? Even really like fine scale features of cloud turbulence, what's responsible for hurricanes, for instance, how would this hurricane paths change, and can we come up with the right risk assessment? Because these are chaotic systems. These hurricanes can go in so many different ways. Can we really hone in on what is the risk to different human populations based on what we see today? So these cheaper and faster weather forecasts with AI will also enable us to create better probabilistic assessment of extreme weather events.
Let's talk about some of the other fields that AI is making transformations in the scientific process. For example, genomics or even drug discovery. What's going on there?
Oh, it's such an exciting time there because, the same kind of generative AI that we see for language, you can replace the letters of the English alphabet instead with nucleotides. ATGC, if you recall, what makes up our DNA, right? And with that letters, you can now ask the language of the genome and have a model learn that.
So if there are tasks that artificial intelligence can make more efficient or even replace humans in a lab, what's kind of the vibe in the scientific community? Is there as much fear as there is in other industries that AI could take their jobs?
I mean, I don't think it'll happen anytime soon, and maybe never, because humans are such creative beings, right? We're always thinking of the, next unknown question, right? There's so many deep mysteries of the universe. There's so much we still need to understand. And AI is a tool. This will enable lab scientists to rule out a lot in simulation before they can go and do their experiments. So they only need to do a few. But then I feel like there'll be always things that'll be still unknown and to be conquered.
There's a lot of, I don't want to use an unpleasant word, but there are a lot of people who don't believe in things like climate change. And there are a lot of skeptics who believe that science is out to get them, or that, we're all just sitting here lying. Is there work being done that you think could actually win over some of these skeptics? Is there a way to demonstrably show them?
Yeah, I do think all the work we're doing will help towards this because, this is not some model that's in some supercomputing facility, right? Not available to the public. I mean, you can download this and go try some of this yourself. Just like a video game, you can play the game of climate change one day, right?
Quantum physics.
So everything becomes accessible. At least my hope is, chunk of the community that is curious will have resources online that is much more open, so they feel like they can participate in that.
If you think about the scientific journey that humanity's been on over the last 300 years, it's been quite good. Just take us 10 years from now. Like, how different will things be?
I think the whole process of scientific research and development will be accelerated many, many times, right? Even orders of magnitude in some areas. And that'll just mean that we can quickly rule out things that don't work and hone in on things that work. Certainly, drugs designed by AI, they're already coming into trials, and that'll just increase fully. Personalized medicine for cancer and all of these, where we really haven't been able to understand, right, for various different targets, how to quickly design drugs. This can make it much faster and also cheaper, because right now so many of these treatments are too expensive to be done at scale. So it'll make this democratized and cheaper. And yeah, I think this will hit every area. I don't think any area is immune to this.
I think it will be interesting, won't it? 10 years' time, if it takes the average drug 10 years to come to market, and if AI systems right now are coming up with some of the potential candidates for a future successful drug, then in 10 years' time, are we going to see a waterfall of new drugs?
I mean, it may not be a huge number, right? Because you can't test all of them. It'll be more targeted. It will be personalized. It will
It
be
will
something
actually work.
exactly effective.
Thanks so much for joining us.
Thank you. It's
Thank you
been
both. Yeah.
fascinating. Thank you for taking the time.
Is bank nifty continuously falling? Morning first candle open equal to high, again open equal to high with gap down. कोई न्यूज़ तो नहीं आ गई है, पता नहीं, कंटिन्यूसली गिर रहा है काफ़ी ज़्यादा, 500 पॉइंट गिर गया ऑलमोस्ट बैंक निफ्टी फ्यूचर। निफ्टी इतना नहीं गिर रहा है, बैंक निफ्टी कुछ ज़्यादा ही गिर गया। कुछ ज़्यादा प्रॉफिट बुकिंग नहीं आ गई इसमें। देखें जरा क्या कर रहे हैं हैवी वेट्स। एसबीआई, हाँ इतना नहीं गिरा एसबीआई, फिर भी एसबीआई इज नॉट फॉलिंग दैट मच। कौन गिर रहा है? एचडीएफसी बैंक, एचडीएफसी बैंक भी नहीं गिर रहा। आईसीआईसीआई बैंक, हैवी वेट तो गिर नहीं रहे, मार्केट को कौन गिरा रहा है? आईसीआईसीआई बैंक इज नॉट फॉलिंग, आईसीआईसीआई बैंक जस्ट इनसाइडर कैंडल पे अटका हुआ है। एसबीआई अटका हुआ है, एचडीएफसी अटका हुआ है। कोटक तो नहीं गिर रहा फिर? हाँ कोटक, कोटक गिर रहा है, कोटक थोड़ा बहुत गिर रहा है। ठीक है, बैंक निफ्टी ज़्यादा ही गिर गया है, 500 पॉइंट डाउन है बैंक निफ्टी फ्यूचर, 511 पॉइंट डाउन, ये तो रुक ही नहीं रहा। डोंट नो व्हाट हैपन टू बैंक निफ्टी। यस कोटक गिरा रहा है, लग रहा है मुझे कोटक में क्या न्यूज़ आ गई पता नहीं। मॉर्निंग पे पहली कैंडल ऐसी गैप डाउन ओपन हुई थी, उसके बाद कंटिन्यूसली फॉल कर रहा था, लास्ट कैंडल भी ओपन इक्वल टू हाई, अदरवाइज ऑल अदर मेजर इंडाइसेस आर नॉट फॉलिंग फॉर बैंक निफ्टी। कोटक थोड़ा बहुत फॉल किया है, एसबीआई इज नॉट फॉलिंग दैट मच, थोड़ा बहुत फॉल किया बट इतना नहीं, ऑलरेडी ऑल टाइम हाई के आसपास चल रहा था, वहाँ से थोड़ी बहुत प्रॉफिट बुकिंग कह सकते हैं, बट इतना भी फॉल नहीं किया। एच डी एफ सी आई सी आई सी इज नॉर्मल। आई सी आई सी नॉर्मली है, एच डी एफ सी क्या, एच डी एफ सी होल्ड है, आई सी आई सी बैंक होल्ड है, स्टेट बैंक थोड़ा बहुत फॉल किया, कोटक थोड़ा बहुत ज़्यादा फॉल किया है। एक्सेस ऑफ बैंक ऑफ बड़ौदा को भी देख लोगे अगर आप। एक्सिस बैंक, या एक्सिस बैंक अगेन गैप डाउन ओपन, ओपन इक्वल टू हाई विद गैप डाउन ओपन, एक्सिस बैंक। हैवी वेट तो नहीं गिर रहे इतने, बट आई थिंक थोड़ा बहुत प्रेशर कोटक से है। लेट्स से रिकवर करते नहीं करते हैं, क्योंकि अब अगर गिर गया आईसीआईसी और एचडीएफसी तो ये बैंक निफ्टी मुझे लग रहा है 1000 पॉइंट भी गिर सकता है। ज़्यादा फॉल हो गया गलती से लग रहा है। निफ्टी इज नॉट फॉलिंग दैट मच, बैंक निफ्टी इज टू मच फॉल। लग रहा है कुछ न्यूज आई थी डेफिनेटली। लास्ट कैंडल ओपन इक्वल टू हाई विथ कैप डाउन ओपनिंग। वैसे तो ऑल टाइम हाई रेजिस्टेंस है जरूर, 61,300 से 61,500 के बीच में। क्रिटिकल लेवल पर है बैंक निफ्टी, बहुत ही क्रिटिकल लेवल पे। बैंक निफ्टी फ्यूचर अगर 61,000 के नीचे अगर क्लोजिंग देता है ना 15 मिनट की एक कैंडल, ये थोड़ा ज़्यादा गिरना चाहिए लॉजिकली। 61,000 इज अ क्रिटिकल पॉइंट। 61,000 के नीचे अगर 15 मिनट की कैंडल फ्यूचर में क्लोज होती है तो आई एम एक्सपेक्टिंग मोर सेल ऑफ फ्रॉम दिस लेवल। मैंने ट्राई तो किया नीचे क्लोजिंग देने का, दे नहीं पाई है। देखते हैं 61,000 के नीचे मुझे लग रहा है क्लोजिंग आती है विदाउट प्राइस गोइंग अप 61,160 के ऊपर। 61,160 के ऊपर क्लोजिंग होने से पहले अगर 61,000 के नीचे 15 मिनट की कैंडल क्लोजिंग देती है तो इट विल फॉल। मुझे लग रहा है 60,500 तक भी जा सकता है प्राइस इस केस में। लास्ट कैंडल ने कोशिश करी, क्लोजिंग नहीं आई है। ये कैंडल भी थोड़ा रिवर्सल दे रही है, बट वेरी क्रिटिकल पॉइंट अगर फॉल किया। 15 मिनट बैंक निफ्टी फ्यूचर नीचे 15 मिनट में सपोर्ट ही सो नहीं कर रहा है बैंक निफ्टी, बड़ा अजीब सा लेवल है ये। थाउजेंड के नीचे ब्रेक करता है अगर 15 मिनट में, तो एक्सपेक्टेड है 60,000, 600, 700 इस रेंज में पहुंच जाएगा बैंक निफ्टी फ्यूचर, वेरी हाई प्रोबेबिलिटी। अगेन ओपन इक्वल टू हाई, बैंक निफ्टी अगेन ओपन इक्वल टू हाई। पॉसिबिलिटी है, लग रहा है 61 60,600 700 की ओर जाने की कोशिश फिर से कर सकता है प्राइस। वापस बाकी अगर ये 61,400 टू 500 तक आता है तो वापस सेलिंग का प्लान भी है। कल मार्केट ऑयल भी देखोगे फर्स्ट 15 मिनट की कैंडल के अंदर ही ट्रेड कर रहा है, अभी भी कोई मोमेंटम नहीं है। मुझे लगता है अगर देखो मार्केट को बुलिश होना है तो ये जो आज का हाई है इसको टेकन आउट करके मार्केट को निकलना चाहिए 6033 के ऊपर, तब एक पॉसिबिलिटी बन सकती है वापस बुलिश होने की, नहीं तो फिर से रेंज बाउंड होके बैठ जाएगा क्रूड ऑयल लोअर एंड पे। पहले अपर एंड पे साइडवेज था, अब लोअर एंड पे साइडवेज हो जाएगा। देखो क्रूड ऑयल वापस 5897 के नीचे कहीं ट्रेड करना शुरू कर देता है, ये ब्लू कलर की जो लाइन ड्रॉ करी है, तो फिर थोड़ी प्रॉब्लम हो जाएगी ट्रेडर्स के लिए। बाकी वापस प्राइस हो सकता है फिर बेरिस हो जाए उस केस में। सो प्राइस शुड होल्ड अबव 5900 लेवल, इसके नीचे ट्रेड नहीं करना चाहिए इंट्राडे में।
The problem we've got as an industry is when the government's overtax, and let's say they tax at 30 or 40% of net gaming revenue, what happens is it starts making
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Deal or no deal? U.S. and Iranian officials agreed to reconvene nuclear talks as soon as next week after the latest round of discussions in Geneva, and with Iran striking an optimistic tone. Despite a weak start to Friday, Asian equities are on track for their best February ever, powered by the AI infrastructure boom. Gold is closing out its longest run of monthly gains since 1973. And the bidding war has ended. Netflix bows out of the battle for Warner Brothers, leaving Paramount's $111 billion offer as the winner. Well, it's just gone 9:30 a.m. across the Emirates. I'm Jumana Versace in Dubai, getting you up to speed on these markets. Final trading day of the week and also the month. The S&P sliding a little bit this morning, down 0.2%. But we did see was losses across the board for Wall Street indices. Yesterday, the S&P closing down 0.5% weaker. 7 out of 11 sectors lower, led by tech and communications. Obviously, the Nasdaq also leading the declines there too, down 1.2%. So this despite the fact that Nvidia actually did post pretty solid results, but not enough to erase some of those concerns in the markets. But once again, we're getting a very positive handover from Asia in what has been an absolute stellar month for these Asian indices, up 0.5% this morning as well. And then take a look at 10-year yields. We've broken through 4% to the downside. I was speaking about it earlier on with a guest. Nobody really saw this one coming. And most people that I've spoken to this year have those steepener positions on in the U.S. What has happened is the curve has started to flatten, and actually 10-year keeps marching lower. We are now down below 4%, perhaps acting like a traditional safe haven in times of extreme geopolitical uncertainty. And then Brent, speaking of geopolitical uncertainty, 0.3% higher, $71 is where we're at. Let's flip the board, because I thought this insight into hedging activity is quite interesting. And we've spoken a lot about the fact that spot oil prices are being held up by concerns about what may happen around Iran oil production, Strait of Hormuz, and so forth. But if you look at actually how traders have been looking to hedge, mostly they've been buying 1-month options. So looking for protection on the upside over a short-term horizon, those 1 month volatility, the 1 month vol is spiking versus other time horizons. It tells you that investors think if something does happen, it will likely happen in the next few weeks as opposed to over 3 months or 6 months. So something to bear in mind as well. Okay, let's also check in on how markets in Asia are faring. Min, we've been talking a lot this week as well about the USD and the very strength of some of these FX currencies in Asia. What is the mood today?
Yeah, pretty mixed right now, but we did get a headline out of the PBOC today saying it is cutting the cost of shorting the yuan, and clearly it's intended at slowing the rise of the yuan. We can see that the yuan is now a touch weaker against the USD, snapping that rising streak over the past month or so. So that's one to watch, but the yen is going the opposite direction here after we got those Tokyo CPI numbers. CPI excluding food cooled less than expected, coming in at 1.8%, but still, for the first time, has fallen below the BOJ target of 2% since 2024. So that certainly is going to complicate matters a little bit for BOJ's, the Governor Ueda's plan, right, to justify a potential rate hike going forward. He did reiterate the rate hike path in a newspaper in Japan, but perhaps that cooling less than expected of the CPI also adding a bit of appetite to buy the yen. Korean won pretty flat at the moment, but yes, the US dollar has been on a downtrend so far. You flip the board, what else we are watching here is the China markets year to date, because remember we are heading towards the NPC, the so-called 2 sessions or the National Parliamentary Session next week. So just a recap of how we have been doing. You take a look at Hang Seng Tech, the blue line over here. We are, it's sinking further into bear market, down by about 23% since the October peak. We have been seeing this rotation away from the big tech names into some of the AI startups that have been doing really well. The CSI 300 has been pretty flat so far, so we'll be watching for any policy signals next week that could maybe jolt the markets.
Yeah, it's going to be a big one for China policy next week. I'm Min Lo in Hong Kong. Thank you. Well, Saudi Arabia has been laying the groundwork for more consequential reforms. That includes just recently opening up its $2.5 trillion stock market to all foreign investors. My next guest thinks it is time to adopt a more positive outlook on Saudi equities. That is, after 2 decades of caution. Joining me now is Tariq Fadlallah, Middle East CEO at Nomura Asset Management. So you've penned a report called Brighter Horizons, which obviously here on Horizons we endorse. We like the name Horizons. But so many nuggets in there. You do a deep dive on the Saudi index, on Tadawul. And one thing that really stood out to me is that Tadawul reached an all-time peak all the way back in 2006. It was 20,600 thereabouts. We're now trading at just under 11,000. So it's essentially been 2 decades of this secular bear market in Saudi. Now, before we look ahead, why has this been the case?
Well, I think if you look back at 2005, 2006, the market then was a very small number of stocks. Actually, it was 77, 78 companies that were listed. And those reflected a 20th century economy. And what has happened over the last 20 years is that the market has gotten deeper. And the market now reflects more the 21st century in the vision economy. So back then, we had a lot of speculation around very, very few companies that were protected monopolies, essentially, and that were being heavily subsidized by the government. The economic model of Saudi Arabia in 2005, 2006 was about redistributing wealth through the stock market. And that, of course, was something that couldn't continue.
Yeah, and people always say the economy is in the stock market, and I think it's also important to flag here that over that same time frame, Saudi Arabian economy, the GDP has done extremely well, but that didn't necessarily translate to the Tadawul. Do you see that now happening in the future? Are the two going to start converging?
Exactly, yeah. So I think this 20-year period, if you like, has been a gestation period for the stock market, and it's now starting to reflect the economy much more closely. And if the assumption is that the economy going forward grows as it has over the last 20 years, then the stock market is likely to do very well.
Yeah, when people think of the Tadawul index, I think the outsider view, for those who don't know the nuts and bolts as well as everyone else, is a proxy for oil, right? Or that Aramco is the lion's share of the index.
Yes.
But again, there's been evolution on that front too.
Correct. I mean, first of all, let's be clear. Oil is very important for the Saudi Arabian economy.
Yeah.
So essentially, most things start off from the oil sector. But the stock market itself and the TASI as an index has evolved dramatically over the last 20 years. And as you say, if you look at the makeup and the weightings in the index, we now have 266 companies, I believe, compared to 77, 78 companies 20 years ago.
Yeah, and what about the latest reform measures that have been introduced by the Saudi government? To what end is that going to help, again, support future performance and liquidity?
Well, the reform program has been ongoing, as you know, for 8 or 9 years now, properly. I mean, we've been reforming for many years, but really Vision 2030 was the catalyst for accelerated reforms. And month by month, year by year, the weight of reforms is increasing, and the effect, the positive effect on the stock market is increasing. And so at some point, you get a tipping point where the market starts to react very positively.
Does it matter having more international players in this market, though?
No, absolutely it does. So I think what's happened in the last 5 or 6 years in particular is you've seen the development of the financial ecosystem, if you like, in Saudi Arabia. You've gone from a pro-cyclical, government-dominated, bank-dominated, retail-dominated market to one where you've got private equity, private debt, foreign investors, and they come with different motivations and different modus operandi. So essentially, they're sometimes buying when others are selling, and that makes for more liquidity and more stability in the long term.
Yeah, and would you say that perhaps there's more of a long-term investment view as opposed to short-term speculative trading around, say, IPOs that come to market?
No, absolutely. So the IPO is slightly different because there's still a reasonable amount of speculation around IPOs.
Yeah.
But generally speaking, the institutional funds, the foreign investors, tend to have a longer time horizon than the individual retail investors.
Yeah. What about Saudi Arabia's drive to attract FDI? Where does that sit in to your, less cautious outlook over the next decade? Because we know that there's been a big focus there, and looking back at the last few years, they perhaps haven't really achieved the huge ambitions that they want to. Or it's still, looking ahead, they've still got very big ambitions for FDI that have yet to be achieved.
Correct. So this is one of the issues that I raised in my report, is that there are obviously things that can be done better. There's been a change in leadership at the Ministry of Investments recently, and I think one of the reasons for that is perhaps to take a different approach to FDI. But FDI targets of over $100 billion by 2030. That's very aggressive, very ambitious, but clearly they want to try and get as close as possible.
Yeah, to be clear, I think the numbers today are around 30 billion.
Correct.
So it's a tripling versus where we are today.
Correct.
Okay, let's put it all together then. Since you are turning more positive or more constructive on the outlook, where do you think that Tadawul can get and can get to, and over what time frame?
So our base case scenario is that the Tadawul will essentially double over the next 10 years.
Okay.
And so with dividend, that's around 10% annualized return.
Okay. Tarek, thank you so much. Really good to have you on, and great reports. Brighter Horizons, it's called. Tarek Fadlallah, Middle East CEO at Nomura Asset Management. Now for a look at some of the other stories we're following. Asian liquefied petroleum gas prices surged to the highest in almost a year following an outage in an export terminal in Saudi Arabia. Swaps for LPG spiked to more than $600 a ton, according to data from Ginga Petroleum. Prices were responding to news that a support structure had collapsed at the Jaima facility. Bloomberg has learned Abu Dhabi has raised $3 billion from a sale of dollar bonds in its first debt offering of the year. The oil-rich Emirates issued 5-year and 10-year notes. Abu Dhabi joins a slew of Gulf issuers who have already tapped debt markets this year to take advantage of favorable rate conditions and strong demand. Canada's Fairfax Financial Holdings has emerged as the frontrunner to buy a majority stake in India's IDBI Bank in what could be the biggest foreign investment in India's financial sector. Sources say Fairfax is in advanced talks with the government and is considered ahead of rival bidders. The Indian government controls a 61% stake in the private lender, worth about $8 billion at current market price. And coming up, Dubai Aerospace Enterprise strikes a $7 billion deal to expand its aircraft leasing business. We'll speak with DAE's CEO, Firoz Tarapour. Next, this is Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Haslinda Amin in Davos, Switzerland, and this is Bloomberg.
Dubai Aerospace Enterprise is buying Macquarie Air Finance for an enterprise value of about $7 billion. The purchase will double DAE's fleet to more than 1,000 units, and the company plans to finance the cash transaction with a combination of debt and equity. Joining me now is Firoz Tarapour, the CEO of Dubai Aerospace Enterprise. So another big deal on your part. Talk to me about the acquisition. How does it fit into the overall portfolio?
So this is a good one for us. We are buying about 225 assets and 125 assets on order. So we're growing our fleet by about 350 assets. And the great thing about this transaction is that the underwriting of these assets, the culture of the people is very similar to ours. So we're very comfortable. And here's a fun fact. 1 year before we bought AWAS sold 84 assets to Macquarie. 80 of these assets are still in this particular book. So it's kind of a coming home party.
Okay.
But underwriting standards that we really know well. And so I think for us, it's an excellent fit in terms of underwriting culture, but also takes us to a scale that is very meaningful.
So let's talk about that scale. This is I mean, speaking about acquisitions, your second large acquisition in the last couple of years. What's the eventual aim? How big of a size of the market do you want to command?
So 5 years ago, when we had 400 assets, I kept on saying that we wanted to get to 800. And we got to 700 something last year, and now after this closes, we will be up to 1,000 something. But in those 5 years, the industry has changed a lot as well. So we continuously examine what the right scale is. And we've said publicly that scale for us is where we want to optimize the return on capital to our shareholders.
Okay.
We think we're kind of there, but the truth is that every time we turn around, that definition gets revisited. So we're constantly evaluating whether the level at which we're at is right or we need to move to the next level.
Are you currently in the top 5 lessors in the world?
Most definitely.
Yeah. What number are you?
I think it depends on how you measure it, but when this deal closes and when the other SMBC transaction closes, this will put us at the number 3 position. But that, I think, keeps on changing. For us, ranking is less important. What is really important is whether what we built is relevant to our clients. Yes. Will we be one of the first calls they will make when they need something?
Okay, so it seems you're evaluating an evaluation phase about what you do from here onwards and whether you go down the route of more acquisitions.
M&A is really part of our DNA, if you look at how we've grown. So it's not that we will not do it. I think we have to be mindful that the industry is also going through a transition. So as we have these assets, but we also sell a lot of them, M&A will continue to play a very big role in how we keep the fleet fresh.
Okay, and how does this recent acquisition add to your order book from Airbus and Boeing?
Yeah, so it doubles our order book. We had approximately 100, and now we will have approximately 200. And we will get both an Airbus order book and a Boeing order book. So we're very excited about that, but more importantly, the order book is spread out nicely till 2032. So it gives us a good footing on those future years.
Any concern about the very well-flagged delivery delays?
I think delays are inevitable at the moment. There is a fair mechanism in place to make sure that we get compensated for it. So I think whilst we prefer that there are no delays, I think we're okay with where we are. Yeah. But importantly, we're securing future growth. So 2029, 30, 31, 32, we now have slots in those periods.
Okay, interesting. Let me just ask you a broader question about sort of how you see pricing shaping up over the next 12 months. So how do you see the market dynamics in your market?
So there's two dimensions to that. One is the value of the aircraft, and I think there is still a shortage, for the lack of a better term. Airlines need kit, and that kit is trading at that appropriate demand-supply balance, if you will. Lease rates reflect that. Lease rates are also quite steady. Now, if you had asked me this a year ago, I would have said lease rates are still climbing. If you ask me today, we think lease rates have plateaued or stabilized at that level. But I think that's a good level. And the next step here will be what monetary policy does to interest rates.
Yeah, so how do you stand out in this market? Is it on pricing or is it something else?
Well, pricing, you have to win on all counts.
Yeah.
But what we try to offer is a combination of product and delivery along with price that represents a very attractive solution to our clients. So whether they're big clients who need quantum solutions, $1 billion solution, or whether they're small clients like carriers in India who need 2 and 3 aircraft to satisfy the secondary and tertiary routes.
Yes.
We do all of that.
How does that translate into demand for this year? How are you seeing demand from airlines then?
Demand is still very strong. In fact, I would say that everything that we have to offer for 2026 is sold out, nearly everything. And we're now working on 27 transactions.
Wow. Okay.
So yeah, it's a good place to be in.
Yeah, it sounds like it. Well, wonderful to have you on. Thank you. And congratulations on the latest acquisition. Feroz Tarapour, CEO of Dubai Aerospace Enterprise. Now for a look at some of the other stories we're following. Boeing Africa has revised its aircraft order outlook for the continent by 40% as economic expansion spurs more travel in the region. The company, which has a 70% market share in Africa, now expects to sell 1,700 planes over the next 2 decades. Boeing expects annual passenger traffic growth to average 6%, driven by young population, growing middle class, and rapid urbanization. The UK says it will not move ahead with its plan to hand the Chagos Islands to Mauritius without US backing. Britain struck the agreement in May, ceding sovereignty over the archipelago while leasing back Diego Garcia and his UK-US military base for 99 years. The U.S. is criticizing South Sudan's peace process, calling it farcical as fighting escalates and the country's main opposition leader remains under arrest and on trial. Washington says the country must move quickly to preserve peace if it wants continued U.S. support. And coming up, we take a look at how global stocks are ending the month as Asian stocks are, listen to this, on track for their best February on record. Stay with us. This is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizon's Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Well, it's the final trading day of the week, but also the month. I thought it would be useful just to look back at the month of February because some really prominent themes emerged. Most notably, take a look at the Asia Pacific, the MSCI Asia Pacific over the course of February, up 7%. I believe it is on track for its best February ever. And you dig a little bit deeper, take a look at the Kospi. This is just over the course of the last month, up 24%. The South Korean index is actually up 46% year to date. Really astonishing numbers there. Yesterday, we were saying that it's actually surpassed Germany and France in terms of market capitalization. Why? Because there's a lot of money going into anything related to AI infrastructure, the build out there, memory chips, the chip makers. It continues to get a bid versus, say, look at the reaction at the U.S. indices. We have the S&P tracking losses for the month, down 1%, and then the NASDAQ down 3.5%. Really challenging couple of weeks there, especially with some of the industries that are likely to perceive to be disrupted by the rollout of AI. And there specifically, we've been talking about software as a service, some of the delivery payments as well. And then also that's sort of put a downward trend on some of those magnificent 7 companies too. So it hasn't been a great month as far as the AI trade is concerned in the U.S. And more recently, we started talking about the knock-on effects that that's going to have to the private credit and private direct lending industry as well. So a tale of two halves. You have very strong performance for Asia, not so good for the U.S. Switching over, though, to other assets, also want to draw your attention to something else that caught my eye this morning. Look, 10-year yields in the U.S. are down 24 basis points. A month ago, everybody was talking about higher yields in the U.S., higher fiscal premium curve steepening. That has not happened. Caught people by surprise. 10-year yields are now through 4% to the downside. The USD actually gained a bid this month, so benefiting a little bit from being a geopolitical risk haven, which has not been the case throughout the course of 2025. And then Brent up 6.7%. All of that is about Iran. And let's see what happens this weekend and whether things can really actually de-escalate from here. And then gold, once again, doing what it always does, shining throughout the month of February, just shy of 5,200 here, up almost 0.3%. So not a lot throughout the month of February, but of course, one of the main outperformers. Now, on a programming note, I also want to flag, we've got a new show airing this weekend. It's called Bloomberg This Weekend. David Gura, Christina Ruffini, and Lisa Matteo will bring you unique conversations and in-depth interviews on news, politics, lifestyle, as well as culture. Watch and listen on Bloomberg TV, radio, and the Bloomberg Business app, Saturdays and Sundays, starting at 12 noon London. That is 4 p.m. here in Dubai. Have a great weekend.
Some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And, you know, we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns, and a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
Live from London, this is Bloomberg Daybreak Europe. I'm Bonnie Quinn with your top stories. Stocks in Asia head for their best February ever, with Korea's Kospi up close to 20% on the month. Netflix bows out. The streaming giant folds in the race to buy Warner Brothers, clearing the way for the rival bidder, Paramount Skydance. Plus, a setback for Starmer as the UK Prime Minister's party finishes third in a special election, losing one of its safest seats in Parliament. So let's have a look at those markets. We arrested those gains in the US yesterday, and it looks like we might be pointed lower once again today for the S&P 500. We were down about 0.5% in yesterday's session after 2 fine days of gains, so that's put us back into the red on the year. The 10-year yield below 4%. Look at that. We are creeping ever lower. We're still in that range of 375 to 425, but of course it's an anchor figure, right? 4%, so dipping below that is pretty significant. And then a little bit of strength for sterling after that by-election result. So yes, maybe some relief that the Greens won and Reform didn't, but obviously a huge setback for Keir Starmer's party. An interesting thing to note, Citi today saying that it's done a huge survey of fund managers, and it's finding that managers are putting money to work in emerging markets even after this huge rally. So that could create more momentum for emerging markets, even as developed markets continue to spend and those yields in some of those spenders are going ever lower. Risk events on your agenda today. We have IAG earnings coming out at 7 a.m. We'll be looking at margins and guidance, obviously, on buybacks. Then from 7:45 UK time, we'll be looking out for Europe's preliminary CPI for February. Then 1:30 p.m. UK time, we get the US PPI for January. We should see a little slowdown, but those components that feed into the core PCE might see some heating up. A little bit of breaking news now. We have a big miss from BASF. The chemical maker seeing 2026 adjusted EBITDA coming in at 6.2 to 7 billion euros. Now, the estimate was for that to come in around 7.22 billion euros. So a massive miss there for BASF. Now, it's important to note shares are up 12% year to date. So we'll see what they do after that miss. I'll tell you where shares are also higher, and that is in Asia. The stocks in Asia across the board really are on track for their best February on record. So let's go straight to Tokyo for an update from Winnie Su. Winnie.
Yeah, morning, Bonnie, and happy Friday. We are ending this weekend as well as this month on a pretty positive note in Asia, as you just mentioned. Yeah, it really is on that AI demand for hardware and also a weaker dollar. And hence, overall, it is a green picture across the board. However, Kospi here is a bit of an outlier. We did see that Samsung Electronics down a bit after that note from IDC mentioning how the overall smartphone market may shrink about 13% due to this ongoing memory crunch. However, it is really hard to look away from that overall stellar rally of the South Korean market as you flip the board and see how it has really performed so far this month. You can see that February up about 20%, and that is actually making it the top performing major stock market in February versus the S&P just about trading flat and in fact headed for its worst month since April. Now also flip the board as we take a look at what's going on in Japan, where we are. In fact, we are seeing the topics outperforming the Nikkei 225, helped by the trading companies, and investors are really looking forward to that Berkshire annual shareholder letter expected this weekend. In terms of the Japanese yen, you're seeing a strengthening just a little. We did have the Tokyo inflation easing, but less than expected, and the 2-year bonds actually holding on to its gains with that bond auction passing quite smoothly. When it comes to the Chinese asset, flip the board and take a look at what's going on in terms of the yuan specifically. We are seeing it actually snapping 10 days of gains after PBOC cutting the cost when it comes to betting against the currency, essentially a tool to slow down the appreciation of the yuan against the dollar. And the overall stock market quite sluggish, but we are waiting for that important MPC meeting due next week. Back to you, Vani.
Winnie, thank you so much. That is Winnie Su in Tokyo. Netflix has dropped out of the battle to buy Warner Brothers, clearing the way now for Paramount to clinch the deal. Shares in the streaming giant soared in after-hours trading while Warner's slid. Let's bring in Manuel Maigori, Bloomberg's deal reporter. So Netflix opened with this deal. It's now decided to withdraw. It's saying that it's no longer financially attractive. Is that the reason? Should we take them at face value, Manuel?
Yes, Bonnie, I think so. I mean, companies at some point need to draw a line, and especially on these bidding wars, right? They need to be disciplined, and at some point, increasing the offers start making no financial sense. And this was the case for Netflix. I mean, Paramount had a lot of firepower. They came back and forth with several sweetened offers over the last few months. And they were also the ones that started this off a few months back, right? So whereas Netflix had reached an agreement back in December, yet Paramount had a lot of dry powder to come back with more offers, and in the end, Warner Brothers, deemed that this latest offer at $31 a share was superior to the one from Netflix. So new chapter on this saga, Bonnie, has kept us real busy. Now we'll see what comes next.
Manuel, just on Netflix, it's rallying big on the news, obviously, because it's not going to be shouldered with debt and so on, and a whole integration process. But at the same time, while it might be short-term good for the stock, is it long-term good for the company that it's doubling down now on its own content instead of integrating a Warner Brothers, let's say?
Yes, definitely, Bonnie, you made a very good point. I mean, definitely a potential integration with Warner Brothers would have created a gigantic company, right? Would have created a lot of content all of a sudden for Netflix additionally. But at the same time, they have been very vocal about the idea of continuing to grow organically and invest heavily on new shows, new content. And why not? There are potentially other potential opportunities, new targets that may come to market down the road. Obviously, Warner Brothers was a very unique kind of once-in-a-lifetime opportunity out there, but there will be others potentially down the road. And now everybody knows that Netflix, could potentially acquire other companies too. So we'll see how the next few months and years play out for sure. But for the time being, they will probably focus more on organic growth.
So presumably it'll be a pretty smooth regulatory process for Paramount Skydance. Obviously, in the good books at the White House, that can't hurt at the very least. Is there anything that could come out of the woodwork that might surprise us now about the rest of this deal process?
The answer is yes. Bonnie, these transformative deals tend to attract a lot of scrutiny from regulators. Politicians have been already very vocal in Washington, and they will continue to be so over the coming months until this deal completes. So we are expected to see a lot of opinion, a lot of people coming and weighing on the consequences, ramifications for consumers and for the industry over the coming months. So we'll see. I mean, it's still early to call it, but usually these big transformative deals tend to have a little bit of a bumpy road towards approval.
All right, well, we'll see market reaction in a little bit. Bloomberg Deals reporter Manuel Baigori, thank you. Prime Minister Keir Starmer's ruling Labour Party has lost a formerly safe seat in the UK Parliament, finishing third behind the Green Party and Reform UK. Let's get more now from Bloomberg opinion columnist Rosa Prince. Rosa, talk us through the significance of this special by-election in the Manchester suburb of Gordon and Denton.
Yes, such a potentially consequential by-election. Basically, we have seen that the Labour Party, which has been governing for just over a year and a half now, is in massive trouble across the country. If they can't hold on to seats like this in their heartland in Manchester, then they really are in trouble everywhere. And what we're seeing is that they are at threat not just from the right of the spectrum, which we knew already from Nigel Farage's Reform UK, but also now from the left. The Green Party, not so much a traditional Green Party worried about climate change. They're very interested in issues to do with socialism, wealth taxes, international politics, such as the situation in Gaza. And Labour MPs will all be worrying that if they could lose this constituency, won't they lose theirs now next time around?
It will have been a boost to Reform as well to have come in runner-up, right? Labour was third in this election, and as you say, a very divisive election. So are there any lessons to be learned for, say, Greens or Reform when it comes to what makes people turn out? I mean, it was a 48% turnout. It was quite high.
Yeah, I think what it does is confirm this idea that we've been seeing for a while now, that two-party politics in the UK is over, that we are into a world of five-party politics. That's the traditional Labour and Conservatives, now Reform, the Greens and the Liberal Democrats. I don't think it was an entirely good picture for Reform. I think what we saw is that there's something of a ceiling on their support. They probably shouldn't have expected to win it, but they like their chances there. And their candidate was quite polarising. And what they've seen is that there are a lot of people who really dislike them, and they are looking for the party that can stop them. And in Manchester, that turned out to be the Green Party. So one lesson for them is that they're going to have to see how they can widen their appeal. As for the Greens, they told me, I was in Gorton and Denton last week. I chatted to the candidate, and she told me that she thought that what had stopped the Greens being a national party in the past was this idea that it was a wasted vote to vote Green, that they couldn't win nationally. And now that's been exploded out of the water. This was not a target seat for them. They did not have infrastructure. They didn't even have any local councillors representing that seat. And now, all bets are off for them, and they will really be gunning for the Labour Party and hoping to break through on quite a big scale.
Yeah, so just another huge blow. Where does it leave Keir Starmer's government at this point?
Great question. And also, where does it leave Keir Starmer himself? Now, as I said, those MPs will be really spooked at the idea that they too could lose their seats. And Keir Starmer has been saying for a while, we need to steady the ship. We need to just go on. So he may have a leadership challenge coming down the track yet again. And the other thing is that I think it really upsets their strategy. For some time, they have been kind of facing to the right and thinking about reform and worrying about reform. Now they're going to have to worry about their left flank and those MPs in the party who are saying, come on, we need to offer something to people on the left, perhaps leaning left economically, putting through some of those policies that they like scrapping student tuition fees. Students really like the Greens. Their voices are going to have to be heard. And so we may see the whole direction of the government tilting towards the left.
All right, Rosa, thank you so much. Bloomberg opinion columnist Rosa Prince there. And I want to point to the pound sterling because we did see some strengthening after that vote came in. We're just shaving a little bit of those gains off, but it could be an indication that, the market likes certainty. So now we know what the direction is for Labour potentially, but also just in this particular by-election. And also perhaps the fact that Reform didn't win or didn't get even closer. It did come in second, though. So sterling trading now at 134.87. Still ahead, I'm going to be speaking with the CEO of a tube maker, Vallourec, after it reported earnings. But first, no nuclear deal as of yet, as US and Iranian officials conclude the latest round of talks in Geneva. More on the way. Those details next. This is Bloomberg.
Up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersachi in Davos, Switzerland, and this is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise,
with some fun along the way.
This is Bloomberg Surveillance.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
To Bloomberg Daybreak Europe. US and Iranian officials ended the latest round of nuclear talks in Geneva yesterday with no new deal. The two nations, however, agreed to reconvene as soon as next week as President Trump continues to amass military forces in the region. Let's get more from Jemana Bersachi, Bloomberg Horizon's Middle East and Africa anchor. Jemana, what is the latest? What did we learn from yesterday's talks?
Well, it was a long day of talks, quite fraught with an intermission in the middle with reports and Bloomberg reporting this as well as other outlets that the U.S. side were disappointed with some of the options that Iran had presented. That being said, at the end of the day, the mediator, Oman, the foreign minister there, put out a statement saying that talks will reconvene again in Vienna next week. Technical talks, again, this is a question, but maybe with the participation of the IEA, since they are actually situated there. And the Omani mediator also citing, quote, significant progress, also echoed by the Iranian Foreign Ministry as well. That we haven't had formal comments come through from the U.S., but what we do understand from earlier on in the session is that they were not utterly pleased with what the Iranians had presented. Now, Wall Street Journal had also reported that the U.S. were insisting on 3 criteria: the full dismantlement of 3 main nuclear sites, the Iranians to deliver their already enriched stockpile of highly enriched uranium. So that is, sitting on about 400 kilos worth, unknown whereabouts. The U.S. are insisting on them handing it over. And then the third point is that if they do agree to terms of little or low or no enrichment even, we don't know at this point, they would stick to those terms indefinitely as opposed to having a sunset clause, which was a key clause in the JCPOA deal that Obama agreed. On the Iranian side, they're still heavily pushing for sanctions relief, but the U.S. seems to be pushing back and saying that unless the Iranian side actually agree to adhere to all of the criteria, it's unlikely that they're going to get the full substantial sanctions relief that they've been pushing for. So still a lot of topics to sort of iron over the next week. But at the same time, the region is still on high alert for the potential, of course, of that military action.
Yes, and it did seem like the U.S. added in some clauses that perhaps Iran wasn't expecting, or at least that we weren't expecting to hear. Now, you mentioned military action. It's still on the table, I guess, Jumana, but is it at least pushed back, the potential for military action?
Yeah, I think that is the hope. Obviously, going into the weekend, tensions are high. President Trump gave that ultimatum of 10 to 15 days. But actually, if you work it out in calendar terms, as the period between March the 1st and March the 5th. So perhaps straddles the weekend. Typically, we know from history that if action does happen, it tends to happen over the weekend as well. And then all of the military buildup, the buildup of assets around the region would suggest that military action is still on the table. That second aircraft carrier, the Gerald Ford, has now reportedly left Greece. It's left Crete. It's on its way to Eastern Mediterranean. So it will be situated where they want it to be. And actually, yesterday, the Israeli government confirmed that their territory is being used for F-22 fighter jets and also refueling planes as well, which is not customary, of course, for a country to play host to another country's military assets. So this is a situation we're in. I think, as we head to the weekends, and you can see it in the way oil is trading, tension still on high alert about the real possibility of kinetic action, though unclear at this point, once again, whether the Trump administration could opt for limited military action and a one-off strike, or a sustained or protracted period of strikes on Iranian soil.
Jumana, take us through the energy market reaction. Sure, there might have been a massive reaction to one day of talks. No one was expecting maybe any huge breakthroughs, but we have seen a reaction in energy markets to the past several days of rhetoric.
Yeah, that's true. And over the course of this month, oil is actually up around 8%. And a lot of that is down to geopolitical premium. I don't think anyone would think that the fundamentals would justify Brent trading at around $71 here. Actually, over the course of this week, we are trading a little bit weaker because, as you say, maybe a bit of relief that the negotiations are still taking place, that there's another round of negotiations taking place in Vienna next week, which puts the imminent threat off the table. But we do know from, if you look at hedging activity and take a look at this chart here, investors have been protecting for an upside surprise in oil, so buying those short-dated options, and you can see it very pronounced in the one-month tenor, i.e. investors are accounting for the possibility of something happening in the next couple of weeks as opposed to over 3 months or 6 months. It's more pronounced there. And then you look at it in terms of the export volumes as well. The data would suggest that Saudi Arabia has been bringing forward a lot of the sales of its export to some of those Asian economies. And then looking at some of the storage numbers as well, the Iranian floating oil storage has massively spiked up as well, which also indicates that they perhaps are readying themselves for something to happen. But the big question mark, of course, here, Vani, is if Iran should choose to retaliate. In the past, the way they've retaliated has been by avoiding oil infrastructure. But this time around, there's always that option of closing up or causing a significant amount of disruption on that main choke point, which is the Strait of Hormuz. So as long as that threat continues to linger over the market, that's the reason you're going to see this geopolitical premium continue to be priced in to where oil is trading. One other thing I would say, and this is going underneath the radar, there is an OPEC Plus decision coming up this Sunday. Unlikely that they'll change or modify their output targets, but something to watch out for as we walk in on Monday morning as well.
All right, Jumana, as you say, everyone on high alert here. Our appreciation, Jumana Bersachi, Bloomberg Horizon's Middle East and Africa anchor. Coming up, negotiators from Ukraine, Russia and the US set for talks in the UAE. Details next. This is Bloomberg.
U.S. jobs numbers are released, Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Astonishing day for U.S. technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Welcome back to Bloomberg Daybreak Europe. Now to some other top stories we're following this morning. Ukraine's president says the next round of negotiations between Ukraine, Russia and the US will likely take place in Abu Dhabi in early March. Volodymyr Zelensky says the trilateral talks should finalize security guarantees and prepare future leader-level meetings. The International Monetary Fund has approved a 4-year financing program for Ukraine worth about $8.1 billion. The IMF's executive board greenlit the deal, allowing for the immediate disbursement of about $1.5 billion. The decision should be a relief to Ukraine amid difficulties on the battlefield and U.S. pressure to make concessions in peace talks with Russia. Bloomberg understands that the Trump administration is easing fuel shipments to Cuba's private sector to make it more reliant on the United States for supplies. Sources say energy companies are being reassured they can sell oil to private Cuban SMEs, and the resale of Venezuelan oil to Cuba will be authorized. The plan is continuing to take shape, but tensions are running high after Cuban authorities shot 10 exiles on a speedboat off the island's coast. Former U.S. Secretary of State Hillary Clinton has denied ever knowing the convicted pedophile Jeffrey Epstein. Giving evidence to congressional investigators, Clinton accused them of wasting time on fishing expeditions and said President Trump should be forced to answer questions under oath. The former President Bill Clinton will testify later today.
I don't know how many times I had to say I did not know Jeffrey Epstein. I never went to his island. I never went to his homes. I never went to his offices. So it's on the record numerous times.
All right, let's take a look at these markets as we head into the Friday session. It has been a fascinating month and nowhere more so than across Asia. If we look at the MSCI Asia Pacific Index, you can see a huge outperformance. Now, that's not just the last couple of days. Obviously, semiconductor memory stocks ripped, particularly in South Korea. But it's really been across the whole month. We're up something like 20% on the Kospi, which is really just a phenomenal performance. And it looks like it could continue with Citi saying that fund managers are adding to emerging market positions. Now, that's the MXAP. But if you look at the 10-year yield in the United States, we are below 4% as well. That's a little bit of an indication of a safety trade, potentially. Also, the idea that we're still at sea when it comes to data and Fed leanings. So that 4% breach is pretty significant, even though we are still in that range of between 375 and 425. We have turned negative now on sterling after that nice bounce after the by-election result. Let's take a look at some other assets on the move. So oil a little bit higher. Bitcoin after that nice bounce is maybe setting up for a nice bounce again today. And gold continues to be near its record. Coming up, we'll look at how the markets are ending the week with Lauren Van Billion.
up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Live from London, this is Bloomberg Daybreak Europe. I'm Bonnie Quinn with your top stories. Stocks in Asia head for their best February ever, with Korea's Kospi up close to 20% on the month. Netflix bows out. The streaming giant folds in the race to buy Warner Brothers, clearing the way now for rival bidder Paramount Skydance. Plus, a setback for Starmer as the UK Prime Minister's party finishes third in a special election, losing one of its safest seats in Parliament. Well, let's have a look at these markets. We'll start with the pound, in fact, because we saw the pound bouncing after that election result. A little bit of certainty for the market, no doubt. We've changed now. We're a little bit lower relative to the US dollar. Markets move on pretty fast, but also a lot of uncertainty in the future. Does this have consequences now for Keir Starmer's government? So that's going to be next on traders' radars. Also, we're seeing this 10-year yield bid, right? So the yield below 4%. Treasuries absolutely bid. It's a haven trade going into the weekend with all of this geopolitical uncertainty. The Iran talks finishing without any kind of real conclusion, except that they'll meet to talk again next week. And then futures on the S&P 500 pointed lower. We did have those declines yesterday on the S&P, down about 0.5%. Nvidia failed to deliver perhaps, the enthusiasm that the market was hoping for in terms of an injection to sort of get rid of all of the bad feeling about AI taking over jobs and perhaps, creatively destroying companies, and that really arrested the 2 days of gains that we saw midweek, and we are now back negative on the year for the S&P 500, and also we're down 2% on the year now for the Nasdaq 100. All right, it's time now for your front page news. The Financial Times leading on the Greens winning a key UK by-election in a blow to Labour. The loss is a severe setback to Prime Minister Keir Starmer. The Guardian also splashes on the Green Party winning the Gorton and Denton by-election, pushing Labour to third place. Again, a blow to Keir Starmer, yet another one. And finally, the Wall Street Journal has this exclusive story on the Federal Reserve mounting a closed-door fight against the Justice Department subpoenas. It all comes as U.S. Attorney General Jeanine Pirro is investigating testimony from Chair Jerome Powell provided last summer around building renovations, a probe he has called improper. And you can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DayBgo. Anthropic has rejected the Pentagon's latest offer to defuse a standoff over conditions the company has sought governing the use of its AI software by the military, escalating the standoff between the two parties ahead of a government deadline. Let's bring in Bloomberg's Washington Deputy Bureau Chief, Laura Davison. Laura, we have a few hours left, but it looks like Anthropic is now standing up for itself again. What's likely to happen next?
It is really unclear. The Pentagon has set this 5 o'clock East Coast deadline for Anthropic to acquiesce and essentially say that the U.S. military can use its platform however it would like. The company came out just a couple hours ago and said they cannot allow the Pentagon to do that in good conscience. The two things that they really want restrictions on are, one, surveillance of U.S. citizens, and two, having the AI platform conduct lethal strikes without the involvement of a human. They said, look, that is just not safe. We don't know exactly how the the platform will respond. We want those guardrails. The Pentagon shot back and said that that the U.S. military alone should be able to control the tools that it has, and it shouldn't be up to a private company. This is a standoff that has been brewing for days, but really intensified. And the threat that we'll see, come this deadline, if the Pentagon acts upon, is to label Anthropic a supply chain risk. That is a label that is essentially usually reserved for companies that are owned by adversaries, Russia, China, for example. That it would essentially remove Anthropic from being able to be used by the broader military system, including other contractors like Lockheed and Boeing, for example. The other threat, which is slightly less severe, would be to invoke a 1950s era law, the Defense Production Act, which would essentially allow the Pentagon to just subsume the platform, use it how it would like, without Anthropic's input on this matter.
Yeah, it's fascinating. I mean, the FT is going so far as to report the U.S. has said it will axe all Anthropic pacts without a Pentagon deal. Who would be the likeliest loser in this? I mean, I guess Anthropic would take a big hit.
This would be a blow to Anthropic in terms of its government contracts, though lots of folks have also pointed out that this would be a big loss to the U.S. government, and particularly in an AI race with China and other countries. That the Claude platform that Anthropic produces is one of the most advanced. It's the one that the Pentagon has been using for the longest. Just abruptly removing it from all the systems would mean a huge blow to U.S. military capability.
All right, Bloomberg's Washington Deputy Bureau Chief Laura Davison, thank you so much. We'll keep an eye out for 5:01 Eastern, which is the deadline for Anthropic. Joining me now is Lauren Van Billion, Senior Portfolio Manager on Plus Fixed Income Strategy at Allspring Global Investments. Lauren, there's a lot to talk about fixed income-wise, but I do have to ask you about all of the plots that just keep thickening around AI. I mean, is that going to be the dominant narrative that moves markets over the coming months and years?
Absolutely. I mean, it's certainly something we're spending a lot of time talking about internally. And it doesn't really matter if you're looking at sovereign bonds or corporate bonds or equities. There are going to be changes coming from AI. And maybe in the sovereign space, it's more around the productivity gains we can get. Maybe that's good news for government. But certainly something that we're all spending plenty of time thinking about.
And it's really amazing. It's so obvious in the U.S. right now how the relationship between governments and corporate America is changing, right? So the government taking stakes in some companies, trying to set up a sovereign wealth fund, also, having opinions on how companies should govern themselves. I mean, does this make the U.S. less investable?
I think we're seeing that, like you say, that kind of more assertive form of governance. I think we're seeing it globally. We're seeing governments, not just in the U.S., but more broadly, right, take more of an interest in where monetary policy is, and perhaps offer opinions around what central bankers should be doing. And then that governments have always had that strategic view on the economy and the makeup of it, but seem to be getting confident around getting more assertive. So I don't think it's unique to the U.S. Perhaps the U.S. government, obviously given the depth and size of their market, can be a bit bolder, but it's certainly not unique to the U.S. right now.
Yeah, that's such a good point. Lauren, I have to ask you about the 10-year going through 4%. It's been threatening it. We've seen the 10-year yield creep down over the last several days, but it certainly does seem like a little bit of a monumental move, given that 4% is such a round number. What do you make of it? Is it a safety trade?
Yeah, it is. It is big, isn't it? It's just threatened it for repeatedly. Bounced off, come back, thought about it, come back, and now this morning went through. If it can hold this move, it does suggest that yes, we could see some lower end treasuries. At Allspring, we have been looking at adding a bit more duration in the US and other sort of developed markets. To us, there are sort of downside risks to inflation for this year. So that could open up the path to a sort of easing cycle that the market takes as a very positive thing. And so maybe you're seeing steeper curves this year again, but perhaps it's bull steepening rather than some of that bear steepening we saw last year.
Lauren, do you anticipate that it will continue to decline, this 10-year yield, and as you say, even further out the curve? What would cause that to happen? What would be the catalyst? Would be, the concern about spending?
Well, I suppose to answer your first question first, yes, we could see the move continue. if the market has that momentum behind it, if inflation concerns are perhaps not as pointed, the market seems a lot calmer around the future makeup of the Fed and sort of that policy interaction. But yeah, all of those factors could keep bonds on the front foot and keep yields sort of moving lower. I think if we do see that renewed concern around the fiscal side, it's far more that long end, right? That 15, 20, 30-year part of the curve that would react there. In the short term, more spending might not be great for the budget, but it could help support growth.
Now, we've been talking a lot about emerging markets. I know that you see plenty of opportunities in emerging market debt. Would you be taking some money off the table in, say, developed markets in order to put it to work in emerging markets still, or how would that work?
Yeah, I think you can. Emerging markets have had a fantastic run in 2025, but I don't think the story is over yet. They look perhaps on the more expensive side if you compare them to developed markets versus sort of a recent history. But I think if you take into account the improving fundamentals, that there's still quite a lot of value there. I think you need to be more strategic around names. It's not sort of a blanket buy EM and sort of don't look at it for 6 months. But some of the high yielders, there's great idiosyncratic stories that I think make a good case for investors to be involved in. How you fund it,
all right, Lauren.
I think that can vary by strategy and sort of where your base is, but there's plenty of options.
I'm afraid we have to leave it there. Lauren, thank you so much. Lauren Van Biljon is Senior Portfolio Manager at Allspring Global Investments. Coming up, we're going to be speaking to the Valorex CEO, Philippe Guillemot, after the company reported better than expected fourth quarter revenue. That interview next. This is Bloomberg.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. I'm not here to say what I would and wouldn't do in the future. But the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitvale had happened a calendar year later, it probably would have come out on streaming. I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. But that's where I'm at today.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Welcome back to Bloomberg Daybreak Europe. Now to some corporate news. Bloomberg has learned SAP's new bonus system has ended up rewarding underperforming managers while holding lower-ranking workers to higher standards for their payouts. We're told the changes prompted an outcry from employees and leaders at the German software company, and the company has since set aside millions of euros to improve the new system. UBS has nominated Augustin Carstens and Luca Maestri for election to the board at the 2026 annual general meeting on April 15th. William Dudley and Jeanette Wong will not stand for re-election. IAG has announced plans to pay an annual dividend of around 448 million euros and buy back 1.5 billion euros of shares this year. The owner of British Airways says the move reflects its financial position and long-term outlook. It's set to report full-year earnings shortly. The chief executive of IAG will be on the opening trade just after 8 a.m. London time, so do tune in to that. The tube maker Vallourec has reported fourth quarter revenue and EBITDA that came in above estimates. Joining me now, I'm pleased to say, is Vallourec CEO Philippe Guillemot. So congratulations, Philippe, on the top and bottom lines. Curious about the guidance, though. Perhaps you would have liked to maybe come in at the higher end of street estimates. You did provide a range, but what is holding guidance back?
Yeah, first, thank you for having me today with you. Well, first, I would like to reiterate that 2025 was another transforming year. For the third year in a row, we are above 20% EBITDA margin. We have 13 quarters in a row with positive cash flow. And thanks to this performance, we are announcing a significant increase of return to shareholders. We target 650 million euros, including an interim dividend to be distributed in August of 1.75 euro per share, an increase of 25 cents per share compared to last year. And all this is possible because Vallourec is now very well positioned and more positioned to address the challenges of the world energy of today and tomorrow. And we continue to reinforce this positioning through our investment in the US on our high-torque connections for the unconventional oil field. We have integrated our first acquisition in 9 years in Brazil to double the value we can deliver on our line pipe business. And we invest in advanced and enhanced geothermal technologies, which seems to be having a great future given the high need for electricity of the data centers. So coming back
yes, you're
to your
essentially
question,
global. 40% of your revenue comes from the United States, but you're all over the world, essentially, Philippe. So I'm curious, where are you seeing companies hesitate and where are they quite happy to spend in the knowledge that future growth is there?
Yeah, first we have, as you said, a strong presence in the US. I remind you that 100% of what we sell on the onshore business in the US, we make it in the US, from steel to finishing of the pipe, so which is obviously a unique positioning in today's world with the tariff. We have obviously a strong footprint in South America with Petrobras being a key customer to us, and with which we have signed a long-term agreement with a potential sale of $1 billion in the next few years. And we have a strong presence in Middle East, where after a slowdown in H2 last year, we have seen activity picking up since the beginning of the year, which should translate in higher volume in the second part of this year.
You're working with Baker Hughes. You're also working with Shell on subsea oil and gas projects. I'm curious, are you looking at Venezuela at all and talking to anybody involved in trying to restart Venezuela's oil industry?
Yeah, we used to be years ago in Venezuela. The market may reopen. And now with our plant in Brazil, into which we have invested a lot in the last 3 years, we are uniquely positioned to deliver the pipe which could be needed in Venezuela, pipes which are, I think, what we call sour service, so fit for mission in a very highly corrosive environment, which is the case of the onshore oil field in Venezuela.
Have you been talking with any U.S. companies for provision of certain tubes or what they might need for, hydraulic reasons?
No, we have been talking with our customers in the U.S. You're right. I think we will deliver from Brazil, but it's our commercial team in the U.S. which is in daily contacts with our customers in the U.S. to discuss their plans in Venezuela.
Shares are up 25% year to date. You're obviously rewarding shareholders, as you said yourself. How do you keep this outperformance going, Philippe?
I think it's innovation, staying very disciplined on our value over volume strategy, operational excellence. I think we keep obviously improving our operations. And with the footprint we have today, we are much more flexible than we were in the past. And even though volume may go up or down, we're able to protect our margin by adjusting our cost base, which you see quarter after quarter.
So how has your business model and maybe your outlook changed since President Trump took office? Are you concentrating more on manufacturing in the United States, which you very prominently said you absolutely do earlier on?
Yes, we do it. We innovate too. We have developed new connections, so-called high-torque connections, because our customers now are able to produce more oil with less wells, thanks to productivity gains, which are made possible thanks to our technology. These laterals are longer and longer, and that's why they require this high-torque connection. And that's the reason why last November we have inaugurated a new investment, $48 million, new threading line in our plant in Youngstown, Ohio.
Philippe, who is spending? We've gone through a period of huge volatility for energy prices, whether it be natural gas or oil. And, there's been a lot of uncertainty, geopolitical uncertainty and otherwise. So who's taking the risk out there?
No, yes. First, the world needs more and more energy. And you've seen recently that with all this new data center in construction, the world needs more and more electricity, and you need primary energy to produce electricity. And the fastest way to bring electricity is gas turbines, so there is a need for more and more gas. Today, to extract oil, you need to switch more and more to unconventional, for which we have developed technologies. And on top, you have geothermal, which has become a very key base energy source of electricity. And we have been working with companies developing new concepts, so-called enhanced or advanced geothermal technology, leveraging all the know-how we have acquired in oil and gas to design the wells that will be able to lower significantly the cost per megawatt of the electricity that can be produced by geothermal, but geothermal being a base load, which is key for the data centers.
All right, Philippe, we have to leave it there, but congratulations on the quarter. Looking forward to speaking to you again next quarter. Vallourec CEO Philippe Guillemot. And some other corporate headlines now. CoreWeave shares slumped in late trading after reporting a bigger than expected loss and boosting capital expenditure. CoreWeave says this year's capex will come in above estimates at around $30 to $35 billion, adding to concerns that it might be overspending on infrastructure. Meanwhile, shares in Dell jumping in extended trading. That's after the company gave an outlook for sales of its artificial intelligence servers that exceeded estimates. It's a sign of robust demand for machines, helping fuel the AI data center build-out. The company will generate about $50 billion in AI server revenue in the current fiscal year, which ends January 2027. Shares of Block closed higher in the U.S. after it moved to cut its workforce by nearly half as it bets on AI changing the future of labor productivity. Block, which was founded by Jack Dorsey, has invested heavily in AI tools to run more efficiently. The company has been restructuring its business model and staffing since 2024. Plenty more coming up. Do stay with us. This is Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Haslada Amin in Davos, Switzerland, and this is Bloomberg.
The Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
We've come to another very eventful weekly close here in London, and I just wanted to point to some charts showing what exactly happened with NVIDIA. So Samsung beating NVIDIA wildly on memory. If you just look at those green lines, they're just rising, to the moon. That's also helping the Kospi, and we saw that it has nearly a 20% gain in the month of February, and Korea's indices are just performing hugely well. So we'll have to keep an eye on memory for NVIDIA as well and what that might mean for quarters forward, because if we take a look at the next chart, we'll see that NVIDIA lost $260 million of market capitalization yesterday. That's the biggest loss in one day since all the way back to March 3rd. There haven't been many days like that for NVIDIA. And sure, it was a 5.5% move, right? It's maybe not huge in the scheme of things, and it can be a pretty volatile stock. Nevertheless, that's another metric to watch out for, obviously. And then I just wanted to point to the 10-year yield, because we did finally break through that 4% mark. We've been waiting for that to happen. Really doesn't matter that we broke through 4%. We're down a few basis points. Still, it is a round number, and it is something that, people anchor to, right? So once you break through 4%, is there more to go? So it's on pace now for its worst month since February of 2025, so more than a year. We're down 23 basis points. We had that huge move earlier on in the month, and then we've been creeping lower ever since. All right, let's take a look at the risk events on your calendar. 7 a.m. we get IAG earnings, so we had a little bit of a preview there, but we get the full earnings coming out in just a little while. And then from 7:45 a.m. UK time, we get Europe's preliminary CPI for February. We're going to want to take a look at those data. 1:30 p.m. local time, we get US PPI for January. Now, we are expecting some of the headline numbers to come in cooler, but those that feed into core CPE, which is, of course, what the Fed cares about, well, they might be hotter. Our new show, Bloomberg This Weekend, launches tomorrow. David Gura, Christina Raffini, and Lisa Matteo bring you unique conversations and in-depth interviews on news, politics, lifestyle and culture. Do watch and listen on Bloomberg TV, radio and the Bloomberg Business app. That's Saturdays and Sundays from 12 p.m. UK time. And next week, we'll have special coverage of the UK Chancellor's spring statement. Join us Tuesday for that. The opening trade is next.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
the challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US, or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning. Happy Friday. It is February the 27th, and here is what's on the agenda. Credit jitters continue. Block slashes jobs as it bets on AI, and a by-election blow for Keir Starmer.
European stocks set for very modest gains of just 5 points, but this is in the context of European stocks that are close to record highs, Lizzie. S&P futures pointing low by 0.2%. Pressure on the Nasdaq 100 yesterday, particularly Nvidia falling pretty hard. 134 on the pound. We watch this on the political risk in the UK, and Brent crude at $71 a barrel, higher by 0.7 as we look to additional talks between the US and Iran potentially next week. The opening trade starts right now.
Welcome to the programme, everybody. This is the opening trade, Friday the 27th of February, just gone 7 o'clock here in London. And let's get straight into the agenda. And we start, as we have done many times, it seems, in recent weeks, with jitters coming from credit markets. There are a few different threads to pull together, though, some of them more familiar than others. So we have the story of another BDC, business development company. These are the private credit direct lenders to the software sector, or to lots of sectors, but notably to software. And that's where the market's concern has been recently. So we've got another one, an example of one of those getting itself into a little bit of trouble, decreasing payouts, decreasing value of its portfolio. This is mid-cap financial investments. So that's one side of it, and that business is overseen by Apollo. So for those who are really worried about private credit, this is another example of why you should be worried. Then we have a sort of slightly different story, but still it reflects concern around credit. And this has more parallels maybe with Tricolour and First Brands. And this is MFS, a London-based non-bank lender. But this is lending for property, so not really to do with the software story. But once again, we're concerned about where these debts end up. Do they end up on the bank's balance sheets? And do we see some kind of contagion? So in some senses, all of these credit stories add up to more nervousness around what's going on in the credit markets.
I think just to emphasise a couple of points that you make. One, this is another example. Two, it's in a bit of trouble. And that's important because it's the build-up of the number of cases that we're starting to see in the private credit space.
Cases or cockroaches?
Or cockroaches. But none of them are particularly significantly dramatic in and of themselves. Yeah. So in the most recent case, the Apollo Private Credit Fund, mid-cap financial investment corp, to your point, Anna, OK, they've lowered their quarterly payout, they've written down the portfolio by 3%, they've come in with a share buyback of $100 million US. On the edges, this is problematic. It isn't dramatic just as one example, but you put them all together, and that's where the level of concern is. It's another cockroach in the mix. And then you bring it to the point, which it was a slightly different story here in the UK with the lender here, focused on the real estate sector, and the fact that the banks are exposed, Barclays amongst them, including Jefferies and Santander as well. Where is the due diligence?
Yeah, and you saw Barclays and Santander ADRs falling, so we'll watch those at the open. But yes, it's the parallels, it's the cascade, and you've already had Bain warning that the software default rates are at risk of hitting double digits. We were speaking to Bruce Richards yesterday. He was talking about 15%, the private credit software defaults potentially hitting, and that echoes the report that we heard from UBS, the even worst case scenario.
Yeah.
So all of these cockroaches, as you say, mounting.
And that 15% attaching to the software companies rather than the private credit lenders who obviously lend to lots of different sectors. But it's a point well made. I think it's interesting, Tom, as you were saying, that, these are just, they're little cracks, aren't they? But they are giving us some transparency, which is maybe not what we'd anticipated. At least some of these businesses, BDCs, are listed in the States, so they have to report. And so there is some sense that we get these lines in the sand, these markers where we take stock and we say, OK, what is the state of this business, which in itself is interesting.
And you could make the point that the scrutiny in and of itself is healthy in terms of the market developments. As you said, there is that exposure to software, and that Apollo Private Credit Fund had about an 11 to 12% exposure to software. We have a reminder of what is happening in the AI space in terms of how the axe is falling on jobs. And this is Jack Dorsey. So take your time back to when he founded Twitter, famously now an impressive beard. But more importantly, he is announcing that they are cutting almost half the workforce at Block, which is a payments company, 4,000 jobs. And I'll just quote from Jack Dorsey then. I don't think we're early to this realisation, and I'm going to paraphrase now, that we need to cut jobs. Because AI is having the impact and taking on those roles. I'll go back to his direct quote. I think most companies are late. Within the next year, I believe the majority of companies will reach the same conclusion and make similar structural changes.
But that's the story he's telling. You could also point to the fact that the stock's been lagging. It's had rolling job cuts for a while now. They usually tie them to annual performance reviews. Is it just that Dorsey would like to think that this is about how good the AI is, or is it actually because the company's struggling?
And that taps into a big live conversation that we're having in lots of parts of the white-collar economy about how many jobs are going to be taken, how many jobs are just going to be turned into new jobs. All of that still very much the conversation. There are other tech themes, Tom, that we need to pick up on, and we have contrasting fortunes at CoreWeave and at Dell, don't we? One saying it's doing really well, this is Dell, on the back of AI-related servers, and CoreWeave, kind of incredibly, because this is a data centre business, but not doing so well.
No, because they have to spend very heavily to meet the demand. They still see that demand, they say, but obviously to meet that demand, to match that demand, to build out the data centres, to buy the NVIDIA chips that they then lease out to their customers, who include companies like Meta, they have to spend very heavily. They're looking at capex, potentially CoreWeave, of 30 to 35 billion US dollars. That is above the expectations. They're also borrowing a lot more as well. So they're going to the debt markets. They're looking to raise $8.5 billion to help finance that in terms of dollars. And the losses came in larger than expected for CoreWeave. The flip side, in terms of the hardware story, Anna, you mentioned this, is the story around Dell, which has pivoted and seemingly very successfully towards the server piece when it comes to data centres. They came out with stronger than expected earnings, Dell, and they expect to generate $50 billion of AI server revenue in the current fiscal year.
Yes, and actually the Dell share price move, it really jumped after hours, and the CoreWeave share price down by 13% after hours. So we've seen some substantial after-hours moves on the back of those numbers.
It's like we discussed with Karen Ward yesterday. You're seeing companies being rewarded for capex restraint at this point, and we saw it with LSEG yesterday, one of the topics we discussed with the CEO. Which takes me to the UK, because we've got to talk about the by-election, a result that perhaps is going to create more nightmares for Keir Starmer. The Greens winning this special election in Gorton and Denton. It's the first time in more than 90 years that that seat won't be represented by Labour in the House of Commons. It's a seat Labour easily won only 19 months ago, and it opens up Starmer to internal criticism, because you'll remember that the Greater Manchester Mayor Andy Burnham had been a name that was floated to be Labour's candidate there, but instead they went for a different candidate and they've lost. So if you look at the market reaction as well, the pound initially gained, it's been fluctuating since. It seems like initially there was relief that it wasn't victory for reform, Nigel Farage's party. Now perhaps more of a focus on the headache for Keir Starmer.
I wonder if a victory for the Greens makes this look less useful as an indicator as to what happens nationally, because this doesn't reflect the national polling, does it? The reform very much in the lead when it comes to the national polling. It's interesting, I was looking at one of the professors of Rob Ford, one of the politics professor, referring to this as a Frankenstein's monster of a constituency because it's been stitched together. No, because it's been stitched together from lots of bits of other constituencies. It's a real patchwork, and as a result, quite difficult for pollsters to get a sense of what it was going to... And it contains a lot of students and high Muslim population as well, both of which lent very strongly to the Greens.
What does it tell us in terms of how we price political risk for the UK, though? And that's the question as we lead up to the May elections. And as an investor, do you want to be starting to price in increased political risk? And how do you play that? Do you play that in the pound? Do you play that in gilts? A lot of the guests that we've been speaking to said a lot of risk premium is already priced into gilts. And Goldman Sachs famously putting out a note a few weeks ago saying there's further upside to gilts. So yields down is the projection from the team at Goldman Sachs. And again, we've heard guests who said a lot of the risk premium is already priced in. We'll see if that's reflected in the session today, or if you want to be starting putting positions in ahead of May if the Prime Minister comes under increased pressure. Of course, the Greens could end up being a coalition partner, potentially, in some scenarios, and that could pull the Labour Party further to the left. More spending, I guess, would be one risk factor for some investors.
Well, of course, it comes ahead of the Chancellor's spring statement next week, and we'll have special coverage of that. So do join us on Tuesday for our special show.
Should we break you some lines in terms of the earnings? So we'll switch from politics to the earnings story. IAG, the owner, of course, of Iberia, but also British Airways. Fourth quarter revenue, missing estimates. They see 2026 CapEx at about 3.6 billion euros. They are announcing, this is important, another €1.5 billion buyback. Fourth quarter, in terms of fourth quarter revenues, that was softer then, coming in just below 8 billion euros. The estimates had been for about 8.1 billion. The load factor, 85.1%. That's slightly above the estimates. But again, it's the buyback that will be in focus for many investors, announcing another 1.5 billion euros in terms of the buyback. And we're going to be speaking to the head of IAG later in the show.
Just one of the themes of the week, buybacks. We'll certainly get to that conversation. Let's tell you about some of the other conversations we'll be having during today's programme. James Turner, BlackRock co-head of EMEA Fundamental Fixed Income. We'll get the fixed income perspective on what we've been hearing about UK politics. We'll also talk about the US, where that goes. Nina Skerro will be with us, CEBR Chief Executive. Certainly a focus as we head into that spring statement. The government's not giving us any sense that this is going to be a major fiscal event. But what do we need to know about the UK eco story? Max Kettner, HSBC Chief Multi-Asset Strategist, will be with us. That's around 8 o'clock UK time. Christophe Perriat, the Valeo CEO, will be with us during the programme as well.
All right, that's what's on the show. Let's take a look at what else we're watching out for today. At 9 a.m. London time, we've got Norway's Sovereign Wealth Fund releasing its annual report. Then we've got plenty of economic data with the ECB's 1- and 3-year CPI expectations also at 9 a.m. Then 1 p.m. London time, we get the latest German inflation data, expected to have held at 2.1%. Before we turn to the Bank of England at 1 p.m, Hugh Pill, the chief economist, speaking here on the UK and US economy at the Elgin Advisory and Society meeting. And then at 1:30 p.m. London time, it is the main data point of the week stateside. US PPI could suggest perhaps that core PCE deflator will come in hot for January, and that perhaps could dash hopes of rate cuts in the first half of the year, Tom.
Here's what else to think about this morning then. US and Iranian officials ended the latest round of nuclear talks in Geneva with no new deal, but agreed to reconvene as soon as next week. The two nations have been locked in a tense standoff over Iran's atomic activities, with the US massing military forces in the region and Iran refusing to allow its highly enriched uranium to be moved out of the country. Anthropic has rejected the Pentagon's latest offer to defuse a standoff over conditions the company has sought governing the use of its AI software by the military, escalating the standoff between the two parties ahead of a government deadline. The company continues to insist on two specific restrictions. It doesn't want its tech used for surveillance of US citizens or for autonomous lethal strikes without a human in the loop. And Netflix has dropped out of the battle to buy Warner Brothers, clearing the way for Paramount to clinch its $111 billion deal for historic Hollywood studio. Netflix said that while it believed its deal would have passed muster with regulators and created shareholder value, it didn't want to keep bidding. And you will notice, Anna and Lizzie, that investors in Netflix, who had never been much of a fan of this bid, have cheered this decision for Netflix to pull the curtain down on
What a
this
season
episode.
finale. Netflix is bigger, stronger, healthier. Paramount is richer, and that's the suitor that they've gone with in
Is
the
it
end.
richer and also better connected, I think is a question. There was a lot of lobbying, wasn't there, in Washington?
Yes, absolutely. And there's a lot of confidence as a result of that love in Washington that this deal will get done under Paramount. It seems, not least from the Paramount board themselves. They're so confident that they're going to be able to get regulatory approval for this, that they're paying a so-called ticking fee, 25 cents a share, to the shareholders of Warner Brothers for every quarter where this deal does not get done and does not deliver. So they're pretty sure that they have friends in all the right places and that this will come to pass.
Yes, and Netflix stock, since they announced their interest in taking over Warner Brothers, was down about 40%, and then, of course, aftermarket rallied on the back of this news. So we'll continue to watch that stock as well, and the broader impacts.
Yeah, coming up on the programme then, we check back in on the earnings story with British Airways parent company IAG. After their fourth quarter revenue numbers just came in, we'll be speaking to the firm's CEO, Luis Gallego, at 8:10 UK time. Transatlantic travel, oil prices, all of that very much in the mix. Plus, Bloomberg has learned that Equinix and Canada Pension Plan Investment Board, CPPIB, of course, are said to be nearing a $4 billion deal to acquire Atnos. That is a pan-Nordic data centre operator. Data centres, very newsworthy. We'll be speaking exclusively to the Equinix managing director for more on the possible transaction, and that coming up later on this morning. Up next, the Debt Management Office has announced the UK is set to slash gilt sales to its lowest in 3 years. We'll be talking all things fixed income with James Turner, BlackRock EMEA, head of global fixed income. That conversation coming up shortly. If you have questions, if you want to get involved in any of these conversations around this desk, IB plus BBTV Go. That is the functions used on the Bloomberg terminal. This is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance. Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise,
with some fun along the way.
This is Bloomberg Surveillance.
Earnings season is here.
Let's get back to the earnings story.
Get all the details that you're going to need to start the trade.
Bloomberg is first to break the numbers.
A bunch of earnings. Pretty Agricole.
Earnings from Heineken, ABN AMRO reporting as well.
Fantastic reporting from you and the team.
With the smartest insights.
We've delivered again record results.
If we take a step back and look at the yearly results, the income is stable.
Our earnings interviews continue. Lots of really contrasting conversations.
Continuing coverage on Bloomberg.
Welcome back. We are a little over 40 minutes from the opening trade this Friday. European futures pointing higher by a modest 0.1%. Still close to record levels, but it seems equity investors looking for the next catalyst.
Yeah, absolutely. And doing so with a smile on their faces, perhaps this morning, Friday the 27th of February. Let's turn our attention to what's happening in fixed income markets. Federal Reserve Bank of Chicago President Austin Goolsbee says interest rates could come down further in 2026 if there is more evidence of falling inflation. Joining us now is James Turner, EMEA Head of Global Fixed Income over at BlackRock. And very good to have you with us this Friday. Thanks for joining us. So, James, that quote from Goolsbee, sort of putting the focus on inflation, if inflation does this, we'll be able to cut rates more. To what extent is that still the dominant theme that you're watching? We have lots of guests come and talk to us and say, actually, we're focused more on the fiscal side of things, or we're focused on the AI software fallout. What's dominating the conversation in US fixed income markets?
I think from the point of view of rates, the inflation is really, I think, most of yesterday's story. I think actually it's been tamed generally. It's still going to come down. I don't think the tariff announcement is going to make too much difference to that. It's still on a controlled path. I think actually the bigger issue is actually employment. And particularly amongst youths and younger area of the population in the US, the unemployment there should be the focus. And I think that's the thing that's really allowing central bankers to say we need to reduce rates a little bit further, and we still expect a couple of rate cuts for the remainder of the year in the US, and still on a downward path from that point of view.
We were speaking to a guest yesterday who said that the reaction function at the Fed will be kind of asymmetric, and this is with and without wash, I think they were saying, that the Fed will be very alive to risks around the job market and will cut when they see them. They won't be quite so worried about inflation pickup. Are you in that kind of camp?
Yeah, I think that's exactly our view as well. Really, I think the thing that they have, an aim to improve employment, and one of those things that I think that's mostly the dominant theme that's going to affect the economy. When you look at actually where the inflation's come from, I think it's areas that actually aren't going to be particularly impacted whether you cut or raise rates. And so actually the impact of rates is going to be relatively limited there, but it'll be very helpful in terms of the employment market, and it really needs to be directed towards that. But it also comes to the point that actually, when we're looking at where we prefer to invest at the moment, it's not in duration, it's not in long-end rates, because I think there's still going to be some volatility, there's still going to be some noise around that. And so really, when we're looking at where we prefer to get our yield at the moment, and yields are very attractive still, we'd rather get it from sectors where we're taking a little bit of credit risk, a little bit of spread risk, but certainly more in the short and medium end of the curve and the belly of the curve.
Is there a contagion risk from what's happening in private credit with that focus on software?
I think probably in Europe, no, not so much, because when we look at the exposure to Europe in the public markets, and we look at the investment-grade corporate markets, we look at the high-yield markets, really there's very little exposure to software. It's single-digit, low percentages. I think one of the things that we need to be alive for, though, is that it is a time when spreads are a little bit tighter. There's less room for error when you're looking at credit at the moment. But having said that, it's really a time where there's going to be some winners and losers. There's going to be some clear winners from AI. I mean, you can look at banking sector as an example. You can look at utility sector as an example. All asset classes or sectors that are very well represented in Europe. So there's opportunities there, but there's clearly also going to be some losers. And I think one of that is we're working out which of the software companies are going to be most affected, and which are the ones that are going to continue on as normal.
Are you seeing that differentiation between the US and Europe then affecting flows? What's happening in terms of the flow show into European credit?
In all honesty, we haven't really seen a huge amount of differential in flows. I don't think it's like causing differential at the moment, because even when you look in US public markets, when you look at the software exposures or the AI exposures, it's mostly to the hyperscalers, it's to the larger companies, and actually I don't think people have concerns over those. I think it is more of a private credit and a senior loan exposures that people are worried about. And that could have an impact on those markets, but in the reality, I think it's contained within those markets at the moment.
I want to ask you about UK politics because we've just had this by-election in Gorton and Denton, the Green Party winning. The pound's already trimmed its gains. As we look ahead to May, who's worse for gilt, with the Greens or Reform?
Well, I think the one thing that we shouldn't be too is this is one by-election in a mid-term part of the political spectrum, and so we shouldn't read too much into one by-election. I think actually the bigger thing is how is the UK economy doing? Will we see growth from the UK economy? Certainly we've seen some better receipts in terms of, and I think there's some breathing space that the Chancellor has now because of some higher tax receipts. So I think the bigger focus will be on that rather than reading too much into one election result.
Well, we saw unemployment overshoot, inflation dropping. Is March live for the BOE?
It's a possibility. I think we haven't got a strong conviction either way, but I think certainly it doesn't change the trajectory of rates, that rates will continue to come down in the UK.
So if we're thinking about the gilt market and how it responds to the politics, yes, absolutely, it's one by-election, and the voting pattern perhaps doesn't reflect what's happening nationally anyway. Does that mean we would look for a sort of muted response in gilt markets today? Are they able to focus on the real economy? We also had some GfK numbers out this morning showing some weakness in consumer confidence. I mean, where is the gilt market going to focus in the short term?
I think actually it'll look through this result. I don't think it will be a huge impact today. I think what we need to really do is, and we must remember that when we've looked at 25 and if we've learned something from 25, what we really need to do is look at the longer term view. We don't need to be swung around or whipsawed by noise in the markets. We need to look at the longer term view and think actually, and particularly when we look at Europe as a whole, the economy is still doing pretty well. We've got stimulus coming in from Germany. We've got inflation under control. We've got a very good central bank path in terms of rates remaining stable. And so a very, very positive environment in total for fixed income.
Yeah, can fixed income investors do that? Because it seems it doesn't take much for the politics in the UK or the politics in France to suddenly become the epicentre of everything. And you know, you see fixed income markets moving around on every little bit of political news flow. Can they step back and reflect on and focus on those bigger picture?
I think it's beholden on us to do that, and I think it's beholden on the best of investors to do that, actually, to look through and just remember that actually you want to sort from the noise the actual ultimate story of generating income, which is what people want at the moment, what's available. And certainly what's available when you look at the fundamentals of things like corporate credit is extremely attractive. EMD is also an attractive area, high yield still attractive. Generating that income that I think is available for the first time in many decades that people want from the yields you can get.
And the narrative around Europe is still constructive when it comes to credit, private credit, when it comes to a fixed income, I should say, and corporate credit.
Yes, I mean, very much so. If you look at the way companies have managed their balance sheets, generally there's an improvement in balance sheets. I think you have to be careful because I think there's going to be bigger dispersion than ever, and you can already see it in the market. If you look at the average spread, there's not much you can buy around the average spread. There's a lot you can buy either way of it, but that means it's a time really where there's dispersion, but also you need to make sure you get your credit selection right because there is much less room for error when you've got these spreads as they are. But having said that, if you get it right, you're going to compound that high levels of income you're getting from the yield. It's going to be a very good environment for fixed income investors still.
James, thank you very much. Thank you for joining us. James Turner, EMEA Head of Global Fixed Income at BlackRock. We have plenty of time to focus on UK themes, don't we, with our special coverage coming up next week.
I'm going to be in the cold, cast out while you two are in the studio.
I was over in Sweden where it's -6, but wasn't it 17 degrees on Tuesday or something?
It was a lovely
day. You could get
day.
a balmy, sunny day.
Okay, nobody tell anyone I haven't done a stint in the cold for a very long time. Long may that remain. Coming up on the programme, the Green Party wins a special election for a Manchester seat in the House of Commons. Where does that leave Prime Minister Keir Starmer? We've talked a bit about the gilt markets and the pound and how that's responded. We'll get that big picture macro take on the UK economy. Nina Scarrow joins us next. This is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burrow.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Peru is maybe first country inspired to me to how can I use the different ingredients. First time I went to Peru, trying to culture food. I never had this ingredients never used in Japan. Kind of like a wow, you know, and cilantros, chili, garlic, and olive oils. It's a lot of good seafoods, complete a different way. Example, they have the fresh fish, but Japan, the fresh fish uses sashimi. But Peru use fresh fish, make the called ceviche, cooked with the lemon juice. You never use the soy sauce. First time I eat this, kind of the wow. So then after this one, my open eye more, my cooking style that change, combined to Japanese style and another country food, then make a novel style.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersecci in Davos, Switzerland, and this is Bloomberg.
Minutes from the start of the opening trade, the futures picture looks pretty tepid here in Europe this morning. The Stoxx 50 only up 0.1%. The FTSE set to outperform, and the CAC 40 also looking rosy, but really not a whole lot of movement this Friday morning.
But if we get any, could be to the upside. Let's have a look at where we are on bond markets. Of course, we'll be focused on gilt markets. Our last guest telling us he thought that gilts will look through the political news coming through from one particular constituency here in the UK, in Manchester. But we'll see. That we will have to wait for half an hour until we get the open of those gilt markets. So we'll look for that. In the meantime, the rest of the European bond market story looks fairly unmoved, Lizzie.
Yeah, and in the meantime, the pound pairing the gains that it had seen following some investor relief that the Reform Party did not win the Gorton and Denton by-election. Instead, the Green Party won the special election for this Manchester seat in the House of Commons, underscoring the threat posed to UK Prime Minister Keir Starmer's governing Labour Party on its left flank. Well, joining us now to discuss is Nina Skerro, Chief Executive of the Centre for Economics and Business Research. Morning, Nina. Nice to see you. So this is the first time that Gorton's not going to be represented by Labour in more than 90 years in the House of Commons. Is the Greens' victory going to pull Labour to the left and encourage more fiscal loosening?
Well, that is the big question, sort of, as I try to process what this might mean in the longer term for our UK outlook. On one hand, you might say, you know, it's one by-election, let's not read too much into it. But the problem is that this is a second major problematic situation for the Prime Minister in almost as many weeks. He's only just come out quite bruised of the Mendelssohn situation. And now you have this really, really disappointing performance for the party. So it does seem very likely that following some more elections we have coming in the UK in May, that his position is very uncertain, and you could very much lead into it that the fact that they lost to the Greens, not to Reform, that the question is going to become, hold on, we've kind of been trying to be centrist to fend off that threat from the right. Should we actually be more extreme on the left to fend off the threat from parties with more similar ideologies to our own?
Exactly, but what about that threat from the right? Is Reform looking more market-friendly? Because it certainly seems like it's trying to. You know, they've got all of these Conservatives joining their ranks. They're trying to look like they have that experience in the party, even if they're having to import it. And, I mean, I was speaking to Richard Tice on Bloomberg TV. He was pushing the idea that they'll balance the books and they won't bring about a Liz Truss moment. Do you buy that?
Well, the party is definitely seeming to professionalize, to build as an organization that's preparing to be a major party in the UK. I think they are a little bit harder to predict because they are newer. They're less well organized than somebody like the Conservatives, who really runs sort of I think the comparison would be, one is like a large corporate with established comms channels, established practices. Businesses know how to network, how to lobby. Reforms is a little bit more sort of like the scrappy startup, and it's a little bit harder to predict their next move. But for those people that have been saying, yeah, they're polling really well, but is that real support? Is that just dissatisfaction with how the UK is going more generally? This is going to pour cold water on that argument. I mean, they do seem like a genuine political force.
And Nina, the irony is that in terms of the fiscal headroom that the Chancellor has, that has increased. In terms of the tax receipts, those have increased. So at least on those metrics, things are looking a little brighter for a UK Chancellor that you are suggesting could be out of office potentially later this year. At least the pressure, you've said, will be on the leadership. How vulnerable is this UK economy to any change at the top post-May?
I don't think the UK economy or the fiscal picture are facing an immediate existential threat. I think that's what a lot of people mean when they say things have actually stabilized. We have the spring statement coming up next week, things to be sort of steady. But growth has been extremely low. So I think what people are describing as a pretty good situation is really kind of the absence of a disaster. So I would say things have stabilized, but sort of, looking at a 2, 3, 4 year horizon, growth needs to come from somewhere if tax receipts are going to continue coming in.
How worried are you about graduate unemployment?
Well, pretty worried, because that's kind of one problem that the UK hasn't had in a little while. The labour market has remained very resilient until now. And there are big questions on a global level about what young people going into employment, how that's impacted by AI. Some people, some industries are saying we're going to hire less because we're very hopeful that we can replace some of that junior level work. So I think there's that story, which is not a UK story. That's just a global story. But in the UK, the picture seems to be softening as well.
Just on AI, are you seeing a lack of productivity gains that had been promised, but an impact on the workforce?
I think there are a lot of businesses that are kind of making their plans for hiring now based on a benefit that they expect in the future. So businesses in the UK have been under a lot of pressure from taxation, from employer NICs, from the higher national living wage. And a lot of them are taking a leap. I would say, well, are we actually going to need the people that we would hire now in 2, 3 years' time? Let's take a more cautious approach. Let's not overhire. Let's actually maybe underhire, and kind of putting a lot of hope in that.
And Nina, you listed there some of the reasons why people point to the politics and say there was a political effect, or the decisions that the Labour Party made around NICs, for example, is having an impact on the labour market, and some economists do make that link. On the other side, you could say, well, with minimum wage going higher, surely that could be positive for growth if that money goes out into the economy and is spent. Did that never happen? That was the hope that the Labour Party had at the time.
I'm firmly in the former camp. The minimum wage is just too high. If you look at it where it stands relative to the average wage, it's just too high. I'm not saying it should be zero, but it's just gotten completely away from a reasonable level where it's protecting workers, and I think it's firmly long-term dampening employment prospects and leading employers to decisions like we're maybe seeing now coming online, where they're actually very, very hesitant to hire.
Okay, and so then as we look ahead to the spring statement, I mean, probably no change on that particular front. We're being led to believe that there's not going to be any change on anything, really.
She's calling it a spring forecast, apparently, internally at the Treasury.
Yes, giving it a new name, rebranding it to kind of downplay our expectations. So we don't expect any tax changes then. We don't expect any spending changes, particularly, although there's been a lot of heat and noise created around student debt. Is that going to be an area? What should we look for next week when we get this spring, whatever it is?
I wouldn't actually expect any surprises. I think if she was actually preparing anything, we would have probably heard whispers of it in the press already. I think even though it might feel like a long time for a lot of policymakers, the mini budget actually feels very recent, and I think there's a lot of hesitance to surprise. So I genuinely think that if we were going to get anything on any policy area, we would have kind of softly seen it reported already. So I really think that she's going to report on the OBR forecast, which will still be interesting, even though the OBR is not making a formal judgment. It's not going to take a lot for the rest of us to look at what they're publishing and kind of say what their judgment would have been if they were formally making one. So there's still going to be some publications of interest, but I am really expecting her to stand up, share the forecast, say that some recent receipts have been good, that the OBR is confident, and and leave it there and see if she has another budget to come back to later in the year.
And that's it.
You say the Liz Truss moment's still fresh in the memory. I wonder how much space there is for Rachel Reeves to break the fiscal rules. It kind of comes back to my original question about whether Labour could be pulled to the left by the Greens, but also with the Conservatives in mind. I was speaking to an economist who's been talking to them, and this economist was floating the idea that the Conservatives could get away with tax cuts if it was part of a real growth plan, right? One that the market believed. Would the bond vigilantes forgive that?
I think it would also depend on what the OBR's judgment would be on whatever policy was being put forward. OBR in more recent years has shown a greater level of comfort when making judgment calls on how much economic growth is going to be supported by a fiscal policy. So, for example, we saw this when additional paid-for childcare hours were introduced, and there was a strong suggestion and a comfort with that was going to really support labor market activity and therefore lead to growth, and that therefore that was kind of a good type of spending. So I think there would be an element of judgment there, but I do think there probably are some policies where they would see tax cuts or additional spending in areas, and that the market would accept that, especially given that things have been steady for a little while.
Nina, where does this all leave the BOE? Do they cut in March? And if so, do they follow that up with another cut by the end of this year? What expectations do you have for the Bank of England in terms of their response?
Our expectations are yes and yes in March and then in June. We were actually already expecting that before their last set of minutes. And then after that, we were really expecting that. There was in some of the interviews and some of the commentaries a little bit of an acknowledgement that there was some political unrest possibly coming. That actually then died down. Of course, we mentioned the by-election political sort of upheaval might be now coming. But at the moment, we are expecting 2 more cuts this year, and we're pretty comfortable with that view.
Nina, thank you very much indeed, as ever. Nina Scarrow, Chief Executive of the Centre for Economics and Business Research. Next week, we will have special coverage of that UK Chancellor spring statement, or forecast, potentially is how they're going to rebrand it. Join us on Tuesday for that. And returning to credit, where concerns are mounting, California pension fund giant CalPERS stands firm in its private equity conviction.
We had an 8% allocation to private credit, and I think we're hovering around 4%. And we believe that book is diversified enough that, the team is really not too concerned about the software exposure.
We'll bring you more on those credit jitters next. This is Bloomberg.
A cidade estava sitiada.
Isso, ao começo, eu também não sabia o que fazer. Foi a mais terrível que eu passei na minha vida.
Eu temo, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Just over 16 minutes away from the opening trade. Here's what the European futures picture's looking like. Not much doing, really. Eurostoxx 50 futures up 0.2%. A brighter picture for Paris and London this morning. But if we flip the board over and we can take a look at how we're faring towards the Wall Street Open, futures there are to the downside. We have had those tech results, CoreWeave shares falling in late trading. By contrast, Dell shares jumping. But beating both the US and Europe in February on this last trading day of the month as we look back across February. Asia, Tom.
We're showing you the Asian benchmark, which on an intraday basis is not particularly exciting. But it is worth noting that it is set, nonetheless, for its best February on record, the MSCI Asia Pacific. The Kospi, which is down 1% in the session today, not reflecting really what's been going on. It's up 20%, Anna, in the month of February. This is the last trading day, of course, of the month. The Kospi is up about 50% year to date because that shift and that pivot towards the hardware themes and the tech themes and the chip themes of Asia has lifted the benchmark broadly. Again, potentially record February.
Record. And for the record goes back to 1998. So, yeah, it's a decent amount of time. So that's what we have in terms of the Asian equity session. Let's get to some breaking news coming through from France. The French CPI numbers just breaking. The harmonised CPI rising 1.1% year on year. The estimate was 0.8% to the upside. Now, that could set some cats amongst pigeons because the story, Lizzie, around inflation in the Eurozone has been that there isn't an inflation problem and that the ECB's on hold for a long time.
And it's in a good place.
And it's in a good place. And maybe that doesn't change, it's just one bit of data from one part of the Eurozone. But certainly the euro is responding, as we see there, up by 0.2% so far. A little bit of a spike up, Tom, in the euro this morning.
Yeah, 1.90, bit of a move higher on that, slightly stickier than expected French inflation. Let's get to what's happening on the deals front. And this, of course, is the one that's had us on the edge of our seats. It is the Netflix deal, dropping out of the battle to buy Warner Brothers, clearing the way then for Paramount to clinch that deal. Shares in the streaming giant soaring in after-hours trade, while Warner slid. Let's bring in Manuel Baigorri, Bloomberg's deals reporter. Manuel, you've been following this very closely. Netflix open with this deal. Why has it decided then to bring the curtain down on its bid for Warner Brothers?
Yes, Tom, and as you well said, this deal has kept us on the edge for quite some time, isn't it? Fascinating story to cover and to follow in a really amazing saga here. I mean, Netflix just came to the conclusion that it was better for them to walk away and let Paramount negotiate the deal with Warner Brothers and see whether or not they can get regulatory approvals. Paramount came back with a knockout offer, $31 a share, plus a few addendums to sweeten the deal. In the potential transaction, Warner Brothers and the company Warner Brothers had to consider that seriously and came to the conclusion that it was a superior bid for the shareholders and for the company as a whole. So now remains to be seen what the next steps will be. But for Netflix, definitely, it's been a bidding war, tremendous bidding war after the agreed deal they had on the table with Warner Brothers in December. And obviously, they came to the conclusion that increasing the offer further could jeopardize perhaps its own financials. So they decided to drop out.
What does this mean for Warner Brothers news divisions then, Manuel? Because actually, in the end, a lot of the competition between the two sides came down to the value that you put on not the new, sparkly, shiny streaming assets, but some of the older, more traditional media.
Yes, that's a very good point, Anna. Remains to be seen the different assets within the group and how that it's gonna potentially play out on the transaction. I think one step at a time now. The companies need to get regulatory clearance. That's gonna take several months, if no quarters or even more, potentially depending on how smooth the approvals go, especially on the antitrust side of things. We may expect a lot of politicians, regulators weighing and industry leaders as well. But for the news side, definitely, obviously, an influential side of brands there. And I'm sure everybody will have their own views as in how and when those assets may come to play and how it could also be integrated in the new combined entity.
OK, Manuel, thank you very much. Thanks for joining us. Our deals reporter, Manuel Bagori. Joining us now, broadening our lens, Markets Live Executive Editor Mark Cudmore with 3 minutes on the markets. And Mark, we have not mentioned, perhaps as much as we should have done so far this hour, oil prices up by 0.7% right now on Brent, 71.22 as I speak to you. Every weekend, it seems, over the last month or so, we go into the weekend a little tense, a little nervous about what might happen in the Middle East. What's your thinking around oil and the Middle East outlook?
Yeah, absolutely, Anna. That is the setup that every weekend we've got to be prepared now. It feels like for the last year we've had to be prepared for every weekend. If it wasn't Iran, it might be some other Trump action out there. That said, it seems like the expectation in the market for any serious escalation this weekend is very low. That means, obviously, if there is something that happens, it will have an outsized reaction in kind of when markets open on Monday. So we're all on alert, but not expecting anything. That's what we're kind of prepared for the weekend. I think at the moment, there's a lot of turmoil going on underneath the hood in markets, which we've talked about a lot, mainly driven by the kind of evolving AI trade. But from a macro lens, markets have been incredibly stable recently. I'm finding it very uninspiring this Friday. You know, you've got rates markets have been in a tight range for a long while. FX markets going nowhere again. You know, compared to the start of last year where we had really, really exciting macro markets again in terms of the FX and rate sides, you know, with the big dollar downtrend. It looked like the start of the year we're going to get another leg in that. We did get one more leg, but we've kind of paused again. So I think we're waiting for the next big macro trigger. And I think everyone's wondering whether that coincides with a more extended equities sell-off or whether it's the next major leg higher in US stocks.
Mark, we've been reflecting that it's been a record February for Asian stocks, but the Kospi selling off. Is that all there is, at least for Korea?
I mean, I think the Kospi was down 1% today, which relative to like whatever it was, 300% in the last year or something, and 50% so far year to date is kind of irrelevant. That's the kind of move it makes in a few seconds at the moment nowadays. We did actually think that the Bloomberg terminal might be broken when we saw it was negative prices on Kospi. It is such a rare event. You know, it's just, you don't normally see that anymore. But no, look, I think everyone knows why the Kospi trade's doing well. The index, it's got to be important, is really dominated by two stocks, SK Hynix and Samsung. They are great companies that are going to, everyone expects to benefit from the AI boom. I'm in that camp as well. The stock market's not overly expensive. These stocks aren't overly expensive. It is a sustainable trade, but might have got a little bit too carried away in the short term. So, you know, just over 50% already in the first 2 months of the year is just too much, too quickly. Even if longer term, it's probably quite a good region.
Mark, what's the result going to be? Ireland, Wales.
We've got another week. I'm so upset. This weekend would be much easier if I had the rugby to look forward to. Part of the reason I'm so disappointed this Friday is there's no Six Nation. But of course Ireland are going to win. It's not that this Ireland team are as good as they should be, despite the record victory against England at Twickenham last week. But, you know, fortunately, Wales are really quite useless at the moment, with apologies to all Welsh people out there. They really are terrible at rugby.
I don't think we heard. Did we hear that record victory against Twickenham, against England at Twickenham? Yeah, we'll look past that, of course, that brutal result, and well earned, of course, by Ireland. Mark, thank you very much indeed. Bloomberg Markets Live Executive Editor Mark Cudmore. Remember, you can get up-to-date analysis and insight from Mark and the rest of the team. Just go to MLive Go on your terminal. Let's get your stocks to watch now with Charlie Wells. Charlie.
Good morning, Tom. So it's really earnings and banks that I've got my eye on this morning, and I want to start with Delivery Hero because we've been talking a lot this week about delivery companies, not just in Europe, but also in the United States. You can see here year to date the performance of Delivery Hero, that is in the orange there, down significantly since the start of the year, along with Uber, along with DoorDash. Let's see what happens because Delivery Hero delivered an earnings report that missed expectations, and they've been under a lot of pressure, right? They've been under a lot of pressure because of these two here, a lot of competition across the globe. They've been under pressure from investors to divest, to exit some of their markets. But there has also been this issue of that AI scare trade. We heard a lot about this issue of potential white-collar layoffs and what that could mean to these services that we know a lot of white-collar workers do use. There's been pushback on that, but let's watch how the market reacts this morning. We have to talk about banks because we've been talking a lot about Market Financial Solutions, that non-bank lender that collapsed into a form of insolvency on Wednesday. And what we were hearing about was exposure that some of these European banks, Santander, Barclays, had to Market Financial Solutions, providing some financing to them to the tune of hundreds of millions of pounds, according to a judge. So we're going to watch that. Banks have been performing well this year. They've been performing well over the past few days. But Jefferies, which was also kind of tied up in some of the exposure to MFS, that was down yesterday. So let's see how that happens. Montepaschi as well. They have a statement saying that they're going to be returning 100% of net income to investors over the next 5 or so years. That is a show of force for a bank that is integrating Mediobanca as well.
Charlie, thank you. Charlie Wells. A quick moment to reflect on that inflation print we had out of France, because it was stronger than expected, and it has had some market impact. The euro pushed up by 0.2%, so it is up against the US dollar as a result, as we just, lightly put inflation in the Eurozone back on the agenda. Bond markets did see some response. We saw yields go higher, but that was kind of short-lived, now pretty flat again.
Yeah, it seems unlikely to change the calculus for the ECB, but it's a reminder that maybe in some areas there's a little bit move higher.
And somewhat worried about disinflation in the Eurozone. So
is that still to come? We'll see, Coming up on the programme then, we will bring you the start of European trading day. Futures have been pointing a little stronger this Friday morning. We'll be back with the market open. This is Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
You know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Bringing you
you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Welcome back, everybody. A few minutes to go until the start of cash equities trading here in Europe. This is the session from the United States yesterday, and some of this volatility during the US session in the early part of their trading day, we captured in our European session. So we're sort of through that. Some of that was driven by Iran and by oil prices. Some of that news flow. We've got another meeting taking place in another week on the subject of Iran. So does that mean we put that to one side for the weekend? We'll see. Mark Cudmore telling us that that is still the big risk that markets are very much alert to as we head further into Friday and into the weekend. So that was volatile yesterday in the US morning session. The afternoon looked relatively a little calmer, perhaps, but a little bit of upside may be coming through by the close. And so, Tom, the European futures picture looks a little positive.
It looks like it needs another catalyst, doesn't it, in terms of the European equities picture. But the story remains that European stocks have outperformed US stocks year to date. Asia, of course, has outperformed Europe. But the upside is, it seems, there for European stocks, grinding higher, pointing higher by about 0.1%. Here in the UK, the FTSE 100 may be reflecting on some of the political risk that's coming through, but pointing to upside nonetheless, up 15 points so far in terms of build-up to the open. DAX futures looking to add 24 points, pointing higher by about 0.1%. Lizzie, what are you looking at?
Well, I'm focused on the earnings that we've had out this morning. I'll start in Anna's favourite sector, cement. Holcim results out this morning saying that they expect profit to increase this year. They're seeing growing pressure on the building sector globally to decarbonise, but that boosting demand for their sustainable products. Also looking at BASF out of Germany, expecting roughly flat earnings this year, and Swiss Re in insurance out of Switzerland announcing a share buyback and increased full-year profit. So just a few more stocks to keep on our radar this morning, Anna, as we inch towards the market open.
Yes, edging towards the market open. I take it entirely as a compliment that everybody thinks I'm obsessed with the real economy and keeping my feet firmly on the ground. Let us have a look how these European equity markets open up then this Friday morning. The FTSE 100 out of the gates with a little bit of upside. Maybe that is all we get this morning, up by 0.1%. The STOXX 600 as a whole then pretty flat. We don't have a huge amount of important data points coming through. We haven't had this week. Next week starts to look a little busier. Certainly the non-farm payrolls looms on Friday, and we're starting to see options pricing around that. So the market is starting to think ahead to that macro theme a little later on. We're also gearing up for a weekend where we'll watch the news flow with regard to Iran very closely, of course. The CAC 40 then down by 0.1%. The IBEX down by 0.25%. Tom, do you see anything exciting in the sector's picture?
Top of the list in terms of your sectors, basic resources up 2%. You're seeing gold prices higher. Copper is higher by 1%, a little over 1% so far in the session. So that's feeding into the basic resources. Modest optimism is coming through. Top of your list in terms of sectors. Tech, interestingly, is up 0.2%. On the downside, utilities, typically, of course, a safe haven, currently the biggest loser on a sector-by-sector basis, down 0.7%, followed by media, travel and leisure down 0.5%. That is the sector breakdown. Most sectors in negative territory so far, but of course we continue to see the pricing reflect. Lizzie.
Well, I'm just focusing on those earnings stories that I had highlighted earlier. A few of them still waiting to open, but IAG shares down 0.4%. Rightmove up nearly 5%. Spent a lot of time on that website, waste a lot of my time, but Rightmove there, despite all of the AI worries that we've been talking about, a nice performance there this morning from Rightmove. I've also got an eye on the gambling stocks because you had that flutter, tepid US forecast. So I've got an eye on Entain. Those shares down 2.8% at the open.
Yeah, absolutely. And Flutter yet to open. So we'll keep an eye on that one. And that was a sector that was doing really well yesterday. So we'll see what's happening there. Let's talk about the broader markets then and asset allocation right now. HSBC strategists have cut their US equity overweight in half, rotating some of that allocation into emerging markets and to Europe amid strong economic momentum. The team, led by Max Kettner, remains firmly risk-on, citing an increase in key cyclical indicators such as spending and manufacturing in the last 2 months. Max joins us now, Chief Multi-Asset Strategist at HSBC. I hope that was all correct, what I said there.
That was very correct.
Okay,
I
good.
looked at it, I was like, wow, did I write that?
It always makes me slightly nervous talking about a person when the person is sitting next to me. So that's good. I'm glad that was all correct. So tell us a little about what is animating you about Europe and making you dial back exposure in the States.
Well, it's 8 a.m. There's very little that animates me at 8 a.m., to be honest. You know, when you guys were saying, does Tom see anything interesting, I thought you'd introduce me, and I was like, wow, that's already sad if I'm the interesting thing. But luckily, that's not the case. No, what's animating us on that is... I think we're talking probably a little bit too much about AI, right? The story of, obviously, this week was this Citrini Substack. And we're talking about, is AI disinflationary? Is it inflationary? What's the future in 5 years or 5 to 10 years going to look like under AI? You know, what's the next trades? You just said, right, we had a sector yesterday that was up. Now it's down the most. So we have this really weird environment where just day by day is a new trend. And every morning you wake up and it's like, right, what's going to be the topic du jour today? And I think we're probably missing that under the hood, there is some proper cyclical recovery going on, right? You look at PMIs, just simple PMIs, or you look at new orders over inventories, you look at the most open, the most manufacturing-driven economies, look at Sweden, Taiwan, Korea, you know, the likes of even the Netherlands, Czech, right? The really open, the smaller, the manufacturing-driven economies. All of them actually have been starting to see a real pickup in the last 2 months. And that's, I think, what's a little underappreciated, particularly by US rates now. I think we're pricing a little bit too much of this.
Yeah.
Oh, my God, AI is going to be disinflationary already now. And we're going to see, we'll have to see even more rate cuts now immediately because of AI disinflation. And we're ignoring that under the hood, there is a sort of proper textbook-style cyclical recovery.
Okay, so that's all positive. But how much of that is that you mentioned some European countries, you also mentioned some in Asia, and we've got the MSCI Asia-Pacific, I think, having its best February ever, or since the records began, 1998, many years ago. So that's all really good for Asia. Is it as good for Europe? Can it be as good for Europe, or is Asia going to lead on this?
I think it is. I think for Europe, you know, it depends on what sectors you're looking at, right? Is that really the sort of all go really into in the all clear for the autos, for the chemicals? I'm not sure. But if you look at the likes of the banks, right, SX7E, I mean, you're really just along the level of the yield curve. So even if the yield curve just stays where it is, if it doesn't steepen much further, even if it does that, and it just stays as steep as it is, you know, that's really good for the mostly retail and corporate-driven banks. If you look at industrials, look at SXNP, you know, you've got your cap goods in there, so if manufacturing does pick up, you're long that theme. You've got your infrastructure names in there, so if we do see a positive surprise from, let's say, German infrastructure stimulus, maybe some of the order books going up, you're long that. You've got the defense names in there, right, so you've got some sort of geopolitical hedge in there. So frankly, there's, like, you look at the industrials in particular and the industrial goods and services in Europe, you're long a couple of themes with just being long one sector. That's really positive.
Max, banks, industrials, infrastructure, defence, they're quite consensus. Does that worry you?
No, because I think when we look at the earnings side of things, right, and the earnings upgrades of things, side of things, I think that is still going so strong, and particularly I think on the industrial side, where I would be worried is if I say, right, I'm just going to go long defence. I'm just playing this, right? Because I know that, you know, something in geopolitics will flare up, and therefore, you know, I want to be only long that theme. That's, I think, where I'd be a bit more cautious, right? But the good thing, again, right, with industrials, you're not just long defence, you're long the cap goods, you're long the infrastructure theme as well. So you're long the miners as well, right? The metals and mining is in there as well. So if we do see some supply-driven uptick in metals prices as well, you're long that as well. So to me, I don't think it is it's an issue to be a consensus there, because you're long so many themes in just one sector that actually, yeah, if one of them, let's say if defense doesn't work anymore for a couple of weeks, something else might pick up. The miners might be picking up because metals prices go up.
Just help me understand the thesis around the US then and cutting that exposure, because we had the Fed expected to cut another 2 times. That's the market price. And you've got the fiscal stimulus, the tax cuts coming through. You've got the lead up to the midterm elections. You've got David Sachs, who's the AI czar to President Trump, saying you could see 4, 5, 6% growth in 2026. What happened to that?
So to me, we were 50% equities overweight in the US and 50 outside of the US. And now it's sort of 25-75. Right? It's not like we're, oh, God, I'm so bearish US now. It's just that where do I, if I see under the hood that cyclical uptick in growth now happening, where do I want to play that best? Is that really played best in the US, in industrials, or is it played best maybe in Europe? Again, where you look at the industrials and you long multiple themes. You know, you go into emerging markets, you go into maybe something like Brazil, like LATAM, right, where you long the materials, the energy, the financials, if you look at Brazil, right, where it's a much cleaner cyclical, much cleaner value exposure compared to if I just go long the US now. And the issue, I guess, in the US as well is that the cyclicals have rallied already quite a bit, right? Whereas there, it's probably tougher to get the same kind of exposure. I do think when you look at it in the US, you look at what we call the lower end of the K-shaped sectors. Think your transport, your US retail, XRT, your home builders, XHB, right? Like all those, I think really you want to go long the cyclicals in the US, but really the ones that are most likely going to benefit from now the pass-through of that OBBB stimulus in the next couple of months.
OK, Max, I'm going to ask you my questions in just a minute. Hold that thought. Max Kettner, Chief Multi-Asset Strategist at HSBC, will be back with us shortly. But coming up on the programme, British Airways owner IAG reporting fourth quarter revenue that missed estimates. And we're going to hear from the CEO, Luis Gallego. That interview next. This is Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and centre.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise.
With some fun along the way.
This is Bloomberg Surveillance.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Hazla Amin in Davos, Switzerland, and this is Bloomberg.
Welcome back. This is the opening trade. 11 minutes past 8, 11 minutes into our trading session. Pretty flat at the overall market level for European stocks this morning, up by 0.1% on the Stoxx 600. Basic resources doing pretty well, and we have some movement higher in some of the commodity prices, the likes of silver, for example, and that seems to be helping that sector. Real estate also a gainer to the downside. Media, travel and leisure also weaker. A lot of that has to do with the leisure side, though, the gaming side, where we see a bit of weakness. But aviation also in focus, Lizzie.
Yes, turning back to earnings this morning, British Airways owner IAG reporting revenue for the fourth quarter that missed the average analyst estimate and announced another €1.5 billion share buyback. Joining us now is the CEO of International Airlines Group, Luis Gallego. Luis, thank you so much for making time for us this morning. So you've got a chunky buyback here, but also you're looking at a rebound in transatlantic travel. Just talk us about how the geopolitical tensions and the tariff uncertainty might affect that rebound in travel.
Good morning. So thank you for having me today here. I think that we have seen since the third quarter of last year a rebound in the North Atlantic demand. We have seen, in particular in the case of VA, a strong premium leisure demand that we didn't have before, and also the non-premium leisure is working well. So U.S. point of sale is recovering. Business traffic is also strong, both point of sale UK and point of sale US. So we are positive about the demand this year in North Atlantic.
What risk do you see going forward then? What's your big message to shareholders this quarter?
No, I think the message is that we had very strong results in 2025. We are delivering what we promised. We did it even before that we said to the market previously. The demand that we see for this year continues strong. As I said, business traffic continues coming back. Latin America is also another market that is performing very well. So positive outlook. The first half of the year is on plan. So we are positive.
Luis, good morning. Are you still seeing more demand then for the front end of the plane, the business class flights, versus the back end, the economy seats? And does that continue in 2026? How is that picture shaping up?
No, yes. As I said, business traffic is coming back. That's important for us. The profile of the bookings is different because usually business traffic they book late. But the non-premium cabin are performing better than they were performing in the third quarter of last year, and we continue with a strong premium leisure demand. So in general, we have a positive view for the year.
And specifically, you talked about that important transatlantic route, specifically for BA. Can you give us a bit more granularity in terms of how you think that demand picture evolves through 2026? You're seeing an uptick. How confident are you that you continue to see demand there, and kind of what metrics are you and the team looking at?
No, when we see what we have booked for the first quarter, we have a lot of certainty of what is happening. Second quarter and third quarter, the visibility that we have is only 30% book. So, but with that information that we have today, what we see is that, as I said before, we are on plan. Business traffic is coming, and we continue with a strong premium leisure demand. So I think we are in good shape.
Just one more question on the transatlantic, Luis, and then I promise we will move on to other topics. But I'm intrigued because you talked about lots of different bits doing well. What about the UK end of the transatlantic routes, or maybe even the wider European willingness or desire in the leisure cabin to go to the United States? Did that dip, and is it still reduced, or has it bounced back?
No, I think the UK, for example, business point of sale in UK is working very well. We see that for the summer, London market is reducing a little, but we are offsetting that with a lot of transfer traffic to other regions in Europe, in particular to the south.
Luis, I was speaking to your CFO, Nicholas Cadbury, last year, and we were talking about the TAP deal. He said that you would only want a majority ownership situation. How are negotiations going? Are you getting what you want?
Sorry, you asked about TAP?
Yes.
Yes, sorry. No, yes, in the TAP, as you know, we are in the process, but we have a model in the group that we want to manage the assets that we have, the different airlines that we have, and that's something we are talking with the government to see if there is an opportunity to do that. So we need to take a decision if we go ahead or not. We have until April to present a non-binding offer, and that's what we are considering now.
Can I ask you about oil prices, Luis? I mean, a lot of focus on geopolitics, of course, and none of us have complete visibility as to what happens there. With that in mind, how are you hedging oil at this point?
Yes, we have a policy that we changed after COVID, that we hedge the next 2 years. For sure, we hedge more the next 2 quarters. But we follow that policy. We are in a very volatile environment, but we are confident that with this hedging policy, we can have certainty about what we are going to have this year.
OK, Luis Gallego, CEO of International Airlines Group. Thank you very much indeed for your time on the back of those results. Talking of corporate news, we have a redhead crossing the terminal right now. This is in the deal space around data centres. And this is Canada's Pension Plan Investment Board, the Canada Pension Plan Investment Board, teaming up with Equinix, the data centre provider, to acquire atNorth Holdings. That's a pan-Nordic data centre operator owned by Partners Group Holding, based over in Iceland. They have data centres in Iceland, Denmark, Sweden, the Nordics, basically Finland as well. So that is a, $4 billion deal. We're going to be speaking to Regina Dahlstrom, the managing director at Equinix, for an exclusive conversation about that deal. That's at 8:45 a.m. London time. A lot of questions on the data centre space, particularly, of course, that demand coming through from AI and hyperscalers.
Let's check in on the Core 6 this morning, how they're holding up as we start this Friday morning. We have, of course, the likes of Rheinmetall and Novo Nordisk, LVMH, ASML here. A mixed bag, really. The underperformer seems to be LVMH this Friday morning. But let's dive into the individual stocks on the move with Charlie Wells.
Good morning, Lizzie. So it's a Friday, and I know people are going to start thinking about real estate. I do on the weekend because I start thinking about where I want to live. Let's talk about Rightmove. They're up 4.3%. They had a really solid earnings report. They've got a return to shareholders as well. Also in the backdrop of a property market that is looking like it's turning a corner here in the UK. That's on the residential side. Let's take a look at Merlin, which is on the commercial side, and they are doing fairly well as well. They also had a pretty solid report, up over 4% in that commercial real estate space. Now, there's been a really interesting, different story moving out of real estate and into online sports betting. This has been a space where there's been a lot of excitement, but there's also been a lot of competition. You can take a look at Flutter Entertainment. So they are dual listed here in London, but also in New York. They put out a tepid forecast yesterday for the United States, down over 10% this morning. So a lot of pressure there as the markets start to open and start to digest that forecast. Let's take a look at another stock that is down this morning. That is Teleperformance. That is the French outsourcing company. They provide a lot of that kind of customer support that you get, down about 8% this morning. If you think about customer support, you start to think about AI, don't you? Because that is a technology that's really starting to compete here. They were talking about some leadership changes. So again, under pressure this morning. And let's end with a German chemicals company, BASF. That has also been a space that's been under a lot of pressure. The continent really is, the world is really awash in chemicals, as they say, down about 2%. They said they're going to have a pretty soft year, pretty tepid, as they face a lot of competition and that supply of chemicals in the industry.
Charlie Wells, thank you very much indeed on some of the stocks, the individual names on the move this Friday. Let's bring back in Max Kettner, Chief Multi-Asset Strategist at HSBC, who has been very well behaved and sitting, which is unusual for Max Kettner.
You sound surprised.
I am surprised, sitting patiently.
This is about the longest 10 minutes I've ever sat on a chair.
No, well done. Yes, you remind me of some of the toddler kids that hang out with my own children. Max, thank you for your time.
Thank you very much.
Let's get back to the markets. Look, there is a bit of angst. We're seeing that in terms of the private credit space, the cockroaches, and we're seeing kind of day in, day out, there seems to be another story, more spotlight on some of these private credit lenders and some of the tensions, some of the cracks, some of the fissures. Do you worry about contagion risks?
Not really. It depends on how much you're asking me to worry. Is there going to be, or am I worried to the point that is this like 2007, 2008?
Yes.
Is that like a systemic crisis? No, I'm not going to give you that headline, right? No.
Why?
Because the point is, right? Why? I don't. Look, I guess
why not the headline? Why are you a little bit more sanguine?
A bit more sanguine, right? So, look, I think when you look at actually on an index level relative to or compared to the cockroaches stories, that tells you a different story. You know, let's be very honest. The way you get people scared is by saying First Brands, Tricolor, Blue Owl, right? You give them the single name stories. The way you don't get people scared is to say, look, if it's going to be systemic, we're going to have to look at the aggregate numbers, right? Because it's not like one or two or three single name stories. Because let's be honest, there is always some single name stories. They come and go, like once a month or once every 2-3 months, right? And then people forget about them. But let's say when we go back to First Brands and Tricolor, who still talks about that? No one. And in November it was like, oh, this is how it started in 2007. And we had numerous of those examples since COVID. But if you look at an aggregate basis, you look at private credit delinquencies, you look at bank loan delinquencies, you look even at public credit or public high yield delinquencies, they've all been going down in the last year and a quarter, the last sort of 15 months. They've actually started to trend down. If you had asked me sort of summer 2024, the lines were doing this. Now, obviously, I would have said, yeah, you know, I don't think it's going to be that bad. But in actuality, I wouldn't really have had a proper answer why I think that is the case. Maybe because rate cuts, but actually what we are really clearly now seeing is the effect of rate cuts, that lagged effect of rate cuts is now coming through in the delinquencies. Look at private households. Even credit card delinquencies are starting to go down. So on an aggregate basis, things are actually starting to be better. That's number one. Number two, very quickly, is if you look at private credit, the absolute growth in the last particularly 5 years, phenomenal, but we're coming off a base that's extremely low. Bear in mind that if you look at the total volume of private credit relative to bank loans just in the US is 3%. Right? So 3% private credit relative to total bank loans. That's not big enough to create a big sort of systemic issue.
But is it a selling point for Europe that it doesn't have as much exposure to tech?
No, I don't think so. Because you look at Europe, again, do I want to lean into that right now because it's got more cyclicality? Yes, right? Do maybe some of the private credit or private markets names, do some of them have an issue because they have more software exposure, and in that software exposure there might be, you know, some issues lurking? Yeah, maybe. I'm not a single name analyst, right? But what you're seeing right now is when you look at the software sector, it's been sold off indiscriminately, right? You look at the components and every single one has been down. So essentially it was like, if you're a software, you're going to be dead. And that is too much. There are some companies, right? If you look at IGVs, there are some companies in there that are literally running a monopoly-style business model. Yeah. That's too much to not have any sort of differentiation between them.
So, Max, when we see news reports, and we might get more of these, to your point about, you know, we keep hitting people with these individual company stories. So when we get more stories of BDCs, these are the business development companies that do direct lending to software companies, and we'll see more of them reducing payouts to their owners or decreasing the value of their portfolios, especially if they've got lots of software exposure. Do we just put that in a bucket and say, well, that's interesting just in the same sense that corporate earnings are interesting, but it's not a canary in a coal mine?
I don't think it's a canary in the coal mine. No, again, because the volume, the total volume is too small to really create the systemic issue. That's one. Two is, I think it's probably a sector-specific thing. Is that something that will flow through into, you know, the big banks, the regional banks? No, not really. In fact, you know, look at the regional banks. Look at KRE over the last 3-4 months. It's been massively outperforming. right? And rightly so, because people are now saying, hey, you hold on, like, actually, is that something that will flow through into the banking system more widely? No, it's too small to matter. And in fact, we are starting to see, not only on the private household side, not only delinquencies, credit card delinquencies and all that going down, but you're also starting to see on the household and on the consumption side, you're clearly starting to see that the lower end of the K is starting to do better. If you look at private household consumption, the low-income earners are starting to actually have consumption a bit more up. And that is what's probably a little bit more important for the wider banking sector overall, where it's a bit insulated then from the BDCs and all that.
Max, thank you very much. Thank you for your time. Max Kettner, Chief Multi-Asset Strategist at HSBC. Coming up on the programme, we'll return to the corporate earnings stories. The autos component manufacturer Valeo reported earnings this morning. We'll be speaking to the CEO, Christophe Perriat. We'll talk about Chinese competition, perhaps, in the state of the European car industry. That interview is next. This is Bloomberg.
For climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Happy Friday, everybody. This is the opening trade. We're 30 minutes into today's session, and this is the picture in European stocks this morning. Pretty tepid, actually, in the open. We're having weakness in Paris, but the outperformer this morning is the FTSE 100. That corresponds with the sectoral picture. We've got basic resources leading the gains, and copper set for a second weekly gain at the moment. This, in contrast to the US futures picture, a little more negativity set to come out stateside. Later, of course, we've got those US PPI numbers numbers dropping this afternoon, London time. But Tom, what are you watching under the sectoral?
Yeah, look, Lizzie, to your point, it does feel like a European equity market that is looking for the next catalyst, but within the context that we're still close to those record highs. So volumes versus the 28-day average, a little bit higher in the Friday session today, up about 5% versus, again, that 20-day average. In terms of the breakdown, in terms of the members on the upside versus the downside, you talked about basic resources as a sector. That was the number that we were looking at. In terms of the breakdown, individual names, Siemens Energy is gaining 1.5%. It's got that exposure, of course, to data centres, and they're going to be paying a dividend of €70 per share. In the medical space, Roche gaining 0.7%. Swiss Med approving Roche's treatment for lupus, so that's lifting that stock, it seems. In the mining space, it's interesting, you've seen a pop up again in terms of copper and silver in the session today. Glencore is gaining on the back of that. Broadly, you're seeing a lift for the mining space on the back of copper prices and silver. On the downside, it's the exposure for banks, and particularly the likes of Jefferies, Santander, and here in the UK, Barclays, to that collapsed UK lender MFS. So Barclays down 1% on that exposure, potentially $400 million or thereabouts. Teleperformance, this is a potential hit on the AI story. They had softer first quarter forecasts. They're looking at revamping the leadership, down 7% there over in France. So that is a pressure point, certainly in terms of the tech space. BASF, major chemicals maker, has major exposure to China, based, of course, in Germany. Results showing that there is cost cutting. There is that chemical slump that continues. Price pressures, of course. The energy component is a challenge for BASF, currently down 1.6%. Anna, what else are we thinking about?
Yeah, let's turn our attention to some geopolitical news themes this morning. Pakistan's defence minister has declared, quote, open war with Afghanistan after both sides carried out cross-border strikes overnight that killed dozens. Tensions have steadily risen between the neighbours since the return of the Afghan Taliban to power in 2021, with Islamabad blaming Kabul for hosting militant groups that plan attacks in Pakistan. The Taliban denied the accusation. Prime Minister Keir Starmer's ruling Labour Party has lost a formerly safe seat in the UK Parliament, finishing third behind the Green Party and Reform UK. The Green Party won the special election for the Manchester seat, with candidate Hannah Spencer securing 41% of the vote. Netflix has dropped out of the battle to buy Warner Brothers, clearing the way for Paramount to clinch its $111 billion deal for the historic Hollywood studio. Netflix said that while it believed its deal would have passed muster with regulators and created shareholder value, it didn't want to keep on bidding. Tom.
Let's get back to the earnings space right now and focus in on autos and that sector. Autos component manufacturer Valleo's fourth quarter revenue beat estimates as the company engaged with its cost reduction plan. The French car parts supplier's full-year sales came in at just shy of 21 billion euros. Very pleased to say we're joined now by the company's CEO, Christophe Brélard. Christophe, good morning. What should investors take from these numbers and these earnings, and how it positions the company going forward in a sector that, of course, has been challenged?
Well, for sure, the sector is challenged. Good morning to all of you. I think it's a very solid result. In 25, the sales are up like for like. The operating margin is up. The free cash flow generation is up. The net result is up. So, I mean, it's another step of improvement of Valeo. We have done this, since 22. We are delivering what we are promising. And on top of that, we have issued a positive guidance for 26. Stating that we will continue to make progress in 26 on profitability and cash generation. So overall, it's a solid year, and it's a year where we are continuing to make sure that the years to come are going to be okay, because we have good order intake, good orders that we receive from our customers.
Mm-hmm. Christophe, the China market is still underperforming for you. When does that turn around?
It's going to turn around in H2 of 2026, where we are expecting growth to come back. And then we plan to outperform the market as of, the following year. China for sure is a very important market. As you know, it's an important market for Valeo as well. We have 50% of our sales there. We are a strong supplier there. Competition is strong, but we have the competitiveness, we have the technology. And, one of the most important number, I think, in our release yesterday was the amount of orders we are receiving in China for the Chinese OEM. In 25, it was, in total worth 2.8 times our sales So we are going to grow again in China with the right customers, with the Chinese OEMs, and there are proof points of that in the orders we received from these customers last year.
Christophe, good morning. It's Lizzie. What are your thoughts around chip availability this year? Some are warning that you could be pushed further back in the queue because of the need for chips for data centres. How are you planning around that when it comes to EVs and software-defined vehicles, which of course need chips?
Well, the subject is really on memories, where there's a competition between all the industries, the consumer industry, the auto industry, and the data center industry. What we're hearing from, the memory suppliers is that, they're going to protect the auto industry. This is what they said, and I think it's linked to the way, the auto industry is giving good forecast and reliable forecast and stable forecast to these suppliers. So this is what we are hearing from them. Of course, it's a day-to-day battle to make sure that we have the right quantities. We're working with our customers, working with, our suppliers, and let's see what happens next.
And how are you planning more generally around heightened geopolitical risk?
Well, probably the best way of handling them is to have, a local for local strategy. And this strategy has been helping us, for instance, to navigate through the different tariffs that have been implemented here or there. We are North America. We are a North American supplier in North America. We are a Chinese supplier in China. We are a European supplier in Europe. We are operating where our markets are. And, when there's so many Forex variations, geopolitical, issues, I think this is a very strong protection for our operations.
Good morning to you, Christophe. I wanted to ask about the European side of things and whether you have any expectation or think it's important that in Europe, that European companies have some pressure on them, I suppose, to use European suppliers. Is that something that you're expecting European regulators? The EU is considering adopting some kind of rules around European preference. Is that something that you would welcome?
For sure, we are a promoter of this idea for a very simple reason. Let me remind you, and I said it before, that we are very strong in China. And China is the main country of value. But we are doing in China, we are manufacturing in China what we sell in China. And we believe that's the right thing to do. We don't intend and we don't want, to produce in China and then deliver to Europe, because this would be detrimental to the European economy and to the European jobs. Now we have to, recognize that, China is 30% more competitive than Europe. This is just a fact, and we have as well to recognize that the, European auto industry is the main industry of Europe and worth 7% of GDP. So there's a real question, about how to protect the European industry. When it comes to the auto sector. And then you look around and you see that, in India, 80% of local content is required. You look at North America, 75% of local content is required. You look at China, 95% of local content was required. And that was not a requirement for Europe. So yes, I'm a promoter of a minimum level of European content on European cars at the level where it is today. Today, a European car has, in average, 75% local content. So it's the time now for, the policy makers to decide whether they want reindustrialization in Europe or delocalization outside of Europe. And let's see. I'm, optimistic about what's going to be decided. I think the next. The next step is going to be March 4th, where the European Commission will reveal its plan.
Okay, very interesting. The choice possibly facing the industry and regulators in Europe. Christophe Breuiller on the results, of course, CEO of Valeo. Those earnings coming in broadly in line with expectations. Stock down about 2% so far in the session. Coming up, We were talking there about the chip shortage. Researcher IDC says the global smartphone market, ties in, will contract this year, but by how much? It's quite startling. The answers when we come back. This is Bloomberg.
We are in such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Before the break, we asked, by how much does researcher IDC see the global smartphone market shrinking this year? The answer is 13%. The researcher says this is due to the unprecedented memory chip shortage, marking what it calls, quote, a crisis like no other. IDC now sees just over 1.1 billion mobile shipments this year. That is down from 1.26 billion, almost 1.3 billion in 2025. It says memory chip shortages have made cheap phones a thing of the past. Premium handsets, like the bulk of Apple's iPhone lineup, will weather the crisis better, they say, though companies like Xiaomi and Lenovo have warned that consumer prices may have to rise. It is therefore unlikely to impact Anna Edwards' gold and diamond bezel-edged iPhone 17, Anna.
That's definitely the way I roll, Tom. But it does tie into the conversation we were just having, doesn't it, Lizzie? Because we were talking to Valeo about chips for cars. And if chips, there's just a lot of competition for chips and everyone's having to pay more for them. And what does that mean for the car sector? He said that their supply is going to be protected. But, you know, when we speak to lots of different sectors that need their chips, they all say they have good relationships with these chip suppliers and they're the ones who are going to get those chips. But lots of tech themes, including CoreWeave.
Yeah, do you know who buys a lot of chips? Yeah, CoreWeave. They buy a lot of NVIDIA's GPUs and then they lease them out to the hyperscalers. So there was a bit of a shudder in the markets on the back of what CoreWeave was saying in terms of the capex it has to spend, coming in at 30 to 35 billion US dollars. The losses came in heavier. They're borrowing a lot more. What they're saying, CoreWeave, is that we see massive demand. We have to build for that. But clearly that comes at a price. And so that was one company that felt a bit of pressure. On the other side, Dell, seeing some gains because of their exposure to data centers.
Is it just that they're at different stages? That you've got CoreWeave at the capex prove it stage and Dell at the ROI proved stage?
Different business models as well, aren't they? The different, maybe different stages, but also different parts of that data center supply chain. And we're having really interesting conversations, sort of discovering where the money gets made.
Should we get more in terms of what's happening in data centres? And another angle on this, because some breaking news this morning was around what is happening with Equinix and the Canada Pension Plan Investment Board teaming up with Equinix and agreeing to acquire atNorth. That is a pan-Nordic data centre operator owned by Partners Group Holding. The deal valuing the Iceland-based atNorth at $4 billion, including debt. Joining us now, very pleased to say, is Regina Dahlstrom, the Equinix Managing Director. Regina, good morning. Why does this deal make sense for Equinix?
This is about meeting the rapid growth of digital infrastructure need in the market, and combining the Equinix global interconnected platform with the high-density, high-capacity, IA-ready capacity in all 5 Nordic countries of atNorth is a magic combination, and I think we will have a very strong position meeting this market demand ahead.
And it means that you're essentially adding potentially eight data centres with more in the works as a result of this deal. What is the level of demand you're seeing right now, and how does it break down in terms of enterprise, AI, the hyperscalers? What is the demand picture looking like right now?
The demand picture is, like you say, it spans over all of those. So there's AI demand for sure, but underlying is still the digital transformation of our enterprise segment, which requires services to cater to sovereignty, security, resilience, and then in combination with the AI workload placements. That also, in their turn, needs connectivity. So I'd say it's a healthy mix of both, and they interact with each other and want to be placed nearby each other.
And Equinix, I should say, has enjoyed a bull run in the share price. Regina, good morning. So is it about, hence this M&A currency, is it more about organic growth from here, or have you got other targets in mind? Where else would you look maybe for the next acquisition?
Now, I'm focused on the Nordic and framing this organic growth with the Nordic attributes. And I think we have a healthy pipeline to continue to build on our decades of growth in Equinix. And so we will. So looking ahead, we have 800 megawatts of capacity in the atNorth platform to start to work with when this deal is closed. And we will, and we foresee future decades of healthy growth ahead organically within Equinix.
I am interested why you see a competitive edge for Nordic data centres over other locations and how the geopolitics feeds into all of this, because, of course, you've got the proximity to Russia. Do clients ask you about resilience on that front?
Definitely, and I'd say that the Nordics stands out more than ever in terms of being prepared and resilient. I think the attributes of the Nordics to its renewable energy, its sustainability agenda, and high degree of tech innovation stands out further. And then the preparedness and the resilience of the region has become more of a positive, I would say. Yes, there has definitely been highlights of the infrastructure in terms of the geopolitics, but I would say that the Nordics stand stronger than ever.
And it's also nice and cold, which possibly helps, Regina. Let me ask you about data centre construction. We've seen anecdotally, or maybe more than anecdotally, reports that sometimes it's you can't build data centres fast enough in the States, sometimes because of a lack of workers or a lack of building materials rather than anything much more tech. How would you rate Europe's experience? What's been your experience watching the data centre build out in Europe?
I think this is what's so impressive with atNorth, who have, in a very efficient manner, used, I would say, many of the benefits of the Nordics, the skilled workforce, the cooperation with local authorities and power companies, and have done a fantastic job in building very quickly without compromising on quality, security, or sustainability. So I think, again, the Nordics, and in this case atNorth, really proves the point that you don't have to compromise on anything, building data centers in the Nordics, and deliver definitely the highest grade of all these attributes in terms of efficiency, sustainability, and quality.
OK, so those attributes are at play in the Nordics. We've been talking a lot this morning, whether it's the car sector, the auto sector, or smartphones, about the lack of chips, I mean, particularly high bandwidth memory. And we know that a lot of that is going into data centres. Are you seeing, is that a constraint? What is the impact on your business? Are you seeing that impact?
So this would be our customers, and no, we don't see any indication of a demand, of less of a demand or anything similar. So no, from our point of view, our customers still seem to have ambitious plans of growth, and we have a healthy pipeline of our customers' demand into infrastructure capacity.
Regina, thank you very much. Thanks for joining us. Regina Dahlstrom, Equinix Managing Director. Thanks for giving us your time this morning. Let's widen our focus onto the broader markets. Adam Linton is with us from our Markets Live team. Adam, good morning. So one of the things that happened this morning, we got some French inflation data, and it came out a little stronger than expected, which kind of doesn't fit with the narrative that we've been talking about in Europe recently, that inflation, you know, Europe doesn't have much of an inflation problem to worry about. It's pretty much it's been at target. So this is just France. But we did see a little bit of a pop-up in the euro on the back of that. What are you thinking about the inflation picture?
Yeah, I think for France, you know, a lot of that has been attributed to what we've seen in the energy markets. I think, you know, it doesn't really change the broader picture of what we're seeing for Eurozone inflation. You know, it was particularly soft last month. It came in 30 basis points below the ECB target. And I think in terms of the broader ECB, you know, conversation, we saw upgrades to inflation forecasts in December, which kept them in their good place, their happy place, and confident that rates will need to stay unchanged. But, you know, I think there's a possibility that March we get a downgrade to some of those forecasts. And if we do, the conversation could then move on to the possibility of rate cuts. But I don't think that there's really alarm bells ringing in Frankfurt at the moment. Typically, when the ECB cuts rates, there's some sort of growth shock, there's, you know, some sort of financial distress. And we're just not seeing that at the moment. If anything, we're actually seeing the opposite. You know, we saw those German PMI numbers last week. That was the first expansion, I think, since 2022. Potential for more to come, given the stimulus effects. I don't think there's really an argument, you know, from a growth perspective or even an FX perspective. You know, the euro's come off about, you know, 2 handles since February, and even at the time, Lagarde wasn't really, you know, concerned too much. So yes, there's scope to reprice more dovish direction, but not necessarily alarm bells yet.
Adam, how are you interpreting the market reaction, small as it may be, to the UK by-election result? I've got the pound in front of me up again by 0.1%, so nothing to write home about. And when you look at the gilt market reaction, really nothing when it comes to the 10-year, but the 2-year yield down a basis point. What do you read into what the markets are saying?
Yeah, I think the market's obviously clearly shrugging at it at this juncture. You know, you have by-elections are lost by incumbent governments all the time. They have their own idiosyncrasies. But, you know, with UK politics, there's not always necessarily an immediate reaction. We often see things cascade in UK politics. We saw that recently, you know, the Mandelson affair. It kind of came out. Then we saw a few days later McSweeney resigned. Then we saw the Scottish leader calling Starmer to resign. And that's when we really saw the market get moving. So, you know, be on watch for what happens in UK press this weekend, if anyone comes out and briefs against Starmer. But ultimately, I think, you know, a lot of commentators are more confident that May will be a more opportune time for any potential candidate to mount an attack on Starmer. And then at that point, you know, that's when the market may need to begin pricing what comes next.
And it sounds like you think Reeves can pull off making the spring statement a non-event in the market.
I think so, yeah. You know, I mean, the UK's finances are, you know, shored up, but, you know, not so too surprising if you increase taxes on everyone. That was, you know, not so too surprising, but risks definitely remain ahead.
Adam Linton, Thank you very much indeed. From Bloomberg Markets Live team, of course. Have a great weekend, Adam. Talking of the weekend, here's what else to be thinking about over Saturday and Sunday then, and to whet your appetite for some of the activities across Europe. The Milan Fashion Week is getting underway. Art on Ice, Zurich, whatever that is. Comic-Con London. Lizzie's going to be there with her best cosplay. And German football rivalry. Borussia Dortmund versus Bayern Munich. Oh, that's going to be good. And the Cricket World Cup. As well, interestingly, the Premier League is going to start streaming in Asia.
Yeah, in Singapore specifically.
Yes.
So, yes, but it's really a dramatic development, very small and contained. It's Singapore, not the world, but it is a really interesting test case, isn't it? There was no Premier League football on the weekend. There is plenty of it, of course. We didn't have it on the graphic, but this is a really interesting test case, because if they can go direct to consumer in Singapore, test it out there, work out what people will pay for it, and then see if they could do it elsewhere, that'll have lots of TV execs a bit nervous.
I always wonder if you're a TV or a rugby man, Tom. Guy's clearly a rugby man.
A TV or a rugby man?
Sorry, a football or a rugby man.
He doesn't want
somewhere
to pick
in between. Yeah, I'm an Arsenal fan, and the World Cup, Rugby World Cup, I'll watch that. Yeah, the Six Nations gets my attention.
No rugby this weekend, though. No. So Mark Cudmore is bereft.
Yes,
Guy
he
is probably bereft wherever he is right now. He will not have the rugby to watch, which I'm sure.
There's the Cricket World Cup. There's the Milan Fashion Week.
Andrea Felsted's in Milan for that.
Is she our fashion guru?
She's not taking you there, Lizzie. I feel this is an oversight.
My time there has been and gone.
So there is no Rugby World Cup to watch, but instead we offer you Bloomberg this weekend on Bloomberg TV. So this is a new show. David Gurek, Christina Ruffini and Lisa Matteo. If you don't get enough of Bloomberg TV 5 days a week, then you now can tune in over the weekend. They'll bring you those conversations that could set you up, of course, for the following week in markets. Lots to watch and listen to, whether that's on Bloomberg TV or on radio. You can also access it on the Bloomberg Business app. There we go, promo done. Looks exciting. That is it for the opening trade. The Pulse is up next. This is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise,
with some fun along the way.
This is Bloomberg Surveillance.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gurek.
I'm Lisa Matteo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
It's deadline day in the safety dispute between the Pentagon and Anthropic, with the company's chief executive saying it cannot, quote, in good conscience, agree to the latest request. Now, Netflix says bidding war for Warner Brothers is no longer financially attractive, clearing the way for Paramount Skydance to clinch its $111 billion deal. Plus, a local plumber gives the UK Green Party its first by-election victory, increasing pressure on the British Prime Minister, whose Labour Party finished third behind Reform. So let me tell you, there's quite a lot going on in news, and then we continue looking at tariffs, trades, and of course the nuclear talks with Iran. S&P futures down 0.2%. If you look overall at what's, I guess, freaking out or certainly scaring investors, look, the disruptive potential of AI has definitely rattled U.S. equities for weeks, in what traders have dubbed the AI scare trade. And then there's a little bit of concern also about private credit because of a firm here in the UK. We'll get to that in a second. Brent crude 71.18. A couple of stocks, of course, that we're watching because of the big news that we had overnight. So Netflix, you can see gaining some 8.7%. Look, Netflix dropping this Warner Brothers bid, therefore leaving the way for Paramount to be the winner. And Netflix pre-market gaining some 8.7%. The other thing that we are looking at is Block. This is after Jack Dorsey's company decided to fire about 4,000 employees, almost half of its workforce. And this is a play on AI. So I'm not only looking at Block and thinking, okay, it's 23% higher, but I think it will probably send shockwaves, or people will start fearing for their jobs, and also CEOs will say, well, what does that mean for my workforce? And then finally, Dell gaining some 11.7% after Job Project's AI server sales came in at $50 billion. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, Anthropic has rejected the Pentagon's latest offer to defuse a standoff over the conditions that the company has sought governing the use of the AI software by the military. This escalates the standoff between the two parties ahead of a government deadline later today. Well, let's bring in Bloomberg's Washington Deputy Bureau Chief, Laura Davison. Laura, I mean, it's interesting because, you know, it's half basically about politics and half of it is about AI. So why is Anthropic opposed to the DoD over the use of its AI tech?
Yeah, so the Anthropic has said that the military shouldn't be able to use its Claude platform, its technology, to do surveillance of U.S. citizens as well as to conduct lethal strikes without human intervention. They say we don't know exactly how our platform would would go during these situations, and we just don't think it's safe. We can't in good conscience agree to that. The U.S. military has shot back and said, look, you know, we are the U.S. military. We should be able to decide how to make these platforms work. This is also, you know, kind of under the backdrop of that Anthropic has been one of the more left-leaning companies. The CEO supported Kamala Harris in the 2024 election, so there's definitely a political split here between the Trump administration and Anthropic as well. You know, this is, you know, kind of an issue that has really come to the fore, just bubbled up in the past couple weeks, and with Pete Hegseth and the Pentagon putting this deadline, 5:01 p.m. U.S. East Coast time, just about 13 hours from now, otherwise threatening to cut off potentially Anthropic from the U.S. military system. There's sort of an extreme option that they've thrown out that they could label it a supply chain risk, which would essentially remove it from all military applications, including other government contractors using it, or something that's a slightly you know, less extreme, but would basically tap a 1950 era law that said that you know, basically tell Anthropic, too bad, we're the U.S. military, we're going to use your platform however we want.
So Laura, if no deal is made, what impact will that have on both parties?
So this is really the question here is, will this 5 o'clock deadline stand? This is essentially an arbitrary deadline that the Pentagon set. There's no legal forcing action or anything. They could continue to negotiate if the Pentagon asked. However, if the military were to say, look, this is the deadline, and we're either going to take this extreme action of removing Anthropic from all government military applications, that could have a huge impact both for Anthropic as well as for the military itself, because they have been using Claude for quite some time, and it's also other government contractors, places like Boeing, Lockheed, have this embedded in their systems already.
Thank you so much, Laura. Bloomberg's Washington Deputy Bureau Chief Laura Davison, and we'll come back to the story a little bit later in the hour, also with Parmi Olson from Bloomberg Opinion. Now, Netflix has dropped out of the battle to buy Warner Brothers, clearing the way for Paramount to clinch the deal. Let's bring in Manuel Baigorri, Bloomberg's deals reporter. Manuel, great to speak to you. So why has Netflix pulled out, and what does the deal mean for Paramount going forward?
And definitely, Francine, another chapter on this saga that has kept us so busy for the past few months, and Netflix walking away from the deal after Paramount obviously came with a knockout offer, $31 a share, and Warner Brothers concluded that it was a superior bid. Naturally, Netflix decided to stay disciplined, financially speaking, and also definitely will continue to invest in new shows and content going forward. Perhaps also will be in the lookout for other acquisition targets that may come, in due course. But at the same time, for Paramount, I mean, they were the ones that kicked off the whole transaction months ago. Obviously, they had to battle an agreed deal between Netflix and Warner Brothers since December, but they came back very seriously with new offers, new addendums, sweeteners, and this final knockout bid. Obviously, now the question is how the regulatory approval path will continue over the coming weeks, months, and quarters. How smooth that will be remains to be seen.
Manuel, thanks so much. And Bloomberg's deals reporter Manuel Baigorri. Now let's bring in Patrick Armstrong, Chief Investment Officer at Plurimi Wealth. He stays with us also for half an hour to try and unpack all of the big news that we have. So, Patrick, thank you so much for that. When you look at, Anthropic for me is something bigger than just the story, because it kind of maybe puts some fault lines or the blueprint of what future contracts look like from all governments around the world. Am I reading it right?
I think you are, and I think it's a question we can't answer yet. There's so many unintended consequences when you start to use Claude and Anthropic things about where it leads to, how you rely on them, what the consequences are, and very big question, still very difficult to answer.
Yeah, and this goes, it goes kind of democracy, defense, values. It kind of goes to everything. As an investor, do you need to make a bet on that, or do you stay away from the sidelines, or do you just look at the technicalities of these companies?
So, because it's such a big question, and there's going to be so many twists in the road about where we get to when companies like Anthropic, OpenAI, when they really start to monetize and generate profits, that's a question that's too far off for me. Where I'm positioned is investing in all the equities that are getting the $100 billion that the hyperscalers are spending. So the high bandwidth memory stocks, Samsung, Hynix, and Micron, I love those. Those are stocks that are up 300% over the last 12 months. But they're cheaper today than they were a year ago because earnings have gone up more than the share prices. Earnings forecasts have gone up. Energy suppliers, companies that build out the electric grid even, those kind of companies, as the hyperscalers are desperate for electricity. And it's high bandwidth memory, electricity, those are the bottlenecks. That's where there's extreme pricing power. So playing AI, but not on the long term, playing the beneficiaries today.
Patrick, I mean, how does it change our economies? Again, I was surprised. I mean, I wasn't surprised, but actually, when you look at Block, which is Jack Dorsey's shop, and he gets rid of, half of his staff, their share price pre-market is up quite significantly. Again, does this translate into most companies? Does it translate into some of the smaller companies?
I think a company like Block and Dorsey's old company, Twitter, Elon did the same thing, got rid of so much staff. Companies that really have business models where you probably can scale down the human component because it is so easily done with clever software and artificial intelligence. So it's definitely symptomatic of part of the world. I don't think every industry is going to be like that, but the markets rewarded this, and every company that's thinking maybe I can pull that lever as well to create a 20% gain in my equity value, it's going to be happening a lot, yeah.
Patrick, I also want to talk about the UK because the Prime Minister Keir Starmer's ruling Labour Party has lost a formerly safe seat in the UK Parliament, finishing third behind the Green Party and Reform UK. So let's bring in Rosa Prince from Bloomberg Opinion. Rosa, talk us through the significance of this. Is Keir Starmer's leadership now on the line?
Yeah, it really is. As you say, it's just one seat. He has 404 MPs, or he did until this morning. And so it shouldn't be a big deal, but actually it really is. And that's because this was a very safe seat for Labour. It was one with more than 50% of the vote at the general election just 18 months ago. And it really matters because of who that seat was lost to. The Greens won it, and that means that there is a threat to Labour, not just from the right, which we kind of knew about already from Nigel Farage's Reform UK party, but also now on the left. The Greens are not really talking that much about climate change and the climate crisis. They're really a socialist party. They talk about wealth taxes, about how billionaires are taking away people's wealth in other ways. And I think for Labour that's actually a kind of a crisis, because now you have Labour MPs coming out this morning saying both that we need to go to the left, and trade union leaders saying the same things. We need policies that actually are appealing to the same kind of voters that voted Green in this by-election. And also a problem for Keir Starmer himself, because those leadership mutterings that go on from time to time are only going to escalate this.
Rosa, let's also bring in Patrick Armstrong. Patrick, when you look at this, I mean, so there's a lot more pressure on Keir Starmer. I guess he may rethink his strategy. We may also see a leadership contest. Is there an assumption that Labour goes much more to the left, that the next Prime Minister will be much more to the left? And what does that mean for your investments in the
I think it's a risk. I think markets reward middle ground, centrist policies. They even like gridlock, but extremes are dangerous for markets if you're too far to the right or the left, and that's just where democracy is heading. The quick soundbite. If you're middle ground, it doesn't grab anyone's attention. You've got to be very far on one side or the other to attract attention. And short attention spans of people, social media, it really pushes politics that direction.
But does it change your view of investments in the UK? Or because, as you say, it's happening everywhere?
Well, it's happening everywhere, but some places rights are sort of gaining the ascendancy, some places left. I think the UK probably has killed the golden goose already to some extent in terms of pushing out high net worth people who aren't domiciled here but residing in London, pushing them to different domiciles. Anything that goes further is a big headwind in terms of the tax revenue the UK will be collecting. So you do shoot yourself in the foot by taxing wealth too much.
Rosa, where do you think this leaves Keir Starmer's government? So what are some of the conversations that they'll be having at Downing Street today?
Yeah, I think they will be in crisis mode again. We'll have to see if anyone actually launches that challenge against his leadership. Now, my own view is that the same kind of factors will come into play, which is that there isn't really a natural successor. So there's no one really who is the kind of crown prince across the water, apart from Andy Burnham, who you will remember had wanted to stand in this by-election, and Keir Starmer blocked him. He is the popular mayor of Manchester. A lot of Labour MPs saying he would have actually won this seat, but Keir Starmer couldn't afford to have that threat there in Parliament. So I think those conversations will be had, and if they can't get rid of him, I'm afraid I think for your other guest, they will be pushing him to go in a leftwards direction. There have been talk of wealth taxes already. So that might be one of the fallouts from this very interesting contest in the north of England.
Rosa, thank you so much. Our Bloomberg opinion columnist, Rosa Prince. Patrick, where do you see the best value actually? So I know you look at sectors, you look at individual companies, but you also look at countries.
Our biggest overweights are Europe, but we also have a big overweight in Japan. Both those regions are cheaper than the global market because the U.S. just pulls up the global market averages. Like the banks in Europe still, they've had a great rally, but they're still cheap to me. Defense stocks in Europe have structural tailwinds behind them. And in Japan, it's a growth engine right now. The government's really putting in place policies combined with corporate governance, and I think the industrials, those kind of companies in Japan look very good.
Is there anything that you'd be selling right now? And I don't know whether we'll talk about the Fed in a second, but also dollar dynamics and the fact that there's a bit of weakness in dollar. Does that change perspective for certain countries?
It's been a pretty flat dollar for the last 6 months. So over the last year, dollar's been incredibly weak. For the last 6 months, it's actually pretty much stabilized. It's moved down slowly, and that's what I expect from here. I think we've had the big move in the dollar. Things that I'm short right now are companies that are very long duration. So I'm short KKR, I'm short SoftBank, I'm short Oracle, companies that are more aspirational, trying to get profits from AI. I'd rather own companies that are making the profits today.
Patrick, I mean, if dollar weakens, euro strengthens, how much of a concern is that for European exports? And actually, how much of a concern is it for the ECB?
It's surprising, yeah. So France had some inflation that was a little higher than expected, despite the strong euro. I think the ECB is going to be very comfortable where they're at there. They've got inflation roughly in line with where they want it to be. The economy is growing, not growing incredibly well, but I think it's a level that the ECB will be comfortable with. A very strong euro, a sharp move up like we had in the first 6 months of last year. I think the ECB would worry that that would be disinflationary, deflationary potentially, but the gradual grind up of the euro, I think they'll be happy with.
Okay, Patrick, thanks so much. Patrick Armstrong there from Plurimi Wealth stays with us. Guess what? We'll talk about credit next. You're dying to talk about credit and private credit and all that good stuff like the Fed. We'll look at the problems and fears affecting private credit next. This is Bloomberg.
Up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersetchi in Davos, Switzerland, and this is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, a private credit fund overseen by Apollo Global Management has cut its dividend and marked down the value of its assets amid signs of strains in parts of its loan book. Now, there are other indicators as well after non-bank finance from Market Finance Solutions collapsed in London. Now, still with me, Patrick Armstrong from Plurimi Wealth, and we're joined by Bloomberg's corporate finance czar, Neil Callanan. We also gave you an upgrade, Neil. Thank you so much for joining us. Look, Neil, first of all, where are we? Because you hear half of the big guys in some of the credit saying, like, look, it's not systemic, don't worry about it. There's going to be like bits and bobs, but it's nothing that would snowball. But actually, there are these pockets of concern that keep on cropping up every couple of days.
Absolutely, and it does feel like every day there's a new situation emerging. What this week shows in a way is that regulators got certain things right, but then there may be things to worry about going forward. So what we're seeing is a lot of lending that banks were encouraged to get out of. That's where the problems are emerging. And so regulators will be happy with that. But what people didn't think about is the companies that then went into that space, banks backed them, and that's where we're starting to see trouble emerge for some of the banks. So lending on lending is really a trend that's come out in the last week and the last few months, and that's certainly going to be worrying regulators going forward.
Yeah, but is it systemic? Do we know if it's systemic?
I think it's still far too early to say about that, but what concerns me to a certain extent is the lack of capital buffers that some of these lenders had, which means that the banks are more exposed to losses quicker. So in the case of the company in London, which is Market Financial Solutions, one of their related companies had a equity to lending of about 2%. A bank would have 5 to 6 to 7 times that amount. So when things go wrong, they go wrong very quickly, and losses are much higher as a result. And that's a concern going forward.
Patrick, what's your view on all of that? Again, it just makes, it doesn't touch markets that much. Equities are still, but it just means that everyone's a little bit more worried.
Yeah, well, there's been a wall of money chasing private credit because it's never marked to market. It just goes up, you get the carry, and you don't see any of the consequences of risk aversion that you do in liquid markets. So it's very attractive for investors to think I'm getting a carry and I don't suffer the pain. Excuse me. And when there is a wall of money chasing things, you do, when you're an asset gatherer who's then investing in the private credit, you do have to lower the quality of the things you're investing in because you have to put that money to work. That's why the money's coming into you. And then when there are little worries, you don't know how broad it is. Is it the sign of something? Is it a canary or is it a one-off? And there's always going to be one-offs in this kind of lending. But 2008, huge regulations put on banks, made them very safe. And then the vacuum created by where they couldn't lend, it's been swooped up by private credit, and it's much less regulated.
But is it a canary in the coal mine? I mean, I remember it was like there was a quirk, I think 2007, like August, it was a BNP Paribas fund, which everybody said, it's fine, it's August. And actually, that was the first sign that everybody missed.
Yeah, there's probably many canaries, so that one we remember, because there was a huge event after it. And you don't know if this canary is going to be one of those ones or not. In the next recession, this is going to be terrible. I don't think we're heading to a recession right now. I think we've still got fiscal stimulus. We've still got monetary stimulus. We've got big issues with software companies and had hundreds of billions of market cap disappear. And these companies in private credit have obviously seen their business models challenged. And if you're a small company producing software, you are at risk of completely being disrupted. So it's definitely something to keep an eye on. I wouldn't view private credit as risk-free, I think, the way many investors did a year ago, maybe anyway.
So, Neil, what is the team chasing in terms of potential, sectors where there could be more stress? Is it mainly, there also an understanding, I think, at the beginning of the week, or at least I was told by big investors, that it's more of a U.S. problem. It doesn't feel like that.
No, but I think where people need to focus now is what areas of finance did the banks get out of, but then fund people. So trade receivables, consumer lending, buy now, pay later, specialized mortgage financing, and in the US, things like multifamily. That's where a lot of the problems are and where a lot of the problems will emerge. And it comes back to the banks through those lending firms, which aren't very experienced, many of them less than 10 years experience. And they had a great run, a golden era, and now that is being challenged. And not only is it being challenged in terms of the lending standards, but now once interest rates start to fall, their returns start to fall with them, because most of those loans are floating rate as well. So they're going to be challenged on both sides, but on the lending standards and on their funding side. And so they're going to be in for a tough period for the next 2-3 years.
I mean, are there any concerns, and I don't know whether this impacts your world, Patrick, about also a lot of these, private markets in general being, sold to retailers?
It is, and ETFs on private credit funds, things like that are giving false liquidity to an illiquid underlying asset class. Pension funds just felt safe, allocating more and more into private equity, no mark to market, and you do have speculative excess because you're never punished until you're really punished in less liquid markets. It looks like nothing's happening, then you have a massive fall, whereas in liquid markets you have a grind down sometimes.
So for you, what does that mean?
So I'm short duration. I just think what the Fed's going to do, what politics is doing, is unequivocally inflation, and that means steeper yield curves, wider credit spreads. Anything that doesn't have earnings today, I don't like. If you're a long duration bond, conventional bond, I'm not a big fan. Inflation-linked bonds, I think, are winning strategies. So the big answer is markets are really going to punish duration in equities and in bonds.
And this is what, across the board? US, Europe, UK?
Much
Japan?
Less so in Europe, because you've got a real credible central bank there. There's no politicization of the central bank. I think the Fed is at risk of being undermined by politics. Warsh is a totally credible chairman, but I think he's being politicized. I think him applying for the job, the Fed doesn't need to cut rates, but the Fed will be cutting rates.
This year?
Yeah.
How many times?
I think they'll cut twice, and I think Jerome Powell said transitory 6 to 8 times in every press conference in 2021. Warsh is going to say AI-driven productivity. It's going to be disinflationary. We have to cut no matter what because this is going to be disinflationary. I don't think it's going to be as true as it is, but that's the narrative he's going to have to create the credibility to justify the cuts. But I think quantitative tightening happens at the same time to get the rest of the Fed on board.
I mean, you know, if we put the risk of a Fed policy mistake to one side, does 1 or 2 cuts from the Fed help some of these, you know, private credit markets?
No, because they make super profits on the basis that interest rates are higher. And so because they're floating, it's the opposite. They're actually narrowing their profits going forward. For banks and mortgage lenders and things like that, it's probably decent news.
So there's no underlying lending that they could benefit from if the cuts, that makes it cheaper. I suppose their cost of funding could fall as well, but when you have had so much nerves in the market at the moment, is that going to be the case? So they really are facing a double-edged sword at the moment. And if you're a private credit lender that needs to go raise money in the markets in the next year or so, you may be in for a bit of a shock in terms of what your spread is versus the rest of the market at the moment. Neil, can you speak to also the fact, I mean, I remember when SVB happened, right, a lot of people in Europe said, it won't really affect us, and then something happened in the UK, but the regulator had it, you know, again, in a better place than maybe the US. I mean, how big is the linkage between countries for a lot of these companies?
I mean, Europe is a very fragmented market, so most of the borrowers here generally aren't cross-border, but there certainly will be nerves around. There are accounting rules in Europe that allow you to spend a long time before you have to recognize losses. And then, of course, as we all know, sometimes things take a long time and then happen very quickly. And in particularly in Germany and countries like that, you're allowed to mark off what you think an asset is worth, etc. And so you're starting to see problems emerge with pension funds there, but that's a more widespread problem, and it will affect some of the corporates. Some of the problems have already been worked through, but there are definitely more to come.
So true. It's quiet and then it just unravels very quickly. Thank you both for joining us. Patrick Armstrong, Chief Investment Officer at Plurimi Wealth, and Bloomberg's Corporate Finance Tsar, Neil Callanan. Coming up, Veolia posts another year of record earnings. We'll be joined by the Chief Executive, Estelle Brachlianoff, next. This is Bloomberg.
operators like ourselves. And then the customers land up going to the black market, and the black market don't pay tax, do whatever, and there's no customer, there's no responsible gaming, and the fiscals of these governments don't collect any money. So it's finding a balance between over-taxing and then not regulating. Anything from 15 to 25% of your net gaming revenue paid on tax is probably the right number. And when you start going above that, the metrics start becoming a bit more complicated for lots of the operators.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. It's deadline day in the safety dispute between the Pentagon and Anthropic, with the company's chief executive saying it cannot, quote, in good conscience agree to the latest request. Netflix says the bidding war for Warner Brothers is no longer financially attractive, clearing the way for Paramount Skydance to clinch its $111 billion deal. Plus, a local plumber gives the UK Green Party its first by-election victory, increasing pressure on the British Prime Minister, whose Labour Party finished third behind reform. So there is quite a lot going on. We also have some corporate news. Veolia posted another year of record earnings and sees future growth in 2026, thanks to recent acquisitions and rising demand for water waste treatment and energy. Now, the French environmental services giant will see revenue flow in from Clean Earth, a U.S. rival that it agreed to buy in November, and from other recent acquisitions. Now, Veolia's chief executive says demand for the company's services had never been higher worldwide. And Estelle Brachlen-Neuf, the CEO, joins us now. I'm so happy to see you. Thank you so much. First of all, congratulations on the earnings. Overall, what does demand look like in the next 12 to 24 months? Are you more solicited? Because you sit now in an interesting space of almost being very critical for the future of countries.
You've nailed it directly. I see a very strong demand, not only for the 12 to 18 months to come, but for years to come, because what Veolia does is ensure environmental security, which is securing critical needs. We're talking about securing supply chain for industries, securing resilience for communities, and ensuring, in a way, sovereignty by tapping into local resources as opposed to importing them. That's why we've become absolutely critical. And we've progressively over the years built a powerhouse to sustain this environmental security. So I can see lots of very, very good years ahead of us for Veolia.
And everybody understands water treatment, everybody understands waste treatment, but talk to me about recycling rare earths. This seems to be really at the forefront of what Europe is worried about, and the US.
I guess you're right when I say critical needs. Without water, you cannot have a data center because you cannot cool it down. Without local energy, secured energy, we can imagine, like a lot of industries wouldn't thrive. And you're right, rare earths. Some people discovered when there was a trade war between China and the US that it was something absolutely critical for so many industries. The good news is we can tap into some untapped resources, which are, in a way, our waste, such as, say, wasted batteries. That's exactly the technology we've developed at Veolia to be able to find local sources of those critical mineral and resources. That's why I said we really are a powerhouse to ensure sovereignty as much as environmental security.
How much of these rare earths, and I'm putting, I'm so interested in rare earths because it is seen as one of the most important things to make sure that we have right now. How much can be recycled? How fast? And can you really do it to scale?
We've developed unique and patented technologies to be able to recycle them to a very high level of purity. And now the question is to scale up that type of, and to deploy this type of technology worldwide. But we need to have a secure demand for years as opposed to the ups and downs of price. And that's exactly where we are today. So the solution exists. The question is to deploy it on a more worldwide basis. And I guess you mentioned in your introduction the acquisition we've made recently in the US, which is a That's why our 2025 years was historic in many, many fronts, including the portfolio rotation towards more international and technology-based type of assets. It will be massive. In 4 years, we'll have rotated, 20% of our asset base, which is massive. It includes this acquisition, $3 billion in the US, which will make us a very big player in hazardous waste in the US, number 2. We are the number 1 worldwide as well. And exactly what hazardous waste does is to ensure we unlock the bottleneck of strategic industries. So pharmaceutical, micro-E, they need hazardous waste treatment as a license to operate. And it ensures as well that we can recycle those rare earths you've just mentioned. And it's a type of a job which ensures health. So treating pollutants is exactly what we do in the hazardous waste business. You can imagine those are super powerful trends and demand in the US and elsewhere.
I mean, if I speak to you in 5 years, hopefully we'll have many interviews then, but in 5 years, how different will Veolia be? Will most of growth come from the US or also elsewhere geographically?
So today, the pace of transformation is already quite high, and the company is progressively transforming into very international and, pattern-based, which means that today, everything which is outside Europe, 40% of our turnover is from outside Europe already. More than 6 billion in the US alone. And that grows twice as fast as where everything is in Europe, which means that progressively will be more, 50-50 Europe and outside Europe. That should come quite soon.
I spend most of the days, my days talking about tariffs and trade and trying to understand the dynamics between world powers. Does that impact Veolia at all? Because you're actually a local player.
We are, so it does not impact us. We are a very resilient company. Our development model is quite unique because we have the strength and the power of being the leader worldwide of our industry, which gives us an ability to innovate, to develop patents, as well as our delivery model is very multi-local. It's tailor-made to each community and each industry on a local basis, which makes us very resilient. Or I guess, tariff is not an issue for us. Neither is Forex, for instance, because it doesn't impact our margin rate because we are very multi-local.
Talk to me about divestments. So there's also a bunch of stuff that that you have to sell by 2027. How's that progressing?
So we have to sell by mid-2028. But you're right, it gives us flexibility to go on investing and transforming the portfolio. So the key criteria for those potential divestment is mature assets. Mature meaning, we don't see any big progression of the results in the years to come, despite our effort. That's the typical, a candidate for divestiture.
So do you have an idea?
We have, of course,
very clear idea and potential acquirers for it?
We have already a very clear ideas and various options, and of course I would not share them with you, as you can imagine, but of course the plan is very clear.
Talk to me a little bit about AI, because a lot of sectors are trying to either figure out whether they get displaced or how they can benefit from AI. How will the use of that technology also change how you operate?
So AI is both for us a tool and an opportunity to be more efficient and a potential sector to which we can offer sustainability, for data centers, for instance. If I start with the first one, in 2025, 23% of our efficiency plan worldwide came from AI and digital-led initiatives. That's quite striking. So we don't talk much about it, but we actually do it in every single plant of Veolia and with every single operatives. We have the 220,000 operatives. The idea is to have all of them in a way using AI in some shape or form to help them doing their daily job.
So this is what, in terms of recycling, I mean, again, is it waste management? Is it identifying, or is it more?
Oh, it's on really across the board. It comes from, for everybody to have a secure, internal secured GPT to ask questions about, the company's, processes, through to helping you with detecting where the leaks are in a distribution water network, which helps you, of course, to avoid wastewater, through to be more efficient in the way you produce green energy. So it's really across the board. And the other part of the equation for us is to offer our services to help data centers, for instance, to consume less water. And actually to be even restoring water resources, as much as to recoup heat. For data centers, it's become absolutely key to be acceptable for the community they live in. And there was even permits and planning turned down in many countries in Europe. And we are a way not only to offer those services, but to bridge with the local community and, so that they benefit to the local community, like recouping heat in a district heating.
So you're, of course, based in or listed in France. Mm-hmm. There's a lot of political concerns about France, what happens next when there's the presidential election. Are you expecting some kind of discount or actually on the stock? Or we have also seen a lot more American money going into European stocks that were undervalued.
So facts first, we are today at a historic high for Veolia stock price, and I really genuinely think there is potential for, even an increase in the valuation in the years to come. In terms of the political situation in France, it's not exactly stabilized yet. I don't think it's stabilized in many countries so far. The good news for Veolia is we don't depend on central government at all. I said we are multi-local, so what happened in France or in Washington, in a way, or in Paris or in Washington is less important than what happens in Montauban or New Jersey, just to give you an idea.
Very clear. Estelle Brachian, thank you so much for joining us. That was, of course, the chief executive of Veolia. Coming up, no nuclear deal as U.S. and Iran officials conclude the latest round of talks in Geneva, with more on the way. So we'll have a full roundup of that next, and this is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise,
with some fun along the way.
This is Bloomberg Surveillance.
Anthropic has rejected the Pentagon's latest offer to defuse a standoff. Now, the AI company is holding firm on conditions around military use of its software and marks an escalation in the dispute ahead of a government deadline for the company to drop its restrictions. Now, for more on this, we're joined by Bloomberg opinion columnist Parmi Olsen, who's also been writing more broadly about the disruptive impacts of Anthropic. Parmi, thank you so much, as always. Now, I'm trying to get my head around this, and it kind of portrays Anthropic as a good guy in this, right? Like fighting for democracy, trying to not... And the U.S. government is wanting something... can they still get it if Anthropic doesn't give it to them? It must be more nuanced than good guy versus someone that wants a technology that they could use for bad effects.
And I think you could argue, does a commercial entity have the right to determine how their products are used by the military? And the thing that made this whole situation kind of complicated is that what Anthropic was asking for, we want red lines around autonomous weapons and surveillance, domestic surveillance. Those things are already like basically illegal, but they just weren't in the contract language. But the fact that the U.S. government didn't want to put that in the contract language meant that there was some flexibility down the line, and then Anthropic was worried about that. Now, what could happen next? Of course, someone else could just fill that gap. Another tech company, OpenAI, Elon Musk's XAI certainly has a lot of expertise, and Google DeepMind. Those are all possible.
गाइस ये क्रूड ऑयल में बाइंग का यहाँ पर प्रॉफिट बुक कर लेना। यहाँ से देखो अभी रेंज बाउंड लग रहा है मुझे तो मार्केट, जब तक कोई मेजर न्यूज़ नहीं आती। एक सेलिंग का प्लान रखते हैं, ठीक है। यहाँ से वापस से एक बार एक कैंडल को क्लोज होने दो, बाकी बाइंग वाले निकल जाना, फिर से आएगा पॉइंट ऑफ इंटरेस्ट पे तो फिर से देखेंगे बाइंग का। अभी के लिए एग्जिट कर सकते हैं यहाँ से, बाइंग में जो है होल्ड मत करना, बाइंग में इतना काफ़ी है। में कोई ओवरनाइट पोजीशन लेके जा रहा है तो थोड़ा सा कॉशियस रहना। 2 दिन मार्केट क्लोज है, मंडे को ओपन होगा, देखना पड़ेगा क्या सिचुएशन रहती है मंडे के दिन। वाले निकल जाना, सेलिंग का एक ट्रेड प्लान है अब यहाँ से वापस से। थोड़ा सा साइडवेज ही लग रहा है मार्केट, लेट्स सी कितने देर और रुकता है इस पर्टिकुलर जोन पे। ये भी आपका एक आप कह सकते हैं काइंड ऑफ पॉइंट ऑफ इंटरेस्ट ही है इन क्रूड ऑयल। ये एक रेंज है मेरे अकॉर्डिंग, अभी प्राइस इसी रेंज पे रुकना चाहिए थोड़ी देर, अनटिल अनलेस कोई प्रॉपर डायरेक्शन नहीं मिल जाती मार्केट को वापस से। तब तक इसी रेंज को प्ले आउट करते हैं, ठीक है। कहीं ब्रेकआउट या ब्रेकडाउन किसी एक डायरेक्शन पे करेगा तो उसके बाद फिर चेकआउट करेंगे क्या प्लान कर सकते हैं। नैरो रेंज में है, कोई न्यूज आई तो बड़ा मोमेंटम जरूर करेगा। टिल देन ये छोटे से 2 पॉइंट ऑफ इंटरेस्ट क्रिएट हो गए। वी नीड टू प्ले इन दीज रेंजेस। बाकी नेचुरल गैस में कल से कोई बाइंग में है तो ट्रेल करते रहो, कोई नया ट्रेड तो बन नहीं रहा है इसमें। एक पॉइंट ऑफ इंटरेस्ट इसमें भी है बट मुझे थोड़ा सा कन्फ्यूजन है इसमें, इसको पॉइंट ऑफ इंटरेस्ट कहना भी थोड़ा सा गलत होगा। दिस इज अ लेवल फॉर सेलर्स, ठीक है। काइंड ऑफ इंटरनल लिक्विडिटी जोन कह सकते हो, एक्सटर्नल पे तो गया नहीं अभी तक। सपोर्ट पे आया था नेचुरल गैस, वहाँ से एक बाइंग ऑलरेडी इसमें चली रही है। ठीक है, कल से अगर कोई ट्रेल कर रहा है तो ट्रेल जरूर करते रहें। फ्रेश एंट्री के लिए या तो प्राइस को वापस आना चाहिए नीचे, ठीक है, वापस आएगा लेवल पे तो वापस बाइंग का प्लान करेंगे अगर आता है तो। नहीं तो ऊपर जाता है तो एक 264 265 के अराउंड एक रेजिस्टेंस मिलने की पॉसिबिलिटी है, कंफर्म नहीं है, पॉसिबिलिटी लग रही है। ठीक है, अभी तो बिल्कुल एक बहुत ही स्मॉल सा प्राइस एक्शन बिल्डअप है। कोई रेजिस्टेंस भी नहीं है अभी फिलहाल नेचुरल गैस में जिस पर डायरेक्टली सेलिंग के लिए प्लान कर पाए। या तो जाए ऊपर 264 265 या एक बार फिर नीचे आ जाए वापस 253, बाइंग के लिए बेस्ट वही है। भाई ठीक है, थोड़ा बहुत रुक सकता है जरूर ये इंटरनल लिक्विडिटी जोन पे नेचुरल गैस। इंडियन मार्केट भी क्लोज होने वाला है, थोड़ा ध्यान रखना जो ओवरनाइट पोजीशन लेके जा रहे हैं, कुछ ओवरनाइट हुआ तो गैप अप के चांसेस तो कम ही है, गैप डाउन ही होगा। ओवरऑल आज इंडियन मार्केट स्पेशली बैंक निफ्टी मॉर्निंग पे ओपन इक्वल टू हाई बना के गैप डाउन ओपन होने के बाद कंटिन्यूसली फॉल कर रहा था। मैंने मॉर्निंग पे बताया था आपको चांसेस हैं 60,700 की ओर जा सकता है, 700 600 ऑलमोस्ट वहीं की ओर चला गया है, 60,850 राइट नाउ। वही एक सपोर्ट है मार्केट के पास जहाँ पर रुकने की कोशिश शायद थोड़ी बहुत करे, बाकी 60,600 के नीचे या 700 के नीचे सस्टेन कर गया तो फिर तो 60,000 ही दिखेगा सीधा। थोड़ा ऊपर जाता मार्केट वापस डे हाई के आसपास तो बढ़िया था, वैसे बैंक निफ्टी में वहां से वापस सेलिंग का प्लान कर सकते थे बट रिटर्न तो नहीं किया है, क्लोजिंग होते होते सेलिंग ही है आज। ऑलमोस्ट 1% डाउन, निफ्टी भी मॉर्निंग पे थोड़ा बहुत रुकने की कोशिश कर रहा था गैप डाउन के बाद बट दैट इज ऑल्सो कम्प्लीटली डाउन। कुछ अगर बेरिश न्यूज आ गई गलती से ना निफ्टी में स्पेसिफिकली, ये मुझे ऐसा लग रहा है काफ़ी बड़ा फॉल हो सकता है अगर कोई बेरिश न्यूज आ गई, स्पेशली कुछ अटैक वगैरह अगर होता है ईरान और यूएस के बीच में कॉन्फ्लिक्ट का स्पेशली। डेली टाइम फ्रेम पे वैसे ही मार्केट बेरिश है और ज़्यादा बेरिश कर रहे हैं इसको। इसी तरह से अगर ये निफ्टी 50 भी गिरता है फ्यूचर में तो चांसेस हैं निफ्टी 50 फ्यूचर भी हमें वापस 24,700 तक देखने के लिए मिले। अगर कोई पॉजिटिव न्यूज़ नहीं आई, नेगेटिव आई तो फिर तो जाना ही है खैर इसको यहाँ। मोस्ट प्रॉब्ली वहीं जाके रुकेगा 24,700 के अप्रॉक्सीमेटली। निफ्टी थोड़ा सा ज़्यादा ही बेरिस हो गया है कंपेयर टू बैंक निफ्टी। बैंक निफ्टी में आज सेलिंग अच्छी आई है बट क्लोजिंग जो हुई है वीकली और डेली होने वाली है, 4 मिनट रह गए। Looks like Nifty is also going towards 24,700 again। ये सेम ही लेवल है जहाँ पर मार्केट अपने उसी लेवल पे था जहाँ पर मार्केट में एक गैप अप देखने के लिए मिला था आफ्टर द डील बिटवीन यूएस एंड इंडिया। मोस्ट प्रॉब्ली लग रहा है उसी डायरेक्शन पे वापस जाने की तैयारी है। देखोगे क्रूड ऑयल को भी देखोगे ओवरऑल तो बुलिश ही है। कल मार्केट में एक अच्छा मूव आया था, एक फाइनल टारगेट रह गया था छोटा सा ऊपर, हिट नहीं किया वहाँ पे अपर लेवल पे, थोड़ा बहुत प्रॉफिट बुकिंग आई थी, आज गैप डाउन हुआ बट फिर से रिकवर किया है। ओवरऑल बुलिश रेंज के बाहर कहीं निकल जाए तो मेरे अकॉर्डिंग सबसे बेस्ट वही रहेगा, क्योंकि रेंज के आइदर साइड निकलता है डाउन साइड पे तो नेक्स्ट सपोर्ट कल का लो, और अगर अपर लेवल पे मार्केट इस पॉइंट ऑफ इंटरेस्ट के ऊपर निकलता है तो फिर 6,200 की ओर चले जाएंगे हम। जब तक ऐसा नहीं होता है तो ये रेंज आप मान सकते हो मार्केट को रोक सकती है। तक रेंज के अंदर है, ज़्यादा बड़ा एसल मत रखना क्रूड में, रेंज के बाहर निकल जाएगा तो टारगेट ज़्यादा बड़े मिलेंगे एज कम्पेयर टू रेंज बाउंड प्राइस सेक्शन।
Trend, the technology trend, and the investment is real.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning. I'm Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. The media bidding war comes to an end. Netflix drops out of the battle to buy Warner Brothers, clearing the way now for Paramount's Skydance. How much is too much for AI? CoreWeave slips on heavy spending. Dell and Block jump on AI bets. And credit woes bleed into Europe. Banks scrambling to recoup money as market financial solutions hurtle towards collapse. Futures pointed lower. That rally that we saw very definitely arrested yesterday and today. The S&P was down 0.5%. Yesterday, the Nasdaq was down 1.2%. So that brings us firmly into the negative for the month, particularly the Nasdaq 100, which is down 2% now in February. If we look at Russell 2000 futures, they are also giving up gains and then some. They're the worst performers today. Let's take a look at bonds because we saw that 10-year break through 4%. That is very definitely now breached at 398.68 on the 10-year yield. So that curve coming lower as we see that Treasury bid increase, perhaps going into the weekend. Lots of geopolitical risk still out there as well. In currencies, the euro staying higher against the dollar after we saw some hot inflation prints out of Europe, particularly in Spain. All right, a lot to get to this hour, but let's get to some individual movers first. Here's Abir Abu Omar. Abir.
Good morning, Vonnie. Netflix is probably the biggest story of the day, gaining nicely in the pre-market, up around 7%, and that is after it said that it is no longer bidding for Warner Brothers. This is after Warner Brothers CEO came out and said the day before, late on Thursday, that Paramount makes up a more superior deal and provides possibly a better value for shareholders. So Netflix came out later and said no longer bidding. So that leaves a deal open for Paramount. We'll see how that goes. Paramount not doing much, and Warner Brothers down slightly this morning. And then moving on to Block. Block this morning, yesterday after earnings, the CEO came out and said that they're cutting 4,000 employees. Now that is about half of the workforce at Block, and this comes as AI comes and disrupts the workforce. Now, this is one of the questions that we started asking early on in the artificial intelligence boom. Is it going to replace jobs? And clearly Block is showing an example of that happening. And then finally, Duolingo. Now this is an earnings story. Earnings disappointed for the coming year. So the forecast of revenue for the year is slightly disappointing. But this is one of those companies that could be slightly a victim of the AI disruption boom, right, Vonnie? So it is again one of those companies that falls into the losers basket of the AI disruption or the AI boom that we've seen in the market over the past few months.
And cutting a phenomenal amount of staff as well, Abir. Abir, thank you so much. You'll be back later in the hour. That's Abir Abu Omar. And coming up in this hour, we speak to Anika Gupta of Wisdom Tree on the market rotation. We'll also speak with Dirk Ilverman, CFO of chemical producer BASF. Well, as Abir said, Netflix shares are higher after ditching its bid to buy Warner Brothers. Bloomberg Deals reporter Manuel Baigori joins us now on this latest turn. Manuel, is that it? Is it over? Netflix pulled out and basically conceded. It's no longer financially attractive, they say.
Yes, definitely. Vonnie, feels like we are getting to a resolution to this saga finally. And yes, Paramount, $31 a share offer ended up being a knockout offer that Warner Brothers couldn't pass on, and Netflix decided it will remain disciplined financially and just walked away from the deal. So yes, now this paves the way for Paramount to get a deal done. Obviously now the regulatory path remains to be seen how bumpy it could get, and obviously a lot of politicians, regulators and industry leaders will for sure weigh in and share their views on this potential very transformative transaction.
Did Paramount overpay in the end, Manuel?
That's a great question. They definitely were committed to getting the deal done, even after Netflix had an agreement in place with Warner Brothers. Right? It needs to be said that Paramount kicked things off a few months back, and they were definitely serious. They tried different ways to sweeten the bid and come up with addendums that would definitely make the board of Warner Brothers to consider their offer seriously, which they did in the end, and now they are backing it. So whether or not they are overpaying, Vonnie, what happens with bidding wars is that one of the parties ends up potentially overpaying, but obviously this is a very unique asset. It's one in a lifetime opportunity to combine these two big companies with so many assets and resources and content. Time will tell. For the time being, now Paramount has the upper hand, and we'll see whether or not they can clear regulatory approvals.
So Netflix is rallying on the news. That presumably is a short-term move. We'll see if it's sustained, because Netflix now has to double down, basically, and spend some of that money on content in order to keep its own customers coming back, right?
Exactly. Well, they clearly sent a message to the market, which is that they're here to grow, and they want to grow, and they want to expand. Acquisitions, obviously, is a tool that companies sometimes go to turbocharge growth, and in this case, it didn't work for them. But that doesn't mean that they may not explore other potential targets to grow via M&A in the future. And obviously, in the meantime, what they can do, and they will certainly do, they've said publicly, they will continue to invest in shows, in content, and grow organically. It's in their own interest and their shareholders to, for now, kind of remain disciplined. That also helps explain the market reaction to the news. But obviously, they will have to look for new sources of growth.
All right, Manuel, thank you so much. We'll wait for the sequel. Manuel Baigori, they're joining us. Block is reducing its workforce by nearly half, restructuring its staff on a bet on AI. Co-founder Jack Dorsey is saying on the earnings call, quote, "I think most companies are late. Within the next year, I believe the majority of companies will reach the same conclusion and make similar structural changes. I'd rather get there honestly and on our own terms." Joining us now is Bloomberg's Benedict Camel. Benny, thank you so much for joining. This move by Block, is it a precursor to moves by many other fintechs? Are fintechs really up against it now?
Well, that seems to be the message coming from Dorsey, and it's a remarkable statement in several ways. As you said, it's sort of straight on the nose, not mincing its words. He's basically delivering the statement saying, we need to do this now. We're not in trouble now, but if we don't do this now, we will be in trouble. And as a result, they are cutting 4,000 jobs out of 10,000, so that's a pretty significant cut. They are offering fairly robust severance, $5,000. But it's really sort of the tone and the delivery of the statement, which is, as I said, quite blunt. In some ways also delivered entirely in lowercase, which I thought was interesting, and really saying we need to do this now. We can either disrupt our industry or be part of the disruption, or we will be disrupted further down the road. It's not quite clear from the statement where exactly these issues are coming up. That was the part that was left somewhat nebulous, but clearly Dorsey sees something here that forces him to react. The investors like it. The stock is up quite significantly as a result, so they seem to think he's doing the right thing.
Absolutely, and Dorsey knows disruption if anyone does, right? Can we move to CoreWeave, the neo cloud company, sliding? It's been very volatile, obviously, but the heavy spending is alarming investors. Once again, swings and roundabouts for AI companies and adjacent companies.
Yeah, I mean, it's all about AI and sort of which side of the aisle you're standing on. Are you part of the disruptors? Are you being disrupted? Are you benefiting from the insane spending that is going on in the industry? You remember we heard from the likes of Meta and the likes of Google, parent Alphabet, saying we are spending hundreds of billions essentially, and CoreWeave doing something similar here, maybe not in that kind of stratosphere, but they are spending heavily, and investors are probably getting a little worried about the amounts that are being spent here, and that's why you see a sell-off on that stock. So there is that concern. Is there a bubble building? Are companies overspending? Can they keep it up? And CoreWeave clearly caught on the sort of more concerned side of the aisle here.
And Benny, just a quick word on Dell, because for once Dell is benefiting. Last time round it had a shocking decline, but it's jumping after predicting server sales of $50 billion, in fact.
Yes, indeed. So again, sort of the AI play and the infrastructure play. So similar to what we heard from CoreWeave, who make the data centers, Dell now making the servers, the AI servers, and they see robust demand here. They are also spending quite heavily, but they feel that this is sort of underpinned by the demand. their products are doing well, and as a result, again, here the stock up. So if you look at it across the aisle, you have some shares that are going up, like Dell. You have some falling quite dramatically, CoreWeave, and then Dorsey sort of in the middle, trying to catch the falling knife.
All right, Benny, thank you so much for joining us today. That is Bloomberg's Benedict Camel. In London, Market Financial Solutions collapsing with themes similar to those of Tricolor and First Brands. Joining us now is Bloomberg's Neil Callanan. So, Neil, MFS, obviously, a non-bank finance firm. Where do the similarities with Tricolor and First Brands begin and end here?
Yeah, what we're seeing is that regulators push banks to get out of lending to certain spaces, and so the positive from the regulatory point of view is that these are areas where non-bank lenders went in. The bad thing is the banks back these companies, shadow banks who are lending to these borrowers who now look quite shaky. And so the other concern, and this is probably a bigger one, is that many of these companies have far less equity than the banks would do. So banks, when they're giving out loans, they usually have about 10 to 15% equity. In the case of one of the companies related to MFS, it looks like it was 2%. So when things go wrong, they go really wrong, and there's bigger losses for the banks as a result. And that's why you're starting to see some of the nervousness after a great scoop last night about Barclays' exposure and so forth.
Barclays, Santander, there's so many names that are exposed to varying degrees. Now, no one's accusing any illegal activity or wrongdoing here, but there may have been double pledging. Is that normal?
No, that's not normal. So banks usually, they want to have first call on the collateral if things go wrong. So to see something in the court filings that there was alleged double pledging, that is something that would be a big concern to legally to the lenders and to the regulators as well.
I want to move to mid-cap financial investment because it's an Apollo private credit fund. Now, what it's done is mark down its portfolio on several soured loans and lowered its quarterly payout to 31 cents a share. And the markdown is only by about 3%. Yes. Are these things that happen on the regular and we just don't really notice them? Is it just that now we're hypersensitive to these things?
There is always some write-downs because private credit, by the nature of what it does play in a riskier pool of assets. So defaults do happen. What's concerning to us going forward is some of this is related to, again, a lender that was lending money to consumers where things started to go wrong and needed to be restructured. As a result, this BDC has had to take a markdown. And then in the wider sense, there are concerns about the levels at which BDCs, which lend to mid-cap companies, the marks at which they hold their.
ये कैंडल का ध्यान रखना क्रूड ऑयल में इम्पोर्टेंट है. क्लोज होने में 2 मिनट रह गए हैं. अगर ये ऊपर ही क्लोज हुई लास्ट कैंडल के तो फिर तो ये निकल गया, ऊपर ही जाएगा. ऊपर क्लोज नहीं होनी चाहिए, इसको क्लोजिंग ऊपर नहीं आनी चाहिए. इक्वल टू लो बना था, ओपन होते ही बाइंग आ गई थी इसमें. स्टिल ट्रेडिंग हाई, लास्ट कैंडल के ऊपर ही ट्रेड कर रहा है 6061 के ऊपर. दो पॉइंट से रह गया लग रहा है. क्लोज दिस कैंडल. ये 15 मिनट की कैंडल कितनी क्लोज हुई है. लास्ट कैंडल देखोगे उसका हाई 15 मिनट में 15 मिनट में इसका हाई 6061 था, लास्ट की लास्ट कैंडल 15 मिनट इसके ऊपर क्लोज नहीं होनी चाहिए थी, 1 पॉइंट से क्लोज हुई है 6062 6061। ठीक है, वो जो कैंडल थी 15 मिनट की लास्ट दैट इज 6061 हाई, प्रीवियस कैंडल की क्लोजिंग हुई है आपकी 6062, इस कैंडल की ओपनिंग देखोगे 6061 पे हुई है एग्जैक्टली, मतलब लास्ट कैंडल की जो क्लोजिंग इन्होंने दी थी इस कैंडल में डाउन ओपन कराया है 1 पॉइंट से 1 पॉइंट से। वन पॉइंट का गेम हुआ है 6061 लास्ट की लास्ट कैंडल का हाई, नेक्स्ट कैंडल की क्लोजिंग 6062 जो कि प्रीवियस कैंडल के ऊपर क्लोज वैसे नहीं होनी चाहिए थी लॉजिकली, बट जो भी एक करंट कैंडल ओपन हुई है दैट इज अगेन ओपन एट 6061, मतलब लास्ट कैंडल की जो क्लोजिंग है वो 6062 पे नहीं हुई है, गैप डाउन हुआ है तो उसको भी हम मानेंगे 6061 तक क्लोज किया, मतलब प्रीवियस की दो लास्ट कैंडल की हाई ऑलमोस्ट इक्वल है, क्लोजिंग और हाई इक्वल है, लास्ट की लास्ट कैंडल का हाई और प्रीवियस कैंडल का क्लोज इक्वल है 6061 6061। ओपन इक्वल टू लो जो कैंडल बनती है ना, दोज आर नॉट गुड एट रेजिस्टेंस, सिमिलरली ओपन इक्वल टू हाई इज नॉट गुड एट सपोर्ट। ये कल से अगर कोई ट्रेल कर रहा है तो थोड़ा बहुत निकालना चाहो तो एग्जिट भी कर सकते हो, ऊपर ऐसा कोई सस्टेन रेजिस्टेंस है नहीं अभी फिलहाल के लिए नेचुरल गैस में भी। कैंडल क्रूड ऑयल में गलत बन गई थी, ओपन इक्वल टू हाई, इसको ओपन इक्वल टू हाई बनना नहीं चाहिए था, बाद में वैसे ओपन इक्वल टू हाई निकाल दिया था इसने। दिस कैंडल बिकम ओपन इक्वल टू हाई व्हेन इट फॉर्म एट रेजिस्टेंस नॉट गुड फॉर एंट्री एक्चुअली। तो मैं सजेस्ट करूंगा यहाँ पर एक क्रूड ऑयल के सेलिंग वाले ट्रेड में थोड़ा सा वेट करना, अभी डायरेक्ट एंट्री मत करना इसमें। प्राइस को वापस आने देना एक बार नीचे 6036 के नीचे। ये है अभी भी पॉइंट ऑफ इंटरेस्ट के अंदर ही, बट ये जो प्रीवियस कैंडल है वो अपनी प्रीवियस कैंडल के ऊपर क्लोज हो गई थी, जो कि नहीं होनी चाहिए थी। अगर ये हुआ है तो ये ब्रेकआउट माना जाएगा। एक ही पॉइंट से हुआ है, 3 PM की 3:15 की जो कैंडल थी उसका हाई 6061, प्रीवियस कैंडल का क्लोजिंग 6062, तो लॉजिकली तो क्लोज हो गई है। बट ये कैंडल जो अभी करंट चल रही है ये वापस ओपन 6061 हुई है, एक पॉइंट गैप डाउन ओपन हुई है। तो वी नीड टू कंफर्म कि ये एग्जैक्टली अभी भी रेजिस्टेंस ही है या फिर ये ब्रेकआउट हो गया है, इसका सपोर्ट के तौर पे काम करेगा। अब प्राइस अगर वापस 6036 के नीचे क्लोजिंग आ गई तो इट इज़ स्टिल रेजिस्टेंस। नहीं आती है तो फिर ये ब्रेकआउट हो चुका है, ये दिस लेवल, दिस पॉइंट ऑफ इंटरेस्ट बिकम अ सपोर्ट। नया सिनेरियो है, बहुत रेयर बनता है इस तरह से। नॉर्मली अगर ब्रेकआउट होना होता तो थोड़ा एक दो पॉइंट से प्रॉपरली हो जाता है, नहीं होना होता है तो मार्केट क्लोजिंग तो नहीं देता है जितना मैंने देखा है। विक बना सकता है, क्लोजिंग नहीं देता एक के ऊपर एक दो कैंडल कंटिन्यूसली। बहुत रेयर होता है इस तरह से सिनेरियो, और अभी हो गया ये क्रूड में। अच्छा बॉटम बना है नेचुरल गैस का, थर्ड टाइम आया था कल। लेट्स सी कितना और मूव करता है यहाँ से। मूव करता रहा तो 265 तक, 264 की रेंज में जा सकता है वापस से प्राइस। नेचुरल गैस में भी ऊपर अगेन कोई मेजर रेजिस्टेंस अभी है नहीं, इसमें कुछ नया क्रिएट होगा तो देखेंगे। एक मेजर रेजिस्टेंस वो काफ़ी दूर है 278 280 की रेंज में, वहाँ तक तो मुझे लग रहा अभी इंट्राडे में जाएगा फिलहाल। लास्ट ट्रेडिंग सेशन है, थोड़ा सा क्वांटिटी का ध्यान रखना, अननेसेसरी रिस्क नहीं लेना है, अनयूजुअल मोमेंटम ना हो।
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
It is 5:30 a.m. in New York City and 10:30 a.m. in London. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. The media bidding war comes to an end. Netflix drops out of the battle to buy Warner Brothers, clearing the way for Paramount Skydance. How much is too much for AI? CoreWeave slips on heavy spending. Dell and Block jump on AI bets. And credit woes bleed into Europe. Banks scramble to recoup money as market financial solutions hurtles towards collapse. Let's take a look at these markets. We could be in for another down day for the S&P 500 after those 2 days of gains were arrested so unfortunately yesterday. We were down 0.5% actually on the index yesterday, down 1.2% funnily enough on the Nasdaq 100, which brings its loss just for the month of February now to 2%, and most of that's really just been on these AI earnings. Russell 2000 futures also very unhappy today, pointing to a decline of almost 1% for that index. Bonds-wise, the main thing to point out is that we are seeing the 10-year yield well below 4% now. It keeps clambering ever lower. That said, we're not that far below 4%. It's just that it seems to be quite a psychological mark. All right, let's get to some individual movers now this pre-market Friday. For some stocks to watch, here's Abir Abu Omar. Abir.
Good morning, Vonnie. Netflix, starting with Netflix, it is gaining quite nicely in the pre-market trade this morning. It's advancing about 8%, adding to some of those gains in the post-market we saw yesterday. And that is on the back of Netflix essentially saying that it's no longer bidding for Warner Brothers, which paves the way for Paramount to come in. And now Warner Brothers came out on Thursday, late on Thursday, and said that Paramount, at this point, the $31 a share offer provides a more superior deal for Netflix, for Warner Brothers. And now Netflix has moved on to say it's not about the company, it's just that the deal is no longer attractive. So investors are looking favorably towards that. Moving on to two sides of the AI story, starting with Block. Now, Block is doing very well this morning. It's advancing about 20%. And Jack Dorsey yesterday said that, this is an earnings story, but this is also on the back of job cuts, about 4,000 people that are cut off from Block, Vonnie. And that is as AI comes in and as the AI disruption comes in to replace some jobs. So the stock is doing quite well. Again, up 20%, pairing some gains, but still up quite a bit. And then finally, moving on to Duolingo, that is not doing well. And that is the other side of the artificial intelligence story. Duolingo retreating about 25% in the pre-market, a massive move downward. And that is on the back of earnings, but also this is one of those companies that may fall victim for AI disruption. So it falls in that basket of stocks that are probably not going to do so well going forward. Vonnie, back to you.
Yeah, we'll see if it changes strategy or does something with its business model. Abir, thank you so much. Abir Abu Omar. Anika Gupta of Wisdom Tree is watching the market rotation in the U.S. while preferring regions outside the U.S. with improving breadth and better valuations. Anika is Director of Macroeconomic Research at Wisdom Tree, and she joins us now. Anika, is this the year that we really should perhaps maybe not give up on the United States, but very definitely look elsewhere in the world, even as we see massive gains in places like Korea and even India?
Absolutely, Vonnie. We're seeing, I can echo those views. We're seeing the first half of 2026 display this, where we're seeing a rotation away from the narrow mega cap tech stocks, and that rotation take place not just across the US, so lower valued sectors within the US market, but also within other geographic regions. And I think that is gaining momentum. We're also in the heat of earnings season, and obviously earnings season is also creating that supportive backdrop. We're seeing earnings growth for the US still tracking low double digits. But what has changed is the market is raising the bar. And so as they do that, investors are becoming a lot more discerning in terms of, looking through the AI enablers versus just the, companies that are actually showing visible earnings, and versus just, the broader mega cap tech stocks. In addition, we are seeing, the non-tech rotation being solidified because investors are now rewarding the industrials. They're looking at the energy. They're looking at, more cyclical capex beneficiaries. And that is also leading to a broadening of the rally.
I'm curious, though, because you're looking at Europe and parts of Japan. Whereabouts in Europe, or would you just buy the broad index, the Euro Stock 600 or what have you?
Yeah, where we're seeing strength in Europe is primarily in the value-based sector. So Europe is a value-based market, and the banks have been the pillar of strength in 2025. And we're seeing an extension of that take place even in 2026. But in addition, now that we have Germany paving the way on the fiscal stimulus side. We are seeing sectors such as defense as well as civil engineering benefit on the back of that expansion in fiscal stimulus. But we're also seeing second order effects translate to other sectors such as services as well as the industrial part of the value chain. So Europe's value-based sectors are trading at a much more attractive valuation. In addition, we're starting to see earnings momentum increase. I mean, who would have thought that for 2026, we're going to expect an average earnings per share growth, close to double-digit numbers for Europe. And that seems to be the case this year. Within Japan, Vonnie, I would say...
Continue, yeah.
Yeah, within Japan, Vonnie, we are seeing a tremendous amount of momentum come on the heels of Sanai Takaichi taking hold of the administration and winning a landslide victory at the LDP elections, and that is really again paving the way for more constructive fiscal stimulus in areas such as the industrial sector, the defense sector, as well as the technology sector. We're also seeing less friction on the trade side between the US and Japan, and that just helps Japan be a key beneficiary at a time when trade tensions remain very high globally.
Anika, thank you so much for your thoughts today. So appreciated. That is Anika Gupta of Wisdom Tree. Coming up, shares of BASF down in Germany after it reported earnings as the chemicals manufacturer continues to face market headwinds. CFO Derek Elverman joins us next. This is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badant.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in London. Now to other top stories trending on the terminal this morning. Netflix ends its bid to buy Warner Brothers, clearing the way for Paramount to clinch its $111 billion bid for the historic Hollywood studio. Netflix said that while it believed its deal would have passed muster with regulators and created shareholder value, it didn't want to keep bidding. A new credit blow-up in London has Wall Street chasing billions. Non-bank finance firm Market Financial Solutions is collapsing. The theme similar to that of U.S. auto lender Tricolor, also that of auto parts supplier First Brands. A firm fills the financing gap that major banks ignore, while tapping big banks for the cash to do it. Banco Santander and Jefferies are among the banks scrambling to recoup their money. And a private credit fund overseen by Apollo marks down its portfolio on soured loans. Midcap Financial Investment, BDC focused on direct lending, lowered its quarterly payout to 31 cents a share from 38 cents and wrote down its portfolio by about 3%. The BDC turning to stock repurchases to boost shareholder returns and authorizing a new $100 million buyback plan. Turning to tech, Anthropic has rejected the Pentagon's latest offer, saying it fails to satisfy the company's desire for curbs on military use of its AI tools. This comes just a day before a government deadline for the company to drop its restrictions or face severe consequences. Joining us now is Tom McKenzie, host of Bloomberg Tech Europe. Tom, we have 12 hours to go before Anthropic might be put on a blacklist, right?
Yeah, absolutely. So the clock is ticking on this, and the Pentagon, to your point, have set that deadline for later today for Anthropic to agree to work with the Pentagon without restrictions. And those key restrictions for Anthropic are that their models and their AI technology should not be used in surveillance of US citizens. That's number one. And secondary, they should not be, and it should not be used, the technology, in terms of targeting lethal strikes on individuals without a human in the loop. Now, the Pentagon and the Department of Defense or Department of War, they want those restrictions removed. They do not want to have to answer those restrictions. They say they want to be able to use the technology within the scope of US law. They want a broader ability to make use of Anthropic's tools. So the standoff is there. This has been going on for a number of weeks. Dario Modi has met with Pete Hegseth, the Defense Department or Department of War Secretary, of course. They've had discussions, but it has become quite tense. And we'll see what happens. To your point, what the Pentagon is threatening to do if Anthropic does not agree, is to use a 1950s law to essentially describe them as a supply chain risk. That is a law that's normally applied to companies out of China, for companies like Huawei, for example. That can have all sorts of implications for Anthropic, which is one of the only AI companies that actually has a product that works in the Department of Defense currently. It could also open the door, of course, to their competitors, the likes of OpenAI and Grok, of course, of Elon Musk. But it's also a reminder that the Defense Department is reliant on Anthropic as a model, at least right now, particularly as it races versus China and that competition.
Some of the others have said they have no problem with the Pentagon's ethics rules, right? But it's not quite clear if they have the technology either. Tom, what's going on at Block? Is it changing its whole business model? It's cutting half its staff.
It's remarkable, isn't it? So Jack Dorsey, of course, famously the founder of Twitter, now X, and of course now the co-founder and the CEO of Block, announcing that he would be cutting almost half of the entire workforce of Block, 4,000 staff. And he says this is because they are investing more heavily in AI, that AI is doing more of the heavy lifting. AI is replacing the workforce. And he said, look, we're putting measures in place to support the people that they're laying off. But, and I'm paraphrasing, he said, we're getting ahead of the curve. We don't think we are too far ahead on this. We think everyone else needs to play catch up because of what we're seeing in terms of the efficiencies of AI. And it follows similar moves by the likes of Amazon, for example, and Salesforce to cut headcount, and they attribute that to the success they're seeing of AI. Now, the skeptics will say maybe something else is going wrong, maybe the businesses are just slowing down, growth is just slowing down, and they're pitting this on AI. But I think it's pretty significant that Jack Dorsey has come out and made this announcement. This is not a small number, 4,000, and it's a reminder of the tension in terms of the implications of AI on the labour force.
Well, when you think about it, the fintechs are, going to have to come up with some way to deal with this, right?
Yeah.
I mean, we saw PayPal also. It might be an acquisition target now by Stripe. You wonder what his new business model is, though. He hasn't really given us too many details. The neocloud company, CoreWeave, that slipped. It's been volatile, hugely volatile. But
yes.
What's the latest fear around CoreWeave?
Yes, well, it's a familiar fear, which is that it's going to have to spend very heavily to meet the demand that it's seeing from its hyperscaler clients. And just a reminder for viewers, this is a company that leases out data centers and GPUs, AI accelerators, those chips, to the hyperscalers like Meta and like OpenAI. What they came out with were numbers that there's a bigger loss than expected, and there's a bigger capex push coming through from CoreWeave. They're going to have to spend more to meet that demand, up to $35 billion US dollars. Investors did not like that news. They're also borrowing about $8 billion US dollars, and there's some analysis out there suggesting they're going to continue to burn through cash at least for the next 18 months.
It's almost reminiscent of the Bitcoin treasury companies, right? Michael and Trader comes out and says, of course we're spending the money, but it's okay, it's fine.
And their background, of course, was in crypto originally.
Exactly.
CoreWeave, yeah,
similar mindset. Dell having a better day for once, right? Dell has had a few down days recently, but it had a great day,
Yeah, and this is the other side of the AI story. This is why the AI story is so nuanced right now, and there's all these different threads to pull on, because Dell has lent very heavily into the AI server business, and they came out with numbers suggesting that they could turn around revenue from that part of the business, the AI service part of the business, potentially $50 billion US dollars in this fiscal year. They also have a record, what they describe as a record backlog of $48 billion US dollars. So they've pivoted, they've lent very heavily into the AI infrastructure piece around the data center servers, and it seems to be paying off for Dell. These numbers impressed investors.
It's so much tech news going on. Tom, you have to tell us when your next tech show is airing.
March the 13th, with a focus on what's happening with Sweden and why Sweden is punching above its weight. Population of about 10.5 million, but building out really potentially scalable and significant tech companies out of Sweden.
March the 3rd, we'll be watching. That is Bloomberg tech anchor Tom McKenzie there. Thank you. US and Iranian officials have decided to reconvene as soon as next week for a new round of talks. Oman's foreign minister showing optimism on yesterday's talks, writing, quote, "We have finished the day after significant progress in the negotiation between the United States and Iran. Discussions on a technical level will take place next week in Vienna." Joining us now from Washington is Bloomberg's Kasia Klimaszinska. So, Kasia, what progress is there actually to report if they're meeting again next week and there's still the threat of strikes?
We got some mixed signals about the talks yesterday in Geneva. As you mentioned, Oman, which mediated some of those talks, and Iran sounded relatively optimistic, but we heard from a U.S. source that the U.S. envoys Steve Witkoff and Jared Kushner maybe weren't that happy with the progress made, at least in the early morning part of the negotiations. But as you mentioned, the two sides, U.S. and Iran, will meet again in Vienna for technical talks as early as on Monday. They will be joined by some atomic energy experts, so we can expect some progress there, especially as President Trump has set a deadline of about 2 weeks, and there is also the threat of fairly significant military assets that Trump has amassed around the Middle East, around Iran. We don't know exactly what is being discussed. We know that the U.S. is asking for a lot. It's basically asking Iran to abandon its nuclear weapon program forever. So we'll hear hopefully more on Monday.
Yeah, I mean, the market not completely factoring out the possibility of an attack. We do have oil rising once again today. Brent is above 72 and WTI above 66. Now, moving to Russia-Ukraine, Volodymyr Zelensky saying there will be trilateral talks and the next ones will likely take place in the UAE, at least keeping Ukraine at front of mind in the media, right?
To some extent, yes. So when Jared Kushner and Steve Witkoff were in Geneva, they met with Iran, but also with Ukrainian representatives. And Volodymyr Zelensky was pretty much the only one that came out and gave some sort of a readout, a summary of those talks, saying there will be another round of negotiations in early March. But we didn't really hear any details about what sort of progress was made. And we know that Russia continues to attack Ukraine, and President Trump really hasn't been talking in any detail about those negotiations for a while now.
Kasia, on the domestic front, give us the update on what Hillary Clinton said in her deposition and what we know about that.
Hillary Clinton met with U.S. lawmakers yesterday in upstate New York. Today, we'll hear from Bill Clinton, even as those depositions are behind closed doors. But lawmakers from both sides, Republicans and Democrats, come out to brief the media. And Hillary Clinton gave a briefing yesterday. She described the deposition as very lengthy. She reiterated that she doesn't have any ties with Epstein. She didn't know him. She said that the conversations with lawmakers also touched on a range of other subjects like UFOs, the Pizzagate, that the deposition was fairly repetitive. But we'll learn more because the videos and the transcripts of those conversations will be released relatively soon.
Kasia, thank you so much for all the wonderful context from Washington, D.C. That's Bloomberg's Kasia Klimaszinska. Coming up, we're going to get you set up for your trading day, plus Berkshire Hathaway earnings and the letter out over the weekend. This is Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Hazlida Amin in Davos, Switzerland, and this is Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in London. The California pension fund giant CalPERS stands firm in its private equity conviction despite some of its peers shying away. The company's CEO, Marcy Frost, spoke with Bloomberg TV.
On the private credit side, we've been very specialized and working only with, high quality managers. We had a 8% allocation to private credit, and I think we're hovering around 4%. And we believe that that book is diversified enough that, the team is really not too concerned about the software exposure that we're hearing a lot about. On the private equity side, I know that was part of your intro. We're really proud of the private equity book and the reworking, of that book over the last 2.5 to 3 years. We did post a 14.3% private equity return last fiscal year. On the private debt side or the private credit side, we did post a 12.8% return last year. So we still have a lot of conviction in our private markets allocation and don't really see a need to change. But as always, we're very thoughtful and considerate around the managers we're working with, making sure we have good values alignment, but also making sure that the portfolio stays very diversified as we look through, all these different market cycles that seem to be approaching us.
And you said your current allocation works for the next 4 to 6 years. What gives you confidence in that time horizon, and what risks are you looking at?
Yeah, so on the private equity side, we're in a very strong liquidity position, and I know that that is not the same case that many of our public pension peers find themselves in. I know that there are public plans out there actually reducing their allocation to private equity and private markets generally. So we believe that the recalibration of the book that we did about 3 years ago how we do manager selection, the reduction of fees. We've reduced fees by about 100 bips in the portfolio over the last 3 years, which is phenomenal. It's just a great, some great recognition for the team. So manager selection, reduction of fees, including more co-investments, and as well as emerging managers. We still have very strong pipeline around emerging managers. We're targeting about 10% of the portfolio there. We went back into venture capital. There was a time that CalPERS stepped away from venture cap, and the team has found a way to re-enter. And again, about 10%, maybe up to 15% of the portfolio really focused on emerging managers as well as venture. So we have a lot of conviction because we've seen how this new recipe has worked for the team and for CalPERS over the last 3 years, and we don't see that effectively changing over the next 4 to 6, including the liquidity position of the portfolio.
CalPERS CEO Marcy Frost there speaking on Bloomberg. Now a look at what's ahead for your Friday trading session. First up, US PPI at 8:30 a.m. Eastern, expected to cool, but some of those elements that go into core PCE may heat up. Former President Bill Clinton set to testify on his Epstein ties before the House Oversight Committee later today. And then Berkshire Hathaway reporting earnings on Saturday, and of course we'll get that letter. Take a look at a few movers before the bell. Netflix up more than 7% after pulling out of the Warner Brothers bid. Block is up 19% now in the pre-market. It's cutting nearly half its staff. It's going big on AI. And Dell also up more than 11% after projecting AI server sales of $50 billion. Here's your macro picture for Friday. That does it for Bloomberg Brief. Surveillance is next. This is Bloomberg.
We are in such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
I think right now the street really more focused about the risks tied to AI.
We've got what I call AI derangement syndrome.
Right now, everyone's focused on the losers, how AI is going to hurt.
It's just hard to really square this momentum, this sentiment.
We need more diversification away from technology.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Friday, a domino falls. Jack Dorsey's blog taking a massive bet on AI, slashing its workforce, cutting almost 50% of its staff. Dorsey writing this: the intelligence tools we are creating, paired with smaller and flatter teams, are enabling a new way of working. On a call to analysts, he had a warning for the competition. I don't think we're early to this realization. I think most people are late. And a stock move may help others get there even sooner. Block is absolutely surging, up almost 20% in the pre-market.
This story encapsulates the entirety of the week to me, and frankly of this year, which is the key debate. How much is AI going to cannibalize from human labor and leave the jobs market with big holes? And how much are we looking at a lot of companies that are using AI as an excuse to get rid of underperformance, especially if they overhired? On one hand, you've got the doom scrollers saying that this is the telegraphing of what is to come at other companies, and this is how you monetize it. On the other hand, they're saying, well, Block was down 25% last year and down 16% so far this year, was bloated and was trying to trim around the edges. AI, a convenient excuse.
So which one is it? And we can get into it. That's the debate right now. Is this a domino or the first domino? And there's more to follow. Or is this just trimming post-pandemic bloat at the company?
It's like a Band-Aid, and if you think AI is going to be that disruptive and you're an executive, do you just rip it off quickly, or do you want to do a slow, gradual, basically depreciation of your workforce? But not just what it's been down in terms of the stock for the past year, down more than 70% over the past 5 years. So I find it a little bit interesting that Jack Dorsey says none of this has to do with financial.
This quote is doing a lot of heavy lifting from Jack Dorsey. We're not making this decision because we're in trouble. Our business is strong. Gross profit continues to grow.
And this is a reason why some of them are actually getting spooked, and why it is making the rounds, because it is speaking to something that people already feel. How do you monetize AI? Ultimately, with greater efficiency. How does that lead to monetization? Either broadening your footprint and getting more business, consolidating market share, or laying people off and having the AI bots do what they're doing. Look, whether Block is actually doing this purely because of technological advancements and this actually is a roadmap is almost besides the point. The fact that it has taken on a life of its own in markets tells you the mood of markets and just how self-conscious everybody out there is right now.
This is a green light. I'd go one step further. This could be a green light for others to follow. This could be cover just to make the cut you've been waiting to make, particularly with a move like that in the pre-market, up by close to 20%. It's difficult to imagine they'll be the only ones, regardless of whether this is post-pandemic blow or this is the real deal.
But that's the reason why it's so hard to delineate which is which. And this is the reason why so many people have said, yeah, there are big companies that have come out. There was one in Australia saying something very similar, saying it's so difficult to know whether that's actually the case or whether it's a convenient excuse. Oh, it's not us doing badly. Oh, it's not our faults. We're just subject to the new technology that's being bestowed upon us. At the same time, the fallout seems to be considerable. It's just that it's not here right now. It seems like this has been the most existential week in markets I've ever experienced. And all of the doom scrolling and different substacks on Twitter, I've gotten totally lost in them. It seems like everybody is in this debate.
Okay, Bramo? Do you need some time?
I think
I'll take some time.
I think Edgar Denny would say you might have, what is it?
AI derangement.
100% I do. Absolutely.
But then you have to think, I wish Edgar Denny was on today. What would he say to Jack Dorsey and this message that he posted, this statement about how much he is just relieving of the workforce because bots are going to take their job?
It's a massive move from Block and Jack Dorsey. We'll talk about it throughout this morning. The name is higher by close to 20% in the pre-market. Coming up this hour, we'll catch up with Stephen Orth, the Federated, with the S&P heading for a small monthly loss. Dan Dolev of Mizuho as Block slashes almost half of its staff. And Krishna Gua of Evercore as the Fed weighs tax impact on the labour market. We begin this out with stocks sliding following yesterday's chip rout. Stephen Orth, the Federated, lowering his year-end price target on the S&P to 7,500 and writing this. The sell-off was overdue, given the violence of the last few weeks. We remain cautious on software names as many are potential value traps. Steve joins us now for more. Steve, welcome to the programme. I've been looking forward to catching up with you, sir. Really interesting note. I think we should start from this. You are not bearish. You still think earnings are going to be OK. This seems to be a call on valuation, Steve. Just share with us your thoughts about how your thoughts on valuations are developing and comparing now to maybe where we were a few decades ago.
Yeah, Jonathan, actually, the piece you cited was
really inspired by a conversation you all were having on surveillance a couple of weeks ago about the confusion around the macros seem to be pretty good, yet the market is having trouble. And I think what we're saying is that the reason the macros are pretty good, but the problem with the market right now is that there's a whole hunk of it that was dependent on two different arguments for why it should have a higher valuation. One is the Mag 7 were giant free cash flow generators with big moats around them, and free cash flow is worth more in terms of a dollar earnings than an asset-heavy company because the dollars that come right back to the shareholders are supposed to have to be reinvested in the ground or a big piece of a big asset. And the Mag 7 are no longer free cash flow generators, at least for the present, because they're spending 80% of it, 90% of it on AI. And the debate around NVIDIA versus the Mag 7, or the rest of the Mag 7 is this going to go on forever or is this a one-off? And that debate's really not settled. So you've lost the free cash flow. And then on top of that, you've got all these asset-light businesses, Block being a perfect example, that, a couple of guys in a garage coding software, and that they were all the rage for the last 10 years because you didn't need any assets at all to generate earnings. It's all intellectual capital that you're selling at very high margins. And the question is, can those margins hold up in a world where your competitor is now AI, not a software engineer? And so those businesses are under pressure, and the valuation is a question mark. And so when you put the two together, the valuation, the idea of a fair valuation on the S&P, we think is lower than it was 6 months ago. So we've we've increased our earnings forecast, actually. We're at 410 3 years out now on earnings, which is ahead of the street a little bit because the macros look good. But a lot of that acceleration in earnings is coming outside of the set of stocks I just talked about. It's coming in, lo and behold, the asset-heavy businesses, that are actually doing pretty well, which, by the way, includes Europe and Japan and Asia and Korea, which I know you guys have also been talking about. But a lot of those businesses are the very businesses that are enjoying part of this pickup. They're beneficiaries of AI, and they're less prone to being cannibalized by AI.
So, Steve, as you know, for a long time, for much of the last decade, the US equity market, the index, has demanded a greater valuation, a higher premium compared to the rest of the world. Is that eroding before our eyes? Is that something that's not repairable given the shifts that you describe?
Well, I think it's still going to probably attain a premium for what it's worth. We've cut our long-term estimate on the multiple for the market from 22 to 20, whereas everything else we'd still say roughly call it 18. So we think it's still a premium for one because it's got a more fulsome capital market, more flexible, et cetera. And we've kind of exaggerated to make a point on asset light, high free cash flow. Sooner or later, the big Mag 7 companies will start generating cash flow. Either AI, again, free cash flow, either AI is going to work and they're going to have a lot more profits, or it's not going to work and they're going to pull back and generate free cash flow that way. So one of the things that's, I think, attractive about the Mag 7 here, and we think you can sort of pick within those, we like Amazon as an example right now, but one thing that's attractive about it is at some point they still are, their base businesses are still very, very profitable, and they can just return to that if they have to. So you're not dealing with a mirage in terms of what you've got here, and no one else really has that. So yeah, I think you're right. The premium's probably lower than it was, but we still think there's a reason to have a premium there. We just have cut it back. And really what we're trying to signal to our clients is we're probably in a kind of single-digit return market here, not a double-digit return market. And if that's the case, that changes what kind of stocks you want to own. As an example, dividend stocks, which are a big hunk of the value indices, you can get half your return in cash, basically, or at least a third of it. And, that starts to look a lot more attractive, a 3 or 4% dividend yield against an 8 or 9% market, as opposed to against a 15 or 20% market.
The story you're telling, Steve, seems to benefit companies that are harder to disrupt. I don't understand why NVIDIA isn't among those. I don't understand what happened yesterday, why the shares are down 5.5% after delivering earnings that beat expectations with 75% margins and talking about, ongoing pipeline that's really significant. What's the tell for markets in terms of this response to earnings that otherwise were pretty good?
Right. Lisa, one of the issues is there's not one narrative here. So the harder to disrupt narrative, that's really kind of the software names, high intellectual capital names. NVIDIA is not a completely asset-light business. It's a high free cash flow generator, and it falls into that ilk. NVIDIA is, in some ways, the primary beneficiary of the AI build-out, right? I mean, everyone needs their chips, and it's a pretty powerful story. That's why the stock has done so well in the last 5 years. But the debate around AI kind of centers on NVIDIA in a way, right? Either these Mag 7 companies, they would say, hey, we're kind of in a one-off spending cycle here. Once we get to nirvana, we'll be back to being high free cash flow generators. If that's the case, where's NVIDIA going to sell to, right? Because they've got to replace last year's sale first before they even start next year's sale. So on the other hand, if this is going to go on forever, and if you listen to Wang, he would say it's going to last 10 years, well, then NVIDIA is a screaming buy here because it's the only player in town. Maybe you could say AMD. So there's a real debate around NVIDIA right now. It's not a stock we hate, frankly. We would still be involved with that stock for that reason. It's not going to get cannibalized here. That's not going to happen. The question is AI going to work?
Yeah.
And is it going to keep growing out? And if it does, NVIDIA is a screaming buy here.
Steve, I just want to finish up. I know you're a really deep thinker, and I'm sure.
इसी क्रूड ऑयल में जिस चीज़ का डर लग रहा था वही हुआ जैसे मैंने बताया था वो जो कैंडल यहाँ पर क्लोज हुई ना ये 1 पॉइंट से कैंडल क्लोज हुई है लेवल के ऊपर विच गिव्स द ब्रेकआउट एक्चुअली ये यहाँ पर ना लेवल का ब्रेकआउट ही हो गया कैंडल एक तो ओपन इक्वल टू लो बनी और इसकी क्लोजिंग भी लास्ट कैंडल ये जो कैंडल थी 315 इसके ऊपर ही हुई है इवन दो 1 पॉइंट से हुई है बट हुई है सो इट एक्ट लाइक एज अ ब्रेकआउट इवन दो जो नेक्स्ट रेड कलर की कैंडल बनी थी उसने 1 पॉइंट से गैप डाउन दिया था बट आई थिंक वो क्लोजिंग सेम लेवल पे हुई है बहुत रेयर सिनेरियो बनता है इस तरह से सिनेरियो बहुत रेयर ही होता है नॉर्मल इस तरह के मार्केट में इस तरह से सिनेरियो देखने के लिए मिलता नहीं है या तो प्रॉपर ब्रेकआउट होता है फिर मार्केट फेक ब्रेकआउट होता है तो अगर विक बना के नीचे आ जाता है बट दिस कैंडल प्योरली क्लोज अबव दिस लेवल इवन विथ 1 पॉइंट से क्लोज हुई बट इट इज़ अ ब्रेकआउट मार्केट ने उसको ब्रेकआउट ही लिया है और ये काइंड ऑफ रीटेस्ट करके ऊपर आने की कोशिश कर रहा है इवन दो अभी भी लेवल पर ही है देखते हैं क्या करता है लेवल पे बना रहता है या फिर नीचे आता है यहाँ से ऊपर गया तो फिर चांसेस वही हैं कि ऊपर तक चला जाएगा प्राइस सीधा 6200 के अप्रॉक्सीमेटली दैट इज़ अ नेक्स्ट मेजर रेजिस्टेंस China gets EU approval for mRNA combination COVID flu shot. ओवरऑल क्रूड ऑयल बुलिश ही लग रहा है। नीचे आने के चांसेस कम ही है, ऊपर ही जाना चाहिए लॉजिकली। कोई न्यूज़ आती है तो बात अलग है। कि आज गोल्ड ऑप्शन की एक्सपायरी भी है, ध्यान रखना। इवनिंग पे हो सकता है थोड़ा सा वॉलेटिलिटी हो ऑप्शंस में। क्रूड ऑयल भी ओवरऑल बुलिश ही लग रहा है फिलहाल के लिए राइट नाउ। US State Department has authorized the departure of non-emergency government personnel and family members of government personnel from the American embassy in Israel due to the safety risk likely related to the tension with Iran. Stated that person may wish to consider leaving Israel while commercial flights are available. Travel advisory update. Authorized departure of non-emergency US government personnel and family members of personnel from US mission Israel. मोमेंटम अच्छा था कल, काफ़ी बड़ा मोमेंटम आया मार्केट में। ये मोमेंटम था, इस तरह का मोमेंटम मिले ना रोज मज़ा आ जाएगा। अभी फिलहाल के लिए मार्केट स्टिल रेंज के अंदर ही चल रहा है। गैस ने भी देखोगे बॉन्ड कल के बॉटम से ऑलमोस्ट 7 पॉइंट मूव किया है, थोड़ा सा और मूव करे तो देखते हैं 265 66 के अराउंड। सिल्वर भी देखोगे MCX में साइडवेज ही चल रहा है, स्टिल गैप अप जरूर हुआ था 6% बट स्टिल साइडवेज। कौन सा डेली में है ना वो तो। आई थिंक 97 के आसपास। ठीक है, यूएस डॉलर भी देखोगे कब से साइडवेज है, ऑलमोस्ट एक महीने से ऊपर हो गया है। फरवरी मंथ में कुछ मोमेंटम ही नहीं दिया इसने। लग रहा था $100 तक जाएगा, $97 के ऊपर सस्टेन करता है, तो सस्टेन करा भी $97 के ऊपर। काफ़ी टाइम हो गया इस मंथ के ब्रेकआउट में 18 फरवरी के बाद, अभी तक लेकिन गया नहीं है $100। क्रूड ऑयल को देखोगे पॉसिबिलिटी है जाने की 6200 तक, मोस्ट प्रॉब्लम मुझे लग रहा है 6200 में भी हिट टाइम इन क्रूड ऑयल अगेन। कल का ही लेवल था, आया नहीं था, पॉसिबिलिटी है वहाँ तक जाना चाहिए अब। ठीक है, देखो नेचुरल गैस में भी कुछ खास तो हो नहीं रहा है करने लायक। एक सेलिंग का ही ट्रेड बनाते हैं यहाँ पर, और कुछ कर नहीं सकते। ठीक है, ये इंटरनल लिक्विडिटी जोन भी मुझे लग रहा है शायद अब थोड़ा सा ड्रॉ डाउन करेगा डेफिनेटली। क्रूड में देखते हैं, नेचुरल गैस में ऑफ करना, रेजिस्टेंस लेता है नहीं लेता है, इसमें कुछ है नहीं, ट्रेड अभी सेलिंग का भी नहीं है। ये लेवल भी निकाल दिया है तो मोस्टली ऊपर ही जाना चाहिए। थोड़ा सा देखते हैं क्लोजिंग कहाँ पर आती है, 265 के अराउंड रिजेक्शन मिलता है या फिर नहीं। लगता है नेचुरल गैस आज क्रूड ऑयल के रिपीट करेगा. क्रूड ऑयल तो बहुत ही स्लो जा रहा है. नेचुरल गैस ऑलमोस्ट इस इंटरनल लिक्विडिटी जोन से सपोर्ट लेने के बाद कंप्लीट बुलिश. Last current candle open equal to low with gap up in natural gas. ऑलरेडी इंट्राडे में देखोगे 2% अप है. कल बॉटम अच्छा बना है, इसका मतलब ठीक ठाक लिक्विडिटी ले ली है. कल के बॉटम से बाय द वे जो कल का बॉटम बना है यहाँ पहली बार नहीं आया था, ये थर्ड टाइम आया था. फर्स्ट टाइम एक हाई बना था, दूसरी बार एक हायर हाई, ये कल थर्ड टाइम आया था. देखना पड़ेगा लोअर हाई बनाता है या फिर एक हायर हाई होगी. हायर हाई लास्ट टाइम जब मार्केट ने आई थिंक 600 का हाई बनाया था, 500 600 वहाँ तक गया था, वो था लास्ट हाई. वहाँ जाना मुझे मुश्किल लग रहा है अभी अनटिल कोई न्यूज़ नहीं आ जाती. करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम. यहाँ पर कहीं पर लिक्विडिटी भी नहीं दिख रही है नेचुरल गैस में, तो अब आज अभी वापस कल के बॉटम में तो आएगा नहीं इतना इजीली. टू 70 तक 71-72 के आसपास मुझे लग रहा है शायद थोड़ी लिक्विडिटी मिलने के चांसेस हैं वापस से नेचुरल गैस को अपसाइड अगर जाना ही है अनटिल अनलेस कोई नया फ्रेश और रेजिस्टेंस क्रिएट नहीं होता। तो एक पॉसिबिलिटी लग रही है 271-2 के आसपास वापस ट्रेड करने की नेचुरल गैस में। 262 चल रहा है, मतलब 10 पॉइंट यहाँ से और प्रीमियम बढ़ सकता है अभी। अभी लेवल 10 पॉइंट दूर है तो इतना इजी भी नहीं रहेगा प्राइस के लिए वहाँ जाना, पर लेट्स सी, कोशिश करता है अगर इस लेवल को हिट करने की नेचुरल गैस। 6:30 भी होने वाला है, न्यूयॉर्क सेशन विल ओपन, ध्यान रखना कैंडल थोड़ा सा वॉलेटाइल जरूर होगी। ओके गाइस, क्रूड ऑयल देखोगे कंटिन्यूसली बुलिश ही है। ये पॉइंट ऑफ इंटरेस्ट ब्रेक किया था, रीटेस्ट करके कंटिन्यूसली अपसाइड ही जा रहा है। देखना पड़ेगा यहाँ रिजेक्शन मिलता है नहीं मिलता, क्योंकि ये लेवल ही मल्टीपल टाइम टेस्ट है। ओवरऑल क्रूड ऑयल बुलिश ही है, कल थोड़ा बहुत रिट्रेस किया है ये। एक अपॉर्चुनिटी मिलती है नहीं, या फिर ये इसको भी ब्रेक करके जाता है और अपसाइड पे 7 PM पे एक डेटा भी है, उसका भी ध्यान रखेंगे, इंपॉर्टेंट डेटा है। सेल मत करना, थोड़ा वेट करेंगे, ठीक है। क्रूड ऑयल में कैंडल भी ओपन इक्वल टू लो है। यहाँ पे ओपन हुआ है, उसके साथ साथ ओपन इक्वल टू लो क्रूड। क्रूड ऑयल जिस तरह से मूव कर रहा है पॉसिबिलिटी है और ऊपर जाए 4 आवर टाइम फ्रेम पे देखोगे तो कंसोलिडेशन मेजर रेजिस्टेंस का दूर ही है पॉइंट ऑफ इंटरेस्ट ही है यहाँ पर प्लान नहीं कर सकते डायरेक्टली नेचुरल गैस भी सेम है The US State Department has evacuated non-essential staff from the US Embassy in Iraq. Chinese Embassy in Israel urged its citizens to boost security measures and be prepared for emergencies. The US Embassy in Baghdad carried out an emergency evacuation drill as per Al Hadath. लग रहा है अटैक होने ही वाला है Bets at Poly Market on an attack by Saturday night have surged in the past hour. देखो कुछ भी हो सकता है आज और कल आज तो खैर कुछ नहीं होगा कल परसों 2 days are very important. China has urged its citizens in Iran to leave the country as soon as possible. एक्सपेक्ट द वॉर डेफिनेटली. जिस तरह से सिनेरियो चल रहा है, कल परसों कुछ बड़ा देखने के लिए मिल सकता है. ठीक है, क्रूड ऑयल जस्ट रिएक्टिंग ऑन दैट. शॉर्ट करा नहीं जा सकता अब. मार्केट में भी देखोगे तो उसमें यूएस स्ट्राइक ईरान बाय फरवरी 28 और मार्च 1 सडनली इंक्रीज हुआ है. Almost more than 50% saying before March 10, more than 43% saying March 7th. मेजर न्यूज़ है ये फिलहाल के लिए, आप कह सकते हो. यूएस ने जो इवैक्यूएशन किया है इजराइल से अपने एम्बेसी स्टाफ को, दैट इज अ मेजर डेवलपिंग न्यूज़ राइट नाउ. There are very high chances that US will strike the Iran. US evacuates Israel embassy staff as Trump-Iran decision looms. US State Department announced on Friday that it started evacuating non-emergency government personnel from the embassy in Israel and their family members. Why this is matter? This decision signal that a joint US-Israeli military campaign against Iran could be imminent. In such a case, Iran could launch ballistic missile towards Israel and US target in the region. Earlier this week, the US evacuated all non-essential staff and their family.
For more than a century, Boy Scouts of America prepared over 130 million American boys to make moral and ethical choices, not just during their formative years, but for a lifetime as they grew into men. The first few words of the Scout Oath exemplify this. Quote, "On my honor, I will do my best to do my duty to God and my country." The Boy Scouts are embedded in our communities. They're sponsored by community organizations, service clubs, and churches. Many Boy Scouts have gone on to senior leadership positions in their communities, in business, in our nation's military, and as elected representatives in local, state, and national office. 6 Boy Scouts have been elected President of the United States. 11 of the 12 men to walk on the moon, Boy Scouts. Boy Scout training focused on responsible citizenship, character and leadership development, patriotism, personal fitness, self-reliance, faith, and a wide range of outdoor skills. It was a great program, and this department had a close relationship with the Scouts almost since its inception, as many troops meet on military bases. After 2012, however, the Boy Scouts lost their way, and a once great organization became gravely wounded. Diversity, equity, and inclusion, DEI, crept in. The name was changed to Scouting America. Girls were accepted. The focus on God as the ruler of the universe was watered down to include openness to humanism and earth-centered pagan religions. Scouting became an organization that no longer supported and celebrated boys. They even welcomed the destructive myth of gender fluidity and transgenderism to infiltrate their membership. Along the way, standards were lowered and merit destroyed in favor of an insidious, radical, woke ideology that is anti-America and anti-American. The result, membership cratered. Americans didn't want this. In 1970, 10 million boys participated in Boy Scouts. Currently, less than 1 million boys and girls participate. Further, many of these community organizations that once supported Scout troops, they withdrew their support. And Scouting America, the parent organization, filed for bankruptcy protection. The changes Scouting America made since 2012 have also jeopardized the relationship with this department. And I was very seriously considering ending our support of Scouting altogether. We have a department to protect, after all. Beyond that, the policies Scouting America have in place violate President Trump's Executive Order 14173, entitled Ending Illegal Discrimination and Restoring Merit-Based Opportunity. But before making this big change, I decided to meet with the current Scouting leadership to convey our deep concerns. Based on that face-to-face conversation and subsequent conversations, Scouting America agreed to make several key reforms. And let me briefly highlight a few of them. First, Scouting America has agreed to comply immediately with the provisions of Executive Order 14173. This includes reviewing and replacing politicized, divisive, and discriminatory language throughout the organization, programs, and all publications. No more DEI, zero. Second, the, quote, Citizen in Society Merit Badge that encouraged Scouts to explore diversity, equity, inclusion, and identity. They always mask it under a name that sounds great, but it's doing something else. And then asks those Scouts to engage in activism on those topics. That badge has been discontinued. Third, Scouting America will modify its policy to make clear that membership will be based solely on biological sex at birth and not gender identity. That means that the application, any application, will have only 2 sex designations, male and female, and the application must match the applicant's birth certificate. Scouting will also make clear that biological boys and girls will not be allowed to occupy or share intimate spaces together, toilets, showers, tents, anywhere like that. Fourth, Scouting America will honor those who serve by waiving the registration fees for children of active duty, Guard, and Reserve families. Should have happened a long time ago. Fifth, in partnership with the War Department, Scouting America will introduce a new military service merit badge. These and other changes that Scouting America's leadership committed to, in that room right over there, will hopefully result in a rededication to the foundational ideals that have defined Scouting for generations. duty to God and country, leadership, character, and service. However, as President Reagan famously said, trust but verify. This agreement is new, and the department's support for Scouting America is contingent on them making substantial progress toward reaching these and many other positive changes in the next 6 months. At that time, we'll vigorously review progress and decide whether or not to continue our support. The onus is squarely on Scouting America to deliver. If we're unsatisfied with Scouting America's progress toward and commitment to the agreed upon reforms, we will find them in violation of the President's executive order and cease our support. We hope that doesn't happen, but it could. Ideally, I believe the Boy Scouts should go back to being the Boy Scouts, as originally founded, a group that develops boys into men, maybe someday. There are also additional youth and boys organizations, groups like Trail Life USA and Awana clubs, that are already compliant with President Trump's executive order that the department may eventually support as well. But we're watching, and we're watching closely. We look forward to providing you with updates after our 6-month review, and wish the best to Scouting America.
क्रूड ऑयल मुझे लग रहा है शायद ये मूवमेंट काफ़ी बड़ा करने वाला है अपसाइड। मेजर रेजिस्टेंस के ऊपर सस्टेन कर रहा है। हायर टाइम फ्रेम पे देखोगे 6120 डिसाइसिवली सस्टेन कर रहा है। अभी 4 आवर की कैंडल क्लोज होने में लगभग 1 घंटा बचा हुआ है, 1 घंटा 50 मिनट। ये क्लोज अगर सक्सेसफुली हुई तो चांसेस हैं प्राइस ऊपर ही जाएगा, फिर उस केस में नीचे आने के चांसेस फिर बहुत ही रेयर हैं। ऑलरेडी कल लिक्विडिटी हाई जोन से ली है। पूरा टाइम फ्रेम पे सक्सेसफुली सस्टेन कर गया 6120 के ऊपर, तो फिर हम एक्सपेक्ट करेंगे कि हायर टाइम फ्रेम पे 4 आवर टाइम फ्रेम की बात कर रहा हूँ, प्राइस डिसाइसिवली मोमेंटम अपसाइड पे करना चाहिए टिल 6460। इंट्राडे में हो सकता है थोड़े मोटे रेजिस्टेंस मिले, हायर टाइम फ्रेम पे देखोगे कांट सी एनी मेजर रेजिस्टेंस आफ्टर दैट। कि दोनों डेटा आ गए हैं, कोर पीपीआई का दोनों डेटा पॉजिटिव है, डॉलर के लिए नेगेटिव फॉर गोल्ड एंड सिल्वर। 8 PM यूएस मार्केट का वेट करेंगे अब। मैं तो सीधा 6000 7000 ही दिख रहा है मुझे तो। 7000 से पहले लगता नहीं होल्ड करेगा ये। तो 6250 के अप्रोक्सीमेटली। क्रूड ऑयल मैसिव ब्रेकआउट की ओर जा रहा है 4 आवर टाइम फ्रेम पे। आज का कैंडल क्लोजिंग बड़ा इंपॉर्टेंट रहेगा, आज और कल का। तो मार्केट क्लोज है, ये 4 आवर की लास्ट दो कैंडल कहाँ क्लोज करती है, क्योंकि इसके बाद सिर्फ एक और कैंडल होगी शायद। बाकी नेचुरल गैस में देखते हैं, नेचुरल गैस में थोड़ा कम रिस्क है क्रूड ऑयल के कंपैरिजन में। क्रूड ऑयल में तो बहुत ज़्यादा रिस्क लग रहा है सेल करने में। इसका मतलब ये नहीं कि मैं नहीं कह रहा हूँ सेलिंग नहीं आ सकती, प्रॉफिट बुकिंग तो आती रहेगी, बट सडनली कोई न्यूज़ आ गई तो मार्केट ऐसे भागेगा ना ऊपर। जिस तरह से लोअर एंड पे जो पॉइंट ऑफ इंटरेस्ट है वो ब्रेक किया है, रीटेस्ट करके ऊपर गया है, चांसेस हैं ऊपर के जितने रेजिस्टेंस है वो भी होल्ड ना हो। नेचुरल गैस में एक ट्रेड प्लान करते हैं सेलिंग का, थोड़ा सा और ऊपर आए ये, यहाँ से काम नहीं चलेगा, थोड़ा और आना पड़ेगा एक बार। क्रूड में अब सेल करने में डर लग रहा है, लेकिन बाइंग के लिए भी पुल बैक नहीं आ रहा है, नहीं तो बाइंग ही करते। कल से बाइंग ही लगाया हुआ था। यहाँ पर भी मैं एक्सपेक्ट यही कर रहा था कि ये थोड़ा सा नीचे आएगा, यहाँ से फिर से बाई करके ऐसे लेके जाएंगे। ये होल्ड ही नहीं किया इसने पॉइंट ऑफ इंटरेस्ट। कोई नहीं, ऐसा भी होता है। इनका प्लान रहेगा, यहाँ आता है प्राइस तो इस एरिया के आसपास थोड़ा सा प्लान रखते हैं सेलिंग के लिए। मोस्टली तो 268 को ऐड करके 3 पॉइंट ज़्यादा रखना था, 2.5 में ही रखते हैं। यहाँ से ज़्यादा तो रखेंगे नहीं रेट को। 1/3 1/6 में डाल दें इसको। टेलो ये पहुँच जाएगा फिर 1/6 के अकॉर्डिंग। अपनी क्वांटिटी का ध्यान रखना, ठीक है। क्रूड ऑयल में तो मार्केट सडनली अपसाइड जा सकता है, नेचुरल गैस में उतने चांसेस नहीं है अगर कुछ न्यूज़ वगैरह आती है फिर भी। 1/3 is enough। बाकी अब कोई डेटा भी नहीं है आज, डेटा जितना आने थे आ चुके हैं कंप्लीट सारे के सारे। अगर ये नीचे आता है थोड़ा सा प्राइस तो बाइंग ही करेंगे नेचुरल गैस में भी। ये ठीक है लेवल। यहाँ पर लिक्विडिटी है क्या? यस। अगर ये पहले ऊपर गया तो सेलिंग प्लान करेंगे, नीचे आएगा तो बाइंग प्लान करेंगे इन नेचुरल गैस 15 मिनट। लेकिन में से जिस भी लेवल में पहले आएगा तो ट्रेड वहीं लेंगे, नीचे आता है तो बाई करेंगे, ऊपर जाता है तो पहले एक सेलिंग का प्लान रखना, दोनों ही जगह पे अच्छा लेवल है। वैसे बाइंग ज़्यादा अच्छी रहेगी मुझे तो लगता है इन नेचुरल गैस, दोनों ही जगह पे ऑलमोस्ट मिडल ऑफ द लेवल है प्राइस अभी इन नेचुरल गैस। कल मैं हायर टाइम फ्रेम पे देख रहा हूँ, ब्रेकआउट तो हो गया है, 4 आवर की कैंडल आज की लास्ट दो कैसे क्लोज होंगी बड़ा इंपॉर्टेंट रहेगा, या फिर मंडे को मार्केट कहाँ ओपन होता है, दैट इज ऑल्सो इम्पॉर्टेंट। This current candle and next 4 hour next candle both are very crucial for the price। ठीक है, इवन दो रेजिस्टेंस है यहाँ पर, बट बहुत ही रिस्की लग रहा है सेल करना क्रूड में अब। ब्रेकआउट पर है अभी क्रूड, इसके ऊपर एक और कैंडल क्लोज हो गई तो मजा आ जाएगा। ऑलमोस्ट 2% पॉजिटिव है, कल से देखोगे मार्केट ऑलमोस्ट 400 पॉइंट दे चुका है, ऑलमोस्ट 400 पॉइंट। ऑयल फ्यूचर जंप ऑन राइजिंग यूएस ईरान कॉन्फ्लिक्ट। ठीक है, सिनेरियो देखो जैसा मुझे दिख रहा है 4 आवर टाइम फ्रेम पे, तो प्राइस यहाँ से अगर प्रॉपरली ब्रेकआउट किया तो फिर ये इसके थोड़ा चार्ट को एनालिसिस करें ना, 4 आवर टाइम फ्रेम पे एक्सपेक्टेड रहेगा एक तो यहाँ तक सिनेरियो मिल ही सकता है इजीली। 1000 तो फिर फिक्स ही है, इसके ऊपर देखना पड़ेगा प्राइस नेक्स्ट कहाँ बनाता है। 4 आवर टाइम फ्रेम पे एटलीस्ट 7000 तो दिख ही रहा है। इन केस ऑफ कॉन्फ्लिक्ट करंट लेवल से अगर देखा जाए तो अप्रॉक्सीमेटली 13% इज इनएविटेबल, ये होना ही है अगर वॉर होती है तो। देखो क्रूड ऑयल में भी प्राइस नीचे आएगा तो एक प्लान करेंगे वापस से बाइंग का अब इस लेवल पे। यूएस मार्केट देखते हैं कहाँ ओपन होता है। ऊपर आप 6320 6480 दो लेवल हो सकते हैं जहाँ पर पोटेंशियल रेजिस्टेंस मिल सकता है प्राइस को। ETF spokesperson, we are aware of the feeling of uncertainty in the tension prevailing in the public in light of the regional developments. The Israeli Defense Force is closely following the situation in Iran and is alert and ready to protect you. We are operating in full coordination with our partners in order to strengthen the defense. IDF forces are alert and ready so that you can continue your routine in safety. Future jump on rising US-Iran conflict risk. सब न्यूज़ ही चला रही है मार्केट को। देखते हैं क्रूड नीचे आता है तो यूएस मार्केट ओपन होने वाला है, थोड़ा देखते हैं क्या हो रहा है वहाँ पे, कुछ पता चलेगा यूएस मार्केट की ओपनिंग के बाद।
His wife, Hillary Clinton, was deposed a day earlier. She said she never met Epstein and insisted her husband knew nothing of his crimes. Lawmakers called the subpoena unprecedented as Democrats push for President Trump to testify as well. Wells Fargo is expanding its lending business to work more closely with smaller private equity firms. The bank has launched a new team to provide loans and connect those firms with its growing investment banking division. It's part of a broader push to compete more directly in the private credit market. Danny?
And Bank of America did that recently as well, we should note. Elsewhere, Paramount shares are climbing as it plans to spend $111 billion for Warner Brothers. Let's bring in Okapi partner CEO Bruce Goldfarb. His firm is a proxy advisor for Paramount, so would be helping with understanding what the shareholders of Warner Brothers might want. Bruce, probably one of the busiest men in America at this moment. How are you thinking about this? What's next for shareholders?
Well, there's a lot for shareholders to still do here. There's still going to be a vote, but more important, right now, think about what a great day it is for shareholders relative to the sort of battle that was going on. There's more to come. Over the past few days, we've had shareholders calling and saying, what is going to happen next? And that's a lot of what we do. We communicate with shareholders of all sorts. We had a lot of retail shareholders calling, as you may appreciate. Warner has a lot of retail shareholders, including former AT&T shareholders who now own Warner. And then there are institutions and ARBs and hedge funds. So there's a lot more to come. But it's a win for all. If I think differently, And if I give Warner some credit for a great movie this year, for us, it's been one battle after another.
What an incredible film.
It is really good.
Absolutely. And we have been busy with not just this situation, but so many others, whether it's on the activist front, representing some companies who are going into proxy season, and we've had M&A, and there's a lot of other contested situations that have happened, friendly deals where investors want to check on the price that's being offered. They want to talk about process. They want to make sure that they're getting value like they're going to be getting here at Warner.
First of all, I went to see that film twice in the theater. And I wonder if Paramount hasn't, much like the assassin in one battle after another, bitten off a little bit more than it can chew, because they're taking on a lot of debt to make this happen. Now, I know that they need to do that. All the media analysts we've spoken to have said this has to be part of the plan. They have to have Warner Brothers to succeed, and that looks like they will. But how much money are they going to have to make to cover it?
That's not for me to talk about today, Matt. There's a lot to come out, and I know we are working with some of the smartest people in the business.
What about the Netflix side of things? Because this is a company whose shares had been hit really hard on this. Again, putting on not necessarily your Paramount advisor hat, but your proxy advisory hat. Do you think this would have been a company ripe for an activist to come in had they actually gone forward with this deal?
Well, appreciate that Netflix is a large company. Their shareholders do care about the situation. And if you look at shareholders, largest shareholders of Netflix, you look at largest shareholders of Warner, Paramount, there's a lot of cross ownership. And each of those companies would have heard from their shareholders. That's what happens in every situation. The shareholders have opinions. Part of our job is to help our clients understand who those shareholders are, how they think and behave about situations, put our clients in communication with the shareholders so that they can make the right decisions, so that they can execute on the deals that they want to do. And that's certainly what's going to happen here.
By the way, have you noticed that Danny Berger has a new deals show? Every Wednesday at noon, an hour-long show focused solely on M&A, because it's such a busy time right now.
I know that, and I've been watching. It's great.
What do you think? Obviously, it's the start of proxy season, so we're starting to get these various things coming in. I know you work with Elliott as well. They're looking at Norwegian cruises. What do you think the play is here? Because this is a firm that doesn't necessarily like to go all the way down the road of the proxy fight. What do you think the ultimate end game is for this?
Well, I don't know that I would characterize any activist as a firm that's unwilling to go and have a proxy fight.
Right.
The reality is that when an investor like Elliott, who is very smart, very sophisticated, wants to look at a situation, they've done their homework, they have a thesis, they're presenting that thesis to management, to other participants, to shareholders, and if they need to have a proxy fight, they have a pretty good sense that they have a possibility of winning, a probability. I mean, we help them with that, and we help them understand whether or not they're going to win. We've worked with a lot of investors over the years and companies where we lay out the odds and say, you're not going to win or you're going to win. You have to really know what's going to happen with the different shareholders. But ultimately, it is about value creation. And whether we're talking about cruise lines, shipping container companies, dry bulk companies, whether we're talking about entertainment and media, oil and gas, there are so many sectors where we have this uncertainty in the market, and companies need to articulate their plans to their shareholders, or they're going to have investors speaking up saying, you need to do it a little better.
So what have you heard? What has been the reaction from shareholders? Let's just take Elliott Norwegian as an example. Have they been pretty welcoming that, yes, this is a company that needs an injection of life?
You find almost every time that Elliott comes into a situation, the shares go up. So the reaction is almost immediate. And that kind of reaction is what helps a company understand whether or not there's something to be done here. Now, we work with a lot of companies, too. And we help those companies understand and appreciate whether what an investor is saying is worth pursuing more. And frequently we find that the good ideas come from management, boards heard them, but also these shareholders. And other shareholders will then amplify what an Elliott is saying. And that's where you end up with potentially the value created from investors speaking up.
Bruce, you have so much experience in this arena, and from Cravath to Columbia to Okapi now. I can make a comment or try and compare and contrast the regulatory environment under President Trump and President Biden, but I don't know it as well as you do. Is it really as stark as I would have thought?
There's a lot of differences in how all of the participants are looking at transactions now. We worked on a number of situations during the Biden administration that, frankly, were hard to get done or didn't get done. We worked for Spirit Airlines. And so you talk about a situation that maybe should have been done with Frontier.
It feels like nothing got done under the Biden administration, and everything can get done now. Is that...
I mean, when we're talking about things like Stripe buying PayPal, like two direct competitors, it feels like deals are being dreamed of that never would have happened before.
And probably to the benefit of investors and to the benefit of the markets in general. That's the exciting part of what we do. We do talk about how we communicate these deals to investors who have the same kind of questions that you do, Matt. Is this something that can achieve regulatory approval? When is it going to happen? Should I be buying now? We don't make investment advice. We don't give investment advice to clients, but we help them understand the timing and what could happen next.
All right, very cool. Great having you on. I hope we can get you back, or maybe you'll go on Danny's Deal Show.
We'll take both. We'll happily take both.
Danny's Deal Show, Wednesday at noon. It's a do not miss if you care about this environment. Okapi Partners CEO there talking to us, Bruce Goldfarb, about not just Netflix and Paramount, but about M&A in general. Less than 4 minutes to the opening bell. We begin the trading day with Anastasia Amoroso. Stay with us for that because futures are down hard. This is Open Interest.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US, or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed, Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller. Take a look at futures because in a month that's already looking like a loss, they're down 1% on the S&P right now. NASDAQ futures down even more, and the small caps down 1.5%, even as the 10-year yield comes in below 4%. And Danny tells me this because PPI was just too high. You see here, well, that's Jim Neeson. He's the managing director and founding partner at the Connor Group. Great guy to ring the bell today because they're holding an IPO summit, and that's what the NYSE probably, definitely, absolutely wants more of. They're getting one down at the NASDAQ. Generate Biomedicines ringing the opening bell, raising $400 million in an IPO, so that will start trading today. Danny, there's a lot going on in these markets.
Yeah, and a lot going on that we're freaking out about, that we're like, there's, fires to be put out. I mean, whether or not
this story, by the way, that you're about to show us is the perfect end to a week that started with Citrini research, right?
That is actually so well put. Of course, this is the logical conclusion that you get a warning that maybe the white-collar labor market is going to be completely different, and then you have a company saying, yes, that is what's happening, and that's what we're doing. Block cutting 4,000 jobs. Jack Dorsey saying that AI can replace those workers. But Matt, we talked about this earlier in the hour. There have been many who have said this was a bloated company and they would have needed to make those layoffs anyway. And maybe AI is a convenient excuse. Whatever it is, shares are higher by 17.3%. So, or now 18%. So maybe this is the model to follow. Your shareholders will reward you if you cut a whole lot of employees and say it's because of AI.
Right. I mean, he also raised his profit forecast at Block. So that doesn't hurt. OpenAI announced a strategic partnership with Amazon to bring more models to AWS customers. Amazon will invest $50 billion in OpenAI, which is now valued at $730. I think in total they got $110 billion of investment, and they're going to buy some Trainium chips, which is the part that I find interesting as well in the battle to see if anybody can catch up with NVIDIA. Let's bring in Anastasia Amoroso, Partners Group Chief Investment Strategist of Private Wealth there at Partners. Anastasia, great to have you here.
Good morning. Good to see you, Matt.
You know, last time we had you on, we probably asked you if there's a bubble in AI, and that is no longer
I said no.
a discussion, right? Now the concern is AI going to, well, kill us all, right? I mean, Anthropic has said we're not going to let AI control weaponry, and it seems like the Department of Defense wants that to be the case. But what do you think about all of this investment? Are we just going to see it continue to climb higher and higher and higher?
I do. I think the Amazon and OpenAI news is really telling, and that is you really see companies, the Gen AI companies like Anthropic, like OpenAI, really gain traction, and not only in terms of adoption, but also in terms of monetization. And for example, if you tally up the revenues for the top 3 leading AI companies, they were $54 billion or so this year, or projected to be this year. They're projected to grow to $307 billion by 2030. So that's the revenue growth trajectory that allows the likes of OpenAI to raise that. And the other thing, Matt, I will say, I will bring it back to our business, and I wanted to share an announcement with you today that we've announced that we've sold one of our data center portfolio companies at North to Equinix, which is one of the largest digital infrastructure companies, and also Canada Pension Plan. And the reason I highlight that is because we've been long convinced in the data center opportunity set, and the fact that OpenAI sees revenues, is able to raise funds, they're going to route those funds back into data center capacity and semiconductors.
Wait, if you're convinced, why sell?
Well,
I mean, selling is like okay, we're at the top
well,
here.
Presumably you're buying some stuff too.
Well, this is also not our only data center holding. Look, we've been data center investors since 2020. That's when we first, unveiled the data center theme, and we've invested about $5 billion in data centers in Europe, in North America, as well as Asia. So we certainly do still have exposure. But Matt, to your point, why sell is because we've really worked alongside at North to scale the company, to really scale the data center platform from what was 2 sites at the onset to now 8 sites focused on the Nordics region. And we've grown the EBITDA about 14-fold. And as a result, we're able to help the company, I would say, to help ensure compute is more available in the world, and also help our clients achieve pretty significant returns, over 30% compounded annual growth rate, or 2.5 times in terms of capital return on capital invested. So that's the reason. And we also believe that depending on where the company is in its life cycle, we were the right owners for that company when it was small, when we were building that up to a mid-sized scale. Going forward, Equinix and Canada Pension Plan, we believe, are the right owners. However, we do believe very much in at North as well as data centers. So we are reinvesting a share there as well.
And again, as you mentioned, Partners Group has been doing infrastructure for some time now. It does feel like for the world, for private capital, for public equities too, it feels like a shift has happened. We're out of COVID. We love these software companies that are just a couple of dudes coding in a basement because they're super asset light and margins are fantastic. Now it feels like it's shifted. And correct me if I'm wrong here, that asset heavy infrastructure, real world, this is where it's better because it's protected from AI.
That's right. That's exactly what the market is telling you this year. I mean, it's stunning. You look at the S&P and it's barely flat, or maybe even down a little bit for the year, depending on the day that you look at. If you look at data centers, for example, they're actually up about 20%. If you look at defense companies, they're up, and semiconductors are faring better than software. I think it's spot on. And if I look at sort of how CapEx is shifting, has shifted in the last few quarters, the software CapEx has been slower versus the hardware CapEx has certainly been picking up. And let's just say something else here. It's not only data center CapEx that's driving that. This year we have seen sort of this inflection point, and whether it's utilities, whether it's capital goods, whether it's commodity producers, they too are participating in this hard asset CapEx. The last point, Danny, I will say, look, if you think about software, parts of software, you can disrupt that with a stroke of perhaps Anthropic code. But if you think about a piece of machinery, a piece of equipment, you can't make that obsolete overnight.
It seems like, yesterday we had weekly payrolls, and I didn't even notice.
Nobody noticed economic data
Danny,
this week.
Danny had to point out PPI to me as the reason for the small caps dropping. Like, economic data, Mike McKee is not sitting here.
Or even earnings, to be fair, too. I feel like we're also kind of overlooking really good earnings, too.
Good point.
Doesn't seem to be what's driving the market.
Is it distracting us too much?
Well, I actually wrote this in my notes that I can't remember a time when we paid so little attention to economic data, but let's do actually pay some attention to that. And I think the reason for that is because the economy has been quite strong. Whether you look at the consumer side, which is being boosted by the refunds as we speak, whether you look at, also the consumer side being boosted by the rate declines as well. But I'm really encouraged once again about the rebound that we're seeing in corporate CapEx. And, what was sort of a single engine economy may actually have multiple engines to it. It's the tailwinds of tax policy. It's the tailwinds of productivity, which we talked about from AI. So, so I think.
But what's your take, Anastasia, on the labor market? Because Danny mentioned software hiring
is up 11% year-over-year on Indeed. Yeah.
On the same day that Jack Dorsey is like, everybody else, we're getting ahead of this. Everybody else is going to have to fire half their staff too.
Yeah.
I was reading Data Trek. Nick Colas pointed out that people are still demanding work from home, and a sign that the labor still has kind of the upper hand here. Which is it?
Yeah, I mean, for now, but I would say the labor market is shifting as we speak. If you look at the layoffs last year, about 5 or 6% of them were attributed to artificial intelligence. But there's this big category of economic conditions. Who knows what's all in there? I think as we move forward, you'll see that share of layoffs due to AI rise. And if you look at it on a very granular level, if you look at the labor force and who has the greatest automation potential, about 1% of the labor force today has 100% automation potential. Guess what happened with that category of jobs? They have started to roll over. Now, a quarter of the labor force has a 90% automation potential, and we've seen employment in that sector stagnate as well. So I do think that whether it's the Klarna headlines we got a little while ago, whether it's Block, I do think more of those announcements are to come. So I don't buy into the Citrini dystopian scenario that was described on Monday, but I do think there are cautionary notes in it that we should be watching.
Anastasia, this has been so fantastic. Thank you so much for joining us. These are such
Thanks so
complicated
much.
topics, and you speak on them so well. Anastasia
Thank you.
Amoroso. Let's get a check on your equity market right now. It's not looking like a great day. We are down nearly 1%. 327 stocks are down, only one unched today. 177 are higher. As to the higher stocks, the one that's leading the pack right now is Netflix. They're going to get a nice $2.8 billion breakup fee. You could probably film a couple movies. Oil and energy, that's having a good day too. The U.S. and Iran talks continue next week as the force buildup continues. Dell, those earnings good because of AI server demand. And then Block, this is the story we've been talking about. If I need to remind you, firing 40% of the workforce, they say, because of AI. Nvidia not having a great day. Neither is Microsoft or Apple or Broadcom. These are giant stocks, and that's why the index is down. Nvidia dragging the index down by 9 points so far this morning. Let's look at the sectors. It's going to look much the same in that infotech is down. The credit card company is also having another bad day. Consumer discretion, that index has been beat up this month. And then you get the safety plays at the top. You get consumer staples, energy, that's surrounding Iran. And Matt, I got to say, I know we're going to talk about this later, especially with David Gura on their new weekend show. But with all the things that are playing on in the background that we're ignoring, the economy, the earnings, I wonder if we have to add Iran to there. Are we paying enough attention to what could be some serious escalation?
Well, and I mean, who better to talk about that with than Christina Ruffini, who is going to co-anchor that show with David Gura. I'm very much looking forward. This weekend, actually, MotoGP starts the 2026 season this weekend.
Wow.
So it's already been on my calendar since last November, and the Bloomberg Weekend Show.
You're just going to be sat on the couch, glued to the TV all weekend.
Absolutely.
Love it.
Positively. Coming up, open to talks. The Pentagon responds to Anthropic after rejecting its offer ahead of today's deadline. We'll discuss something that could be even scarier than the Citrini research report next. This is Bloomberg Open Interest.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Let's get you some top calls. The analyst action, the sell side that we are following this morning. First up, TD Cowen. They upgrade Southwest Airlines, saying that airline demand looks stronger this year. The firm also says changes to Southwest loyalty program will help to boost earnings, but the real test is whether customers will keep their credit cards over time. Shares down 1.7%. Next up, Cars.com. That gets downgraded at JP Morgan. The firm says that it's hard to see when the company will start growing faster. The analyst says that competition is heating up, especially from AI tools and bigger companies offering more complete services to car dealers. Those shares down 6%. And finally, Morgan Stanley cutting Duolingo, my beloved owl, saying it was wrong to expect that the company could grow users and make more money at the same time. The language learning software company reported an outlook below expectations. Evercore ISI, JP Morgan, Citi downgrading the stock, shares down 20.5%. And unrelated, I currently have a 50-day streak on Duolingo. Matt.
Are you actually learning anything, though? What language are you trying to learn?
I'm doing Spanish. I have high school, only present tense level Spanish, so I'm hoping at least it helps me remember, I don't know, vocab. Jury's out whether it's actually helping me or not.
All right. Maybe I'll give it a shot. My wife is from Spain, and, you know, we've been together for like 13 years.
I feel like it's embarrassing that you go to Duolingo to learn Spanish and not your own wife.
I mean, she thinks it's embarrassing that I don't speak Spanish.
I got it, okay.
It's true. The Pentagon is open to more talks with Anthropic ahead of today's deadline to ease restrictions. Bloomberg spoke with Emil Michael, U.S. Undersecretary of Defense for Research and Engineering, about the negotiations.
I offered more talks. So long as they're in good faith, we're always open to talks, and we set a deadline, and we met the deadline, and up until that deadline, I'm open to more talks, and I told them so.
Joining us now is Bloomberg Intelligence Global Head of Tech Research, Mandeep Singh. And Mandeep, you know, I read the Anthropic statement yesterday, and it seems like the two things Anthropic isn't willing to do is let the government use AI to do surveillance on its own people, on us, and let the government use AI to, like, autonomously control weaponry. Surely the government doesn't want to do either one of those things, right? That would be insane.
I would agree with that. And look, I think with Anthropic, because they've been so focused on guardrails from the get-go, you know, for the CEO, this is probably one of his big things that he has highlighted as a differentiator. And he doesn't want to completely, you know, give up on that guardrails aspect, even though, you know, the entity here that is looking to use that is the U.S. government, and their point is around national security. So from that perspective, I mean, again, I go back in time, you know, what the other software companies have done. And, you know, you always have to have the government on your side, and especially when it comes to national security. So it's going to be hard for someone like Anthropic to maintain their stand, at least as is they have right now.
I mean, Have you seen Terminator? We've all seen Terminator, right?
Yeah.
That's the whole premise, that AI controls weaponry, and is it not? Am I?
No, it is. It is. But also, Mandeep, doesn't Anthropic, okay, two thoughts on this. One, doesn't this sort of cement how great of a foundational model Anthropic is if the Pentagon has to keep being like, okay, we're open to talks, we'll work with you. It seems like they need Anthropic. And number two, given the doomsday scenario Matt is laying out, don't you think this would be bad for their image if they caved to the Pentagon?
Not really. I mean, you have to think in terms of geopolitical context and, the competition that I guess we have with China. And then again, the national security aspect of it is huge. So, Anthropic is in a dominant position. Like you said, they are among the 3 leading foundational model players right now. And the government is keen to use their product for intelligence. So, at this point, you have to think about who your end user is. If it was any enterprise use case, I totally understand. But if it's the government and they're talking about it from a defense standpoint, again, it's hard to argue, why you would not relent in that case. And I mean, clearly, Dario has his points around that. And I'm guessing this will have some sort of a negotiation phase, and obviously they will probably, come to some sort of agreement.
Yeah, I thought it was encouraging that Emil Michael said we're open to continue talks.
Yes, and again, maybe that just shows how dominant Anthropic is. Mandeep, thank you so much. Mandeep Singh of Bloomberg Intelligence. Coming up, how ETFs can provide an escape hatch for the stress in private credit. By the way, the latest headline, MFS creditors alleging that there was £930 million in a shortfall from double pledges. The fraud saga continues. That's next. This is Bloomberg Open Interest.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
This is Bloomberg Open Interest. I'm Matt Miller. Happy Friday. Or not, if you're long stocks right now. The S&P 500 is down 0.9%. The NASDAQ down 0.75%. So some big drops here across the board. Wow, the small cap's off 2% as PPI comes in hotter than expected. Also, NVIDIA is down right now, so 2.5% drop in that big behemoth doesn't help at all. Block which is not a big behemoth, is up a lot, 14, almost 15% right now after Jack Dorsey said he's going to fire half the staff, replace them with AI, and that means they're going to make more money this year. It's what shareholders like to hear. Netflix right now up almost 10%, so gaining a tenth after they said, you know what, we're out. We don't need Warner Brothers Discovery. We'll just take a $2.8 billion breakup fee and go our merry way. Paramount is up because they are going to get it. Looks like Warner Brothers Discovery, so gain of 4% there. And then, the private credit story that Danny has been covering so well continues to see fallout with a lot of marks disappointing the market. Apollo right now down 7%. Blue Owl down another 5%, Danny.
And just adding to the stress this morning, the latest breaking news that MFS, that fund, or rather the creditor that was in the UK that seems to be another cockroach, apparently 930 million pounds, or about $1.2 billion worth of double pledges, so concerns about fraud. Now, this is not a fraud story at all. It's very different, but Blue Owl, as you were pointing out, Matt, continues to fall. Its move to restrict withdrawals exposes enduring tension between liquidity expectations and illiquid assets. Investors lost control of redemption timing, but the ETF wrapper offers an escape hatch, according to Bloomberg Intelligence. Joining us now is James Seyfert of Bloomberg Intelligence. So, James, there's been this real big anxiety around BDCs and the liquidity profile of them. What do you and the team mean by the ETFs offering an escape hatch?
Yeah, so there's a huge push right now to put private assets into an ETF wrapper. There's people trying to do it with private equity. There's a huge push to do it with private credit, which is very relevant to what you're just talking about with Blue Owl. And you're probably going to think that I'm going to sit here and say it should just all be in an ETF wrapper, but that's really not the case. What we're saying is there's trade-offs to however you do this. If you're going to do it in an interval fund, like that Blue Owl fund you were just talking about, you're going to be locked up potentially for much longer than you might want to be. But that's kind of what you're doing when you're investing in a liquid asset. If you're buying a private credit fund or a private equity fund, you name it, like in some cases, you're locked up for 10 years no matter what. These assets are illiquid. But there are examples of ETFs that go completely illiquid and you can still trade them. The question is, would you rather be able to get out at a potentially massive haircut, a huge discount, or would you rather be forced to be stuck in there? So these are all trade-offs that you make, but the ETF does have a lot of benefits, and there's a few examples we've looked at in history that show us those benefits.
James, unfortunately, we're running up against the clock, but I'm looking forward to more coverage of this on ETF IQ Monday. James Seyfert there of Bloomberg Intelligence makes up like our ETF triumvirate on the BI side, right? We got Eric Balchunas, Athanasios Serafigas, and James covering it there. And then, of course, on Bloomberg TV, ETF IQ, you've got Balchunas joining Katie Greifeld and Scarlet Fu. That is a must-watch hour of television now, a full hour of television.
Yes.
Every Monday if you're into ETFs, as pretty much everyone is. It's like the most important wrapper in the investment world.
It's a great show, and we have another hour coming up for you here on Open Interest. The CEO of Monroe Capital is going to talk about private credit fears. We're also going to talk with the head of Algorithm. Remember that little karaoke company that pivoted to AI and sent an entire trucking sector plunging? We'll also speak with Gary Atkinson, the CEO of Algorithm. All that in your hour 2 of Open Interest.
Nobu-san, would you say, when you look at your career, that the pivotal moment was actually that meeting with Robert De Niro? It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has lasted through the decade.
You know, I met him 1988 after my first restaurants opened. He asked me to come to open the restaurant in New York. And beginning, I didn't know what he did there.
You didn't know he was an actor?
No, I don't know what he doing because I never watched the movies. You know, I was traveling the business. But of course, after people, hey, Nobu, so you must know him, and then I understand.
How is he as a partner?
He's for me, and a great partner. He understands to my concept. He support me 100%. But he's a very smart people. Sometimes so strange idea, but it's good idea. So, example, Nobu Hotels idea come from him. He say, hey Nobu, so we have a lot of new restaurants coming in somebody's hotel. For him, doesn't make any sense. Then we start the Nobu Hotel in Las Vegas 11 years ago. Now it's a big success. So next step is the residence.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
CBS News on the Hour, sponsored by JTV.com.
I'm Deborah Rodriguez. Scouting America has just announced it's altering its policies to maintain funding from the U.S. military. One of them focuses on transgender hopefuls.
Defense Secretary Pete Hegseth says the Boy Scouts had lost their way and become woke.
Diversity, equity, and inclusion, DEI, crept in. The name was changed to Scouting America. Girls were accepted.
Now the organization has agreed to drop DEI and alter its membership policy.
Membership will be based solely on biological sex at birth and not gender identity.
Hegseth says he will review the changes in 6 months and decide if the military should continue to support Scouting America. Michael Wallace, CBS News.
Former President Bill Clinton will face tough, perhaps embarrassing questions when his congressional deposition begins next hour in New York on his ties to a convicted sex offender. CBS's Katrina Kaufman.
He does appear in the Epstein files. There was an image of him in a hot tub with an unidentified woman. You see him swimming in a pool with Ghislaine Maxwell.
Mr. Clinton will become the first former president in more than 50 years to testify before Congress. His wife, former Secretary of State Hillary Clinton, was deposed for 6 hours yesterday. With the largest aircraft carrier in the world, the USS Gerald R. Ford, set to arrive off the coast of northern Israel, and both the U.S. and Iran prepping for the possibility of war, some Americans have been given the green light to leave the Middle East. CBS's Charlie Daggett is in Tel Aviv.
Today, the U.S. Embassy here in Israel issued a security alert and a new advisory authorizing the departure of, quote, non-emergency U.S. government personnel and family members to leave the country due to safety risks.
AI is robbing humans of more jobs. CBS's Jim Crisula.
Block, the company founded by Jack Dorsey that includes Square and Cash App, plans to lay off more than 4,000 workers, 40% of its workforce. Dorsey, who co-founded Twitter, alluded to artificial intelligence tools as the reason for the cuts. He wrote in a letter to shareholders that AI tools have radically changed how to run a company.
Now to the sex lives of our ancient ancestors. A new study in the journal Science finds Neanderthal men and Homo sapien women were getting cozy back in the day. As for who was pursuing who, study author Alexander Platt at UPenn.
There's been a preference for male Neanderthals and female modern humans as opposed to the other way around.
His team determined most of us alive today carry a little bit of that Neanderthal DNA. The Dow's down 800 points. This is CBS. Pokemon is turning 30.
In 1996, we were introduced to the world of pocket monsters like Pikachu and Charizard.
Hello, fellow trainers.
What began as 2 simple Game Boy cartridges sparked a global craze. Since then, the franchise has sold more than 350 million video games and 30 billion trading cards worldwide. 3 decades later, Pokemon still has fans everywhere trying to catch 'em all. Stacey Lynn, CBS News.
First reviews are in on Bruno Mars' first new album in 10 years.
Hold your hand and call you mine.
USA Today calls the romantic efficient, impeccably produced, lyrically slight, but brimming with the musician's innate ability with melody. Mars kicks off a world tour in April in Las Vegas. Deborah Rodriguez, CBS.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Good Friday morning from the Bloomberg Interactive Broker Studio in New York City. We are streaming live on YouTube as well. We're also streaming now on Bloomberg.com/video, and that's where you'll find us there. Isabel Lee sitting in for Scarlett Fu here today. A lot coming up. Markets are selling off pretty hard here today. Coming up, we're going to check in with Geetha Ranganathan. Netflix pulling out of the deal for Warner Brothers Discovery. So we'll check in with Geetha. She's the media analyst at BI. Good news, I think, for Netflix shareholders. That stock was trading higher earlier. Caroline Hyde, she is the co-host of B-Tech. Get the latest on what's happening in the world of technology. Apparently, Anthropic rejects latest Pentagon offer, escalating AI feud. We'll see what's going on there. Nadia Lavelle, senior U.S. equity strategist at Global Wealth Management at UBS. We'll get her thoughts on these markets. Woo Jin Ho, senior technology analyst for Bloomberg Intelligence. We're going to talk about Dell Technologies. They're going to report some results here and see what's happening in the world of PCs and in AI as well. So a lot coming up here in a market that is selling off here today pretty substantially here. We're going to go to John Tucker and get a Bloomberg Business Flash. John.
All right, guys, and this flash brought to you by IBKR. In 2025, IBKR retail clients averaged a 19.2% return, beating the S&P 500 17.9%. The broker you choose matters. Visit ibkr.com/2025. Well, the S&P 500 right now posed for the worst month since March. So what are we worried about in this sell-off today? I mean, take your pick. There are new worries over an AI bubble, a new credit blow-up, that's Market Financial Solutions collapsing in London, and then U.S. producer prices rising more than expected. Elsewhere, OpenAI has raised $110 billion in a deal that values the startup at $730 billion. Right now, consumer staples, the best performing major industry group in the S&P 500, information technology and financials, they are the worst performers right now. Meantime, we talked to Chris Barone, chief market strategist at Strategas Research Partners. He says markets are in a trend right now that will define the years to come.
I think this is the transition, and our call has been the transition from kind of the speculative corner of the market to the real economy or the old economy. I think that's well underway, it's ongoing, and I would expect it to continue moving forward.
All right, now the S&P 500, 45 points lower, 68.63 on the index, down about 0.7%. The NASDAQ 100, 113 points lower, that's down 0.5%. And the Dow Jones Industrial Average, 658 points lower, that is down 1.3%. Well, you know, Elon Musk is already the richest dude on Earth, but a successful SpaceX IPO could make him the world's first trillionaire with a T. Let's try to conceptualize that, everybody. That's as many dollars as there have been minutes since the dawn of the Ice Age.
Oh, wow.
So,
what is next after trillionaire?
Gazillion? I don't know.
Gajillionaire.
We check the markets. You can't go. You're going to go higher than that? We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Isabel and Paul.
Very good. John Tucker, thank you so much. We appreciate that. Isabel Lee sitting in for Scarlett Fu. I'm Paul Sweeney live here in our Bloomberg Interactive Broker Studio. Streaming the video thing live on YouTube and on Bloomberg.com here. Let's take a look at some of the stocks on the move today. We do that with Bloomberg's Tatiana Dari. Tatiana, what are you looking at?
We'll start with CoreWeave, a notable mover to the downside today, falling as much as 19% at the open, the lowest only since August of last year, but still a big move there. The AI infrastructure company reported a bigger than expected loss while boosting its capital expenditures. So that's reviving some of those capex concern in the market. Sales rose to 1.6 billion compared to 1.55 that the analysts were expecting. So at least some relief there, but the market does not want to see this capital expenditures plans rising. And CoreWeave is the latest victim here to the market's worry.
Yeah, definitely. What about Dell? Shares are in the green, jumping.
Yeah, Dell is doing the exact opposite. Performance jumping as much as 18% at the open, the largest increase since March 2024. And it sits on the other side of the AI spectrum today because it is one of CoreWeave's major suppliers and one of the beneficiaries for the hunt for servers. The company said it will generate about 50 billion in server revenue in the current fiscal quarter. And the CEO said it has a record backlog of $43 billion as major AI providers are seeking its servers to run their AI workloads. The company also announced a $10 billion increase in share buybacks. So the market is pleased that it is seeing some of those capitals return to the market. So the picks and shuffle trade is still out there, much alive, or parts of it is, despite what we've seen with NVIDIA this week.
Netflix.
And Netflix, Paul, this is one for you. Shares are rising after the company was outbid by Paramount Skydance in its bid to acquire Warner Brothers. The company last night said they are declining to raise their $82.7 billion offer for Warner Brothers Studios and streaming business. And investors seem to be happy that they're finally walking away from this deal, which they feared would saddle the company with debt and financial risks. It also marks an end to the contentious fight both in Hollywood and in Washington, and Netflix shares have declined 15% since their offer in December through yesterday's closed. That is poised to strengthen now that the shares are finally rallying.
Stock up 8%, a smart move to walk away, I think, at least just in my opinion. And we'll talk to an expert in just a second. Tatiana, thank you so much for joining us. Tatiana Derrier, strategist for Markets Live. For more conversations like this, subscribe to our Stock Movers Report. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Let's dig into deeper this little deal there in the media space. Warner Brothers Discovery, again, the news being Netflix walking away. So now Paramount Skydance, it's their deal. Good for them. And let's check in with Geetha Ranganathan. She covers all the media stocks for Bloomberg Intelligence. Geetha, we got Netflix stock trading higher. I guess the shareholders like them kind of passing on this deal.
Yeah, big relief rally, Paul. I mean, this was always kind of muddying the narrative. I mean, we've spoken about this multiple times. Netflix is such a clean, organic growth story, and them just pursuing Warner Brothers Discovery, I mean, just kind of added so much of uncertainty. You have the regulatory risks, of course, integration, execution risks. Plus, we were talking about something like, their debt levels going up to beyond $100 billion. And yes, they do have the financial firepower, but at the end of the day, they have always been builders versus buyers. And once again, they showed, that they deserved, they've always gained this reputation of being very, very disciplined spenders when it comes to M&A. And I think they once again exercised that discipline, and investors are cheering.
So it seems that this is a smart move, according to analysts, including you. This signal that the company is confident in its organic growth versus M&A, especially in a very crowded streaming market.
Yeah, Isabel, I mean, that had, been the question. I think that's what spooked investors so much when they actually went ahead with this $83 billion deal for Warner about whether they were actually seeing a slowdown internally, and them not just abandoning the deal, but also going ahead and resuming buybacks. Once again, just kind of signals confidence in their underlying growth model. So I think, we know very well that their operating metrics are really strong. I mean, this is a company that has guided to double-digit revenue growth. We're going to see about 12 to 14% revenue gains this year. We're looking at operating margin expansion of almost 1,000 basis points. It's gone up 10% over the past 2 years. So, and of course, we also have fabulous, free cash flow generation. So all of their, financial levers and all of their growth drivers very much in place. And, not having this distraction anymore just helps them kind of really double down on their organic growth story.
On the other side of the equation, Geetha, be careful what you wish for. So Paramount, they've got this great asset in Warner Brothers Discovery. What's the street think about this management team at Paramount? It's pretty much unknown, untested. This Mr. Ellison from the media community. Is there any report card to date? Does the market think that this is a management team that can make this acquisition work?
They probably can, Paul. I mean, they do have, financial, they do have some financial firepower here. Although I would point out that leverage at this company is going to be extraordinarily high. We're looking at pro forma leverage of around almost 7 times. Those are, dangerously high levels. Yeah, and it's something that they're going to have to contend with. But at the same time, they've spoken to synergies. We're looking at about $6 billion in synergies that they've committed to. And remember, this is a team with a fairly tech-heavy bent. So that might be something that kind of really serves them well as they poise themselves for this new streaming future. You do have now, they kind of are turbocharging their content offering, they're turbocharging their streaming business, and they have all of the pieces in place to make this a really good business. We'll have to wait and see how they execute. But you're right. I mean, the management team is a little bit of an unknown, although we do have Jeff Shell, who has experience from NBC. But again, it's going to be a little bit of a wait and watch.
And Netflix also said they plan to invest $20 billion this year in films and shows. Is that enough to keep them ahead, again, in this really competitive streaming wars?
Yeah, the $20 billion that they committed was actually a pretty significant step up, Isabel, from prior years. I mean, we've seen them increasing content costs by roughly about 6 to 7%. This year was going to be a much more significant jump to about 10%. And this is just basically Netflix saying that they are willing to diversify into different forms of content. I mean, the big investments that they're making are in live, in sports, in international content, just to kind of keep up that engagement metric and make sure that, they keep building on that competitive moat that they already have. And now, the icing on the cake for them with this Warner deal is that they're getting $2.8 billion in termination fees. So, hey, much more K-dramas, I guess.
Exactly. Geetha, thank you so much. Appreciate that. Geetha Ranganathan, media analyst for Bloomberg Intelligence. But when you talk synergies in Hollywood, I'd be very nervous. This means jobs. If I'm a lighting director sitting on the Warner Brothers lot, I look across the street at the Paramount lot, there's somebody doing my exact same job there.
That is true, but at least that's something AI still can take. I mean, with news earlier this morning, Jack Dorsey's blog cutting its staff, that was scary. And I always fear about, this is why I keep baking, because no one could still bake. And I was just telling John that I'm also into flower arrangements.
Oh, okay. So
I mean, I like baking too, to eat it. So far, I have not seen any of the products of Isabel's.
Yes, that's a good point, John. I mean, that's a good point. We'll still have to see if we can work on that a little bit here. The sell-off continues here. We got the Dow off 690 points, 1.4%. That's leading the way on a percentage basis. The S&P is off 50 points, 0.75% decline. The NASDAQ is down 205 points, so about 0.9%. So lower, but off of the intraday lows. And we'll also call out the 10-year Treasury. We're now below 4%. It's been a long time since we've been below 4%, 3.97% on that. Gold higher, $4,230 per ounce. This is Bloomberg Good Morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Kind of a toxic brew of worry out there. You have shares of big banks. Let's start there. And also the asset managers. They are tumbling. So you have the concern about artificial intelligence disrupting them. And then credit concerns are raging on. There's another cockroach with London's MFS. And you have shares of, let's pick on Apollo Global Management right now. They are down close to 7%, ticker symbol APO, Apollo Management. Netflix, they won by losing. You're geeked to talk about it. Shares of the streaming giant right now, they are up over 8% after dropping the bid to buy Warner Brothers Discovery. So it's considered a relief for investors. They were worried Netflix would overpay. And don't forget, they're still going to get a $2.8 billion breakup fee. Best performing stock in the S&P 500 right now, Dell Technologies. They are up, almost 18%. The company delivering an outlook for sales of its artificial intelligence servers that exceeded estimates. S&P 500 down 50 points, 68.58 on the index. The Dow down 680 points. The NASDAQ 119 points lower. You have the rise of robots pitting Hyundai's Atlas against Tesla's Optimus. While the world's attention has been focused on Elon Musk's promise offering, Hyundai is actually emerging as the leader in the industry. They stole the show recently with the Atlas humanoid robot at the CES in Las Vegas. Do all sorts of things. We check the markets for you all day long. Right here on Bloomberg Radio, I'm John Tucker. That's your Bloomberg Business Flash. Isabella Paul.
All right, John Tucker, thank you so much. We appreciate that. As always, we've got Isabel Lee sitting in for Scarlett. Phil and Paul Sweeney. We're live here in our Bloomberg Interactive Broker studio. We're streaming live on YouTube as well. Let's get to these markets here. We can do that with Nadia Lavelle, Senior U.S. Equity Strategist, the Global Wealth Management business at UBS. Nadia, what's the type of conversation you're having with your clients these days as we see kind of the volatility pick up here in 2026?
I love that question because what we have really been focusing with our clients is the importance of diversification and rebalancing and really managing concentrated stock position. And the reason being is that a lot of clients have benefited from exposure to a handful of names, particularly in the U.S. over the last few years, and they've done exceptionally well. But the environment is changing, and so we've also been encouraging clients to really look at some cyclical opportunities in the market. The AI disruption headlines has been sort of playing whack-a-mole in the markets, but it's really clouding the headlines around like the positive environment that we're in from an economic standpoint. We really think that this is an economy that's going to grow 3% in the first half of the year, and that should be very supportive to some of the more cyclical areas of the market as well. And so overall, I would say, Paul, that we remain constructive on markets, but it's about really right-sizing some of those positions that might have gotten out of whack over the last few years.
And you recently downgraded tech and communication services to neutral. Is it about valuations, AI capex running a little too hot, or just rising competition in the space?
Isabel, great questions. I think that the downgrade to neutral after years of being quite bullish on the space. I think, look at Nvidia and how it behaved this week. I think that's really reflective of the struggle in the sector. Nvidia had exceptional earnings, beat and raise, but it did not resolve the issues that the market is having around AI. It's no longer about whether AI spending is strong enough. It's really about how disruptive and capital intensive AI is becoming. Nvidia is capturing a lot of the cash flows, but the hyperscalers that are deploying that AI is seeing cash flows come under pressure, particularly at the massive capex that's expected to be spent this year, $650 billion from the five largest hyperscalers in the space, and that's nearly 100% of their operating cash flows. And so within the space, we want to become more selective. We're really focusing on those areas within tech, so it's not negative on tech, it's just being more targeted. Focusing on those areas that have, supply chains bottlenecks. Think about memory, foundry, as well as packaging. And then within software, we're really focused on more of those structural software. So those that are embedded in enterprise and really at the plummet, and it's really hard to displace rather than application software. So it's not an overall negative view on it, on tech. Again, it goes back to the rise, size, and position message that we have out to clients.
Nadia, how about in the bond market? What's that discussion with your clients like these days? I mean, some nice coupons out there. I'm not sure we're going to get much, principal gain pick up here, but certainly the coupons look pretty strong.
Yeah, we continue to emphasize that message of staying up in quality within the bond market. We think that, yes, you can clip your coupon. Don't know how much price appreciation you're going to see at this level, but overall, it's that continuing quality story that you want to really stick to and be very selective in that area as well.
And you expect 2 rate cuts this year. Do you look at that as insurance against a slowdown, or maybe a green light for stocks to push higher?
I wouldn't say it's not an reflection of a slowdown. It's more a reflection of that we think that inflation will start to moderate in the back half of the year. We know that the Fed still remains quite data dependent, but there are quite a bit of inflation hawks on the Federal Reserve. And so once inflation starts to moderate in the back half, we think that it will give the Fed the license to start to cut, and looking for that 2 rate cut in the back half of the year. Overall, the Fed bias remains dovish, even if that cut is delayed. And so we'll watch payrolls next week to see how strong those numbers are. Obviously, the January payrolls numbers were quite strong. The tick down in the unemployment rate to the 4.6%, and initial jobless claims yesterday remain well behaved. And so if the Fed is to cut near term, it will be a signal that there's some weakness in the labor market, but we think that those cuts comes in the back half of the year and more driven by lower inflation.
Nadia, thanks so much for joining us. Really appreciate it. Nadia Levelle. She is Senior U.S. Equity Strategist, Global Wealth Management at UBS in New York. All right, more just monster numbers being thrown about in this AI game. OpenAI to raise $110 billion in new investment at a $730 million pre-money valuation. Extraordinary amounts of money being raised. All the big names are involved here. I need a little help. We all need a little help here. Caroline Hyde, BTech co-anchor, joins us here in our Bloomberg Interactive Broker studio. The hits keep coming, Caroline. I mean, the investments keep coming, and from big names we all know. What do you make of it?
It makes for an interesting relationship of OpenAI and Microsoft going forward, because this is Amazon coming in, which already has a very strong relationship with Anthropic, remember? And we've seen a lot of crossover of big strategic investors and venture capitalists in putting money into both key frontier labs. What's interesting in this agreement is not only the whopping scale of money, 50 billion is going to be coming from Amazon. Now, we don't quite know if that is pure cash or actually whether it's more in cloud costs that just get sucked up by Amazon instead, or indeed whether it's GPUs and chips. But we also think that 30 billion is coming from NVIDIA, so the deepening tie continues there, and clearly therefore some GPUs from NVIDIA are going to be intertwined in OpenAI's compute needs, as well as Amazon's own Trainium chips and the likes. But we're also seeing, well, as well as Masayoshi Son being a big player in all of this, Microsoft being less of a player. And remember, OpenAI first got its big chunk of change from Microsoft. Microsoft was the key backer of the company, had exclusive rights to a lot of OpenAI's technology within the Azure platform. Well, now the frontier offering coming from OpenAI, that's basically the new offering to help build agents, which is all anyone can talk about at the moment. That's going to be exclusive on AWS.
Oh, wow.
So all of this is just an interesting rearrangement of technology partners and just how people are deepening their ties.
I like your word rearrangement, because we have OpenAI CEO Sam Altman saying that he doesn't think his company's fundraising is looking, quote, circular, as long as revenue keeps going. And I feel like this is a conversation we've been having. It's like the self-funding loop, and is it risky? But he's saying it's not circular.
Well, NVIDIA's had to try and prove this point time and time again. NVIDIA has been putting money into neoclouds like CoreWeave, which had its numbers today, putting money into the likes of an Anthropic and an OpenAI, which ultimately all want chips from NVIDIA. But many would say, look, it's not just circular financing, is actually strategic financing, because how better to understand how your technology works best is if you partner this closely and you can understand the way in which your GPUs, your CPUs will be used in the future. So for the cynics among us, yes, it looks like the same big players are all moving money from one place to the other within each other. But for perhaps the more practical, it's like, well, who else has the cash pile to be able to continue to build the flywheel effect of generative AI here at the moment. And OpenAI has an enormous amount of compute needs. That's what they keep saying time and time again. Sarah Fryer is the CFO, Sam Altman is the CEO, saying the thing that's holding back our revenue, and remember they guided us to a new kind of revenue stratosphere of 280 billion by next year. The way they get there is by compute increasing, not anything else. They've got all the parts they need to build revenue from the 12 billion that they made in 2025. But what they really need is the galvanization of infrastructure, and that comes from power and that comes from compute.
I mean, OpenAI says ChatGPT has more than 900 million weekly active users, more than 50 million consumer subscribers, and more than 9 million paying business users that rely upon ChatGPT. That's deployment. Are they the biggest yet? I'm not even sure how we define the market, but are they the biggest in
consumer, for sure? Yes. Like in terms of like the size and scale of people using. The problem is of course Google. How are you measuring Google? Many would say like, is it the person my mum who goes onto Google search and gets an AI overview, or is it someone who downloads the Gemini app and uses it in a distinct kind of model? So there's two ways in which you can compare and contrast, but certainly OpenAI has beaten out Anthropic from how many people are using their standalone application. 900 million is a huge amount, but from an enterprise perspective, many would say Anthropic has led the charge there, and that's why OpenAI has really been doubling down on this agentic focus, and AWS is going to be core to that, putting it within Bedrock.
There's also a headline from Anthropic. They're refusing the Pentagon's latest contract terms. They want to limit surveillance and autonomous weapons. Are those reasonable asks for a company supplying AI to the military?
The military would say no. The military would say Lockheed Martin has no power over us to dictate how we use the weapons. We just purchase them and use. And there are laws that we have to abide by, and there's humanitarian things that we sign up for, and the way in which we police war worldwide. However, from Anthropic's perspective, and if you'd been keeping up with what Dario Amodei, the CEO, has been writing of late, he put out a big piece, thought leadership piece in January, talking about the adolescence of technology and his worries and concerns about geopolitics, the use of generative AI for surveillance, the use of generative AI in biotech and warfare. So no wonder he's still thinking along these lines. He's given us all the breadcrumbs to know that this is how he feels. They just earlier in the week, remember, sort of put out this odd statement saying they're stepping back from some of their safety as a core mission purpose. But within that statement, they really made clear it's because the government doesn't care. The government has not been increasing their focus on AI ethics in the way that they thought they would from a safety perspective.
And it's a $200 million contract.
AI ethics, that's very interesting. You have to, I've heard a lot about that more so recently. Caroline Hyde, B-Tech co-anchor for Bloomberg News, joining us live here in our Bloomberg Interactive Broker Studio. She and Ed Lullo, they cover the tech space like nobody else, stay on top of what these folks are doing. All right, catch our new show, Bloomberg This Weekend. David Gura, Christina Ruffini, and Lisa Mateo bring you unique conversations and in-depth interviews on news, politics, lifestyle, and culture. Watch and listen on Bloomberg TV, Bloomberg Radio, and the Bloomberg Business app, Saturdays and Sundays, starting at 7 a.m. Eastern. So from 7 to 10, 3 hours live programming, first time on Bloomberg Television. I think ever, John Tucker, you've been here since the beginning. Live programming on Bloomberg Television. None of the TV networks do that, I don't think.
Oh, well, you know.
There you go.
I actually sat in as the fake guest.
Oh, you did?
To get the
rehearsals?
To set up for the rehearsals.
You're like every man on the street.
I thought I was the best fake guest.
I'm sure you were.
John is every man on the street. That's why they.
That's it. That must be it.
That's how they do it. Sell-off continues here. We're at the S&P off about 0.7%. More coming up in just a moment. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Concerns about artificial intelligence bubble resurfacing today with OpenAI raising $110 billion. We also had elevated inflation data earlier today with the producer price index, and then worries over possible military action against Iran and new credit cockroach worries. Financials as a result.